righty. Are we live? Wait for it. Wait for it. Live. Oh, there it is. Good morning, ladies and gentlemen. I hope you're having a wonderful day. If you're watching this and it does not say live at the bottom of the screen, unfortunately, you're watching the recap. The good news is we are live Monday through Friday, 30 minutes before open. Drop your thumbs up on the video. Make sure you're subscribed. You're on mobile. Press hard chat. X out the chat. Hit the thumbs up button. Second link for the nightly watch list and main channel. First link for the Scream Alerts boot camp and real estate course. But, ladies and gentlemen, we have a very, very exciting day. We have the Fomc that is coming out at 2 p.m. Eastern time, and then 2:30 you will be hearing from Jerome Powell. But this is a very big event. Potentially, we will see the first pause after 10 consecutive rate hikes. Again, there's going to be one more today, so it's all about the signaling moving forward. It's leading us into the middle of the year, almost summer, but overall, that's what all eyes are on. We had a couple of earnings. AMD did not do that good. People were worried about a couple of factors and where they're going, even though second half demand looks decent. Regional banks, they did have a little bit of a pain here this morning. They kind of rebounded, but some of them were down there a little bit more. And then there was like one more thing, bonds. ADP. ADP came out, so even though we have the jobs report on Friday, even though some of the data has been looking very contractionary, again, yesterday's job openings, they dropped by a big amount. Well, today's ADP, it's not the non-farm, that came in as a very, very strong beat. So it's going to be interesting. Thankfully, though, this morning, you don't have too many headlines. Everybody is waiting for Powell. Then we have a little bit more earnings. And then before you know it, man, it's CPI. And we're going to find out what's happening with the banks, the economy, the recession. How does Powell think is the rate hikes and the credit tightening and all of it? And good morning, baby. What's going on, Chatadonia? Are you ready? Oh, happy Powell Day. What's up, Lucky Soldier? Good morning, Yee. Good morning, Watchlist. Oh, the Indiana King, the Indian King, Alaskan Assassin. Oh, forever young, built by Bailey's, baby. Good morning. What's up, Lori? She's in the house today. Oh, Matthew. Oh, what's up, baby? Tim Whitman, Open Face, B. Dizzo, Joshua. Oh, my gosh, T. Grider, Mr. Young Calf. Good morning. Billy Benoit, baby. Oh, what's up? What's up, Romeo? What's up, J. Max? What's up, C. Money? Oh, good morning, Sphinxy. Colin, Kirot, Nick. Oh, my goodness, BD Toyota. Oh, good morning. What's up, Tay? Dave Zoom, Data Junkie, Colin, Sit, Suff, Patrick Swayze. Who's there driving, Patrick? When you get a new car, And you know, Paul, baby. Oh, good morning. Happy Powell Day, Sam. Happy Powell Day, Christian. Oh, Rob, are you ready to be blessed by Powell? I don't know if it's a blessing. We're going to see. Oh, good morning. What's up, Chickadee? Oh, Graham is in the house, baby. El Trapado. Oh, my goodness. Look at the Chad. Bright and early. Yeah, man, I got hair in my mouth. What the hell? Oh, way too excited. Well, hold on. Please hold. I got a hairball. It's the Chad Super Bowl. We get this a couple times a year. Okay, so pissing me off now. Oh, what's up, Twitch? What's up, Picchiotti? What's up, Charlie in the tree? Slizzard Season, and Sizzler, Tourmaline. Oh, Angelus, Preforms, Blizzy B, baby. Good morning. Yeah, but I got this long-ass hair. I don't got any hair on top, but the hair in the side. I'm like, man, I got a hairball, bro. I got it. We're good. We're good, baby. But good morning. I hope you're ready for it again. A lot of other random pre-market movers here. It's not related to the macro like Biogen. They're dropping because Eli Lilly just had an Alzheimer's competitor that got approval, I believe. So that's something there too. But Chad, it's all about Powell today. I got a couple more things we could go over ahead of Powell. Hopefully you did not miss the watch list because we pretty much go over what we're expecting here. And I think today is very important. If you didn't watch the watch list, you may be missing out on two very key phrases that we got to be looking for. And then again, right when the statement comes out, the statement today at 2 p.m., it has the potential for a little bit more volatility, even though this is the lowest priced Fed meeting in the last 2 years almost. So again, the expectations for today's Fed meeting, it's only about 1%, 1.5% compared to an average of like 2.5%, man. It's wild. It's wild. But Chatadonia, Let us get into the news, my friend. The Fed will probably hike rates by 25 basis points and then pause. Swaps stopped pricing in a June hike after JOLTS data showed job openings fell more than expected and layoffs jumped in March. Watch for dissent. Jerome Powell is grappling with some splintering on the FOMC about how to fight inflation while also weighing the bank fallout in a possible recession this year. Regional lenders PacWest and Western Alliance steadied after yesterday's rout. Banks are sitting on about $1.5 trillion of unrealized losses with trouble in commercial real estate only adding to the pain. Academic study shows lenders are also facing the risk of deposit flight. That is why a hawkish Fed is needed today, says former Dallas Fed boss Robert Kaplan. Broader futures in European stocks rose before the Fed. Treasuries gained across the curve with two-year yields below 4%. That may be underpricing the risk that the Fed proves more hawkish than expected. Bloomberg's MLive blog said the dollar weakened and Brent oil fell towards 74 a barrel. Gold and Bitcoin were steady. The Treasury kept their sales of longer-term debt steady for the third time while unexpectedly announcing a new program to buy back older securities starting in 2024. Debt managers were widely anticipating the step-up issuance of longer-term securities later in the year. That may happen in August, but for now, the coming round of 3-year, 10-year, and 30-year auctions will total about $96 billion, the same as in February and November. The tempo of issuance and other long-dated notes was also kept steady. Vladimir Putin's residence in the Kremlin was attacked by drones last night. They were disabled and crashed without causing injuries or damage. Putin was unharmed. The Kremlin did not provide any evidence for the attack but blamed Ukraine, which hasn't commented. Shortly before the news was released, Moscow city authorities banned the use of drones in the capital, and that's not updated. Ukraine did respond. They said, "We do not use resources to attack other people." So remember, we had a report on this a couple of days ago, so it's actually kind of weird that there's like a big reaction to this today. I don't know if it's anything new, but we will see what happens. But corporate, Morgan Stanley, they are in talks with U.S. prosecutors and regulators to solve a probe into their block trading practices. Eli Lilly, they gained pre-market after their experimental Alzheimer's drug slowed the progress of the disease in the final stage trial, paving their way for the apply to U.S. approval. UBS is marketing their first public bond since they took over Credit Suisse. The lender opened books on two-part Swiss franc bond deal via their London arm. Germany's DZ Bank plans to issue 1.4 billion euros of AT1 bonds. Credit Suisse's ex-investment banker Chief Christian Messer is joining an advisory and private equity firm run by Byron Trott and Greg Lamaku. Bonds are safer than stocks. Morgan Stanley and UBS said they prefer high-rated debt as the yield gap grows, and economists see a higher probability of a recession. JP Morgan's Tai Hua said that expectations for equities are still too optimistic, but stock traders still see the bright spots. Citi said futures positioning in the past week have hit the highest in the past month, with investors adding 9 billion new S&P longs on earnings beats. Oh, that's a little shift from that everybody short phrase we got. Commodities are facing steeper price swings, and the U.S. CDS cast doubt on the growth. Bloomberg Intelligence said shrinking net longs in oils and rising net shorts in 10-year treasuries also signal fading risk tolerance that may prompt a further rush to cash over raw materials. Macquarie sees prices falling for the rest of the year as China holds back on major stimulus. 9:45, you're going to get April services composite PMIs, 10 a.m. April ISM services, 10:30 EIA U.S. oil inventories, 11:30 $36 billion of 17-week bonds, 2 p.m. for the Fed decision, 2:30 for the press conference, and then 5:30 for Brazil's rate decision. Excuse me. Earnings are going to include MetLife, Corteva, Mosaic, Noble, Etsy, Zillow, Marathon Oil, and HubSpot. The U.S. has added 296,000 jobs in April. ADP figures show that is almost double the consensus and well above the revised 142,000 in the prior reading. Brazilian police searched the home of Jair Bolsonaro today, a source familiar said. They are investigating the insertion of false COVID vaccination data in public health systems. Brazil's central bank is expected to hold the Selic at 13.75 for a consecutive meeting of 6. Even given political pressure to cut, a key question is whether it'll adopt a hawkish tone following inflation's fall into the central bank's tolerance range. Former SVB chief Gregory Becker and former leaders of the Signature Bank will testify at the Senate banking hearing on the failures on May 16th. The UK may loosen IPO rules to counter the dramatic drop in London listings. The FCA, they plan to replace their standard and premium categories to make it easier for firms who have 2 or more classes of shares. Turkish inflation slowed slightly more than expected in April to 44% from 51. They're expecting it to hold at 40% for the rest of the year with elections 2 weeks away. President Erdogan faces the biggest voter threat after a year of economic chaos. Yoon Suk-yeol urged China to reduce nuclear threat posed by North Korea. The South Korean president called on China, at the very least, to comply with UN Security Council sanctions against North Korea. Malaysia's central bank unexpectedly hiked rates to 3% from 2.75 to ward off inflation pressures. Thai CPI slowed in April to 2.7 in line with consensus. In New Zealand, jobless rate held at 3.4. Hong Kong will announce a revised 2023 GDP forecast in mid-May. Pakistan political rivals agreed to hold provincial and national elections simultaneously, but could not decide on a date. Imran Khan's opposition wants to snap elections, but the ruling coalition prefers to complete the government's term, which would mean elections in October. Australia's Finance Department Chief Jenny Wilkinson is the frontrunner to be the next RBA governor. Oil prices may overshoot to the downside with short sellers back in control, Saxo Bank said, while noting that the Fed's expected hike is waiting on demand outlook. Gold was steady ahead of the decision, while base metals were mixed. Wheat held near a 2-year low as officials from the Black Sea region agreed to negotiate the continuation of the Ukraine deal. Iran seized another oil tanker in the Middle East, ratcheting up tensions for shipping in one of the world's most vital trade corridors. The Navy said a Panama flag ship was taken by Tehran in the Strait of Hormuz, the second incident in a week. Iraq's oil minister said there's still no decision with Turkey yet on resuming flows from the Sihan port. Commodity traders may also face more scrutiny in Europe. A new proposal is currently underway that may put regulation on their activities more on par with oversight of financial firms. Banks led by Barclays are selling $2.75 billion in junk bonds as part of a package to replace private debt backing. Peter Thiel and Richard Lee backed SPAC Bridgetown Holdings is close to a merger with fintech firm Hyphen Group, people familiar said. Electrolux top shareholder investor AB wants guarantees from media that it would commit to buying their stake even if U.S. regulators block the takeover. Earnings in the consumer space, CVS cut their earnings forecast on healthcare acquisition costs. Estee Lauder sank pre-market after slashing profit projections and predicting a bigger sales decline than previously seen. Kraft boosted their full-year EPS forecast, beating estimates, but Yum's earnings missed. Qualcomm and Equinix are due after the bell. Starbucks slid as much as 5% after analysts leave guidance unchanged, disappointing analysts. AMD also dropped after their tepid forecast. AI will be dangerous in the hands of unscrupulous people and will need regulation. Microsoft chief economist Michael Schwartz said it will do a lot of damage in the hands of spammers with elections and so on. And then AI, we already had that. Nike, Adidas, Shine, and Temu were asked by U.S. lawmakers for information on whether or not importing products derived from forced labor in China. There's growing evidence of biodiversity. Airbus April deliveries slip as creaky supply chain slow output. Supreme Court Chevron review caps year-long conservative push. House panel seeks info from Nike, Adidas on China forced labor. Goldman names Troy Broderick COO of Global M&A. Salesforce Tableau appoints new leader after restructuring. Visa Tiger Global back opening bank firm Taraboot's Saudi push. IBM will move to new domain building in 2027. And JP Morgan closes purchase of Aumni, AUMNI. Here it is. Oh, what's this? Crypto. Boop. So attention bankers. A pay boom awaits you in Saudi Arabia. The expansion of Wall Street firms and Saudi government bodies is boosting salaries in the kingdom. Finance professionals in Riyadh can earn roughly 20% more than their counterparts in the West, but hiring is proving to be a challenge. But Lionel Messi may regret his jaunt to Saudi. The footballer was suspended by PSG for taking a trip to the country without the club's authorization. The AP reported the suspension may be for 2 weeks. According to French media, Messi has contacted or has a contract with the kingdom to promote tourism. Damn, that's crazy. How you gonna suspend Messi? Where's Messi, Habibi? Tenants in New York City's rent-stabilized apartments may face steep hikes. A key panel proposed an increase of up to 7% for 2-year leases and 5% in 1-year leases as the cost of operating buildings soar. Shame on you, protesters yelled at the board, calling for a rent rollback. Rising hospitality star Kyle Hotchkiss Carone may know a thing or two about travel as he flies to more than 125,000 miles a year. He shares tips today on how to score cheap business class seats and what to do in Rio. not so golden in the wake of the 2008 financial crisis. Portugal and at least 10 other European countries sought to plug budget deficits with investment for residency plans. But as housing costs rise, golden visa programs are now under scrutiny with buyers rushing in while they can. And then on this day in history, Margaret Thatcher led the Conservative Party to a general election victory in 1979 with a 5.2% swing from the incumbent Labour government, the largest since 1945. She racked up a majority of 44 seats in the first of 4 consecutive election victories for the Tories and became UK and Europe's first elected female head of government. Wow, 1979, Margaret Thatcher. Look at that. Yeah, Margaret Thatcher Day, bro. I'll take it. I'll take it, Chatadonia. Oh, but good morning. I hope you're feeling good. Again, we're just getting started here. We got a decent amount of time. Got a couple of pre-market movers left. Biogen shares dropped 1.3 after clinical data from late-stage trials show that competitor Eli Lilly, their experimental therapy slowed the progress of Alzheimer's. Chegg rose as much as 5.4 as the online educational service company attempts to recoup losses after posting their biggest intraday drop on Tuesday. Estee Lauder tumbles 15% after slashing profit projections for the fiscal year and predicting a bigger sales decline than previously foreseen, citing a more volatile recovery for Asia travel than initially expected. Ford shares slip as much as 0.9 after the automaker kept 2023 guidance unchanged despite reporting a strong beat for the first quarter. Freshworks shares are up 9% after the application software company reported first quarter results that beat expectations and raised full year forecast. Immunogen IMGN rises 97% after releasing top line data from phase 3 confirmatory Mirasol trial of Elahere to treat ovarian cancer. NerdWallet shares are down 8.8 after the consumer finance company reported their first quarter results and gave an outlook that prompted Citi to downgrade them. Sprout Social SPT shares are down 17% after the social media management company gave a second quarter revenue forecast that was below expectations. Starbucks slid as much as 5% after the coffee chain operator left guidance for fiscal year 2023 unchanged. The move disappointed analysts who called it a conservative stance given the strong second quarter and sales beat. Supermicro SMCI shares are up 9.8 after the hardware company and storage company gave a fourth quarter outlook that was above expectations. It also reported third quarter results that were in line with preliminary results released last month. Trade Desk shares are up 1.7 as Vertical upgrades the advertising company to positive from neutral. Uber rises 1% before racing gains pre-market. Following yesterday's surge, Susquehanna is upgrading the ride-hailing company to positive from neutral, with analysts saying that the firm's profitability continues to ride despite an uncertain economic climate. And then Yum China, Yum C rises 3% after the results of the operator reported stronger than expected first quarter comparable sales and restaurant margin. There it is, baby. We'll take it. So, Chatadonia, those are your pre-market movers. I'm sure we're going to have a little bit more. I think we're ahead of schedule. We looking good. We got some time. Happy Powell Day. Welcome to the Super Bowl. We'll be right back here. Follow me on Instagram at The Trading Fraternity. And get ready. You better smile today. You better at least just drink water. Drink a Gatorade or something. It's game time, baby.
Just pause now. If you take a potential or perhaps slow ongoing banking crisis and place that on top of a slowing economy, I have to say I am very concerned at the prospect of future rate increases.
Joining us now is Anne-Marie down in Washington, D.C. AMH, was that an audition for one of the open seats on the Fed board?
Well, not just an audition for one of the open seats, Jonathan, on the Fed board, but certainly what you see here is Democratic lawmakers in the Senate. That individual led the charge to sign this letter, Brendan Boyle, in the House, to this, penned this letter to Jay Powell, asking him to hit pause. There are concerns about what this could mean for a potential recession in the United States, a tightening of credit conditions, and also the fact that we just had a bank failure this week. And their concern is, why would you raise rates at the time when you have a bank failure, the fourth in the United States, at a time when the underlying issue for a lot of these banks is they didn't hedge for higher interest rates. So a lot of pressure is building on the Fed chair today, Jonathan. And this is just one of the potential questions he's going to be asked, right? Because there's a lot of issues right now in Washington that journalists want to hear what the Fed chair has to talk about, not just the failed banks, not just higher interest rates, what's this mean for potentially a recession or the jobs market, but also what does this mean for the debt ceiling?
Well, precisely. Anne-Marie, a little bit later, No doubt about it. They're talking about Chairman Powell's business. Chairman Powell's going to be asked about their business. Why are we talking about their views on Fed policy and not their views on the debt ceiling?
Well, obviously, there's growing concerns from their constituents, right? First, it was higher inflation. Now there's worries about if people are going to lose their jobs. And also, of course, regional banks pay a huge issue with these individuals. But Powell will probably flip it right back to them this afternoon. It's a great point, because what he is going to say, that it is Congress's job to lift the debt ceiling. It is Congress's job to make sure Treasury is going to have sufficient funds to pay our past bills. And I imagine he's going to want to keep it there and make sure he's not getting involved in the politics, because the politics right now, Jonathan, are very...
That's their job. Again, debt ceiling. I actually did not even bring that up yet today, but everybody's talking about it. Let's see what the chat has today, baby. And then we'll get into some more plays. Slowly catching the AMD knife. God bless the coal. Lots of buyers on the yen between 8:15 and 10:15 p.m. Not sure what it is, but up 0.45. I'm watching the banks. I don't know what it was with the yen yesterday. I don't think there was any events. I'm watching the banks tomorrow and how they react to FOMC. Also, speaking of banks, I noticed that Cal Coast near my house in Claremont is shut down. I wonder why that is. Etsy is going to beast earnings. Pause. My God, the banking system is sound and stable. No plays. J. Powell and regionals in focus. Yalla, more Fati, baby. Amen. TLT puts. Powell don't care about regionals. He cares about inflation. Ooh, it looks like the Chads like that one. AMD puts earnings continuation, then buying shares, dollar cost averaging on the dip for the long term. Let's go, baby. Tesla 165 expiring on May 5th. XLF 32 puts. RWM, and then what are the prayer? Oh, never mind. Did I just exit it? Damn, bro. Oh, my bad. That's never mind. Oh wait, no, it's right there. Okay, I thought I got rid of it. I said that's cold, bro. That's cold. There it is. Apple long and bye SPY puts. Okay, bye SPY puts. That's how he's gonna end it. That's how he said. Okay, bye SPY puts. Bye SPY puts. Chatadonia. How do you feel? Tell me your first play of the day now. What do you got, baby? Again, happy Powell Day. Remember, 2 p.m. and 2:30. A lot of volatility at 2 p.m. Eastern. What do you got for me? First play of the day, baby. First play of the day. Swing shorts at open. Long on the peach. Costini, God bless. Microsoft calls. Coinbase, CHG. Short and bonds. Watching Labu. Pfizer puts. How about Wall? June Uber puts. Josh, I'm bullish. AMD, Airbnb, CL, ZN. Closing bond plays. Uber puts. Wing short at open. Bye SPY puts. Stocks. The Tesla. Poll history. Watching SPY. Watching Tesla. AMD. Josh, my bullish SPY calls. Feed the kids. Beto short. Vinda long. AMD puts. Pfizer puts. SPY calls. Shop calls. Sideline. UCO. SQQ. TMF. JP Morgan, RKLB going long, sideline, AMD puts, Bitcoin long, Starbucks puts, full port SGD, no short position until we see the blow off the top, selling UVXY calls, long LNG, SPY calls till Powell, Pack W puts, like on the long, or long on the like, Apple calls, Starbucks, Meta calls, Bill, Cake calls, long term, ILY long, God is good, baby, ALB long, again, they have earnings, wait for Powell, long waiting, NVIDIA, GFAI for the bounce, PayPal puts, Pack W, Uber calls, Uber puts, AMD shares, inverse, head and shoulders, SPY puts, PHILO, UVXY long, Starbucks short in the last play. It is SPY 420 call. Yeah. There it is, Chad. Let's go. God bless you. Y'all ready? Y'all ready? Good morning. Happy Wednesday. I got a couple of plays. Going to be watching AMD. I really wanted to trade it after hours yesterday, but I didn't. So I'm glad I didn't, because we're going to see how it plays out. It's pretty much at like where it was at the top end of their last earnings. So watch out for them. Eli Lilly, again, very big news. They've already ran up a ton, and they're already at all-time highs. That's the only risk. But that Eli Lilly Alzheimer's drug, that could have a lot of hype, and a lot of biotech hype has been able to hold up. So I definitely be watching out for that. Qualcomm after the bell. Could be even a link there to Apple, so watch out for that. Even then, same thing with Apple. Again, earnings tomorrow. We could watch for the setup there after Powell. Then Estee Lauder down 16% on those bad earnings. Watch out for them. And then Starbucks, again, we were talking about it yesterday. They had very good earnings, but they went down because everyone was like, well, if you were that good, why didn't you guide up? So then people got disappointed. Then 2-year, 10-year bonds. I'm pretty sure that's going to be our play after Powell. So be on the lookout for that. Be on the lookout for that. But Chatadonia, what do you got, baby? What do you got for me? Any pressing questions? We got about 2 minutes. 2 minutes. 2 minutes, my friend. 2 minutes. Anything. You got a minute now. You got a minute. sell my bond play before ISM. Well, the data has been moving bonds like crazy. I feel you. That wouldn't be too bad to sell before the data. I think I might hold there, but there will be volatility. Otherwise, I will plan to clean everything out before Powell. Impact on Bill. I think Bill is already kind of chilling out here. It might just kind of stay stable until we get across the curve. Again, the issues right now that people are having with the, with the debt ceiling, I mean, it's starting to get up there. The Alzheimer's drug company is Eli Lilly, LLY, a very, very big name. They're not nobody new. They've paid out a dividend for over like 150 years or something. Very big drug company. So they had very positive data, and then now it's even positive enough to where it's threatening Biogen, which has been like the leader of all Alzheimer's data in general. So we'll see. New tickers. Regional banks are moving around. That's about it. That's it. So we'll see. But Chatadonia, it's game time. Welcome to the cult, ladies and gentlemen. Here at the cult, before we do anything, before we try to chase a dollar, before we try to enrich ourselves, we must pay homage to a very special group of people that has sacrificed more than most of us ever have and ever will, and that is the veterans of the United States of America, ladies and gentlemen. So on behalf of the cult, the people here, the people not here, we want to give a huge special shout out all the active servicemen, past servicemen, anybody who has served this country, even the families, because they made their sacrifice too. I hope you know you're appreciated. We want to tell you we love you and thank you, and I encourage all of you to show love and appreciation to all of your vets, baby, because shout out to the vets. God bless you all. And anybody else out there helping out their local communities, all the doctors, nurses, teachers, firefighters, police officers, people helping out with the nonprofits, the trashmen, the janitors, helping out the old ladies. If you leaving a positive impact in your community and helping other people, I hope you know you're appreciated as well. And we want to let you know you get a shout out too, baby. God bless you. But ladies and gentlemen, please rise. Place your right hand over your heart. Say it with me. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all, baby. Son of the Jets! Oh, it's game time, baby. Or nah, let's go. Oh, Chatadonia. We did it. We made it. Let's go. Good morning. The Jets have been sent. Oh, good morning. Good morning. Boo-doo-doo-doo-doo-doo-doo. Oh, yeah, you saw the F-22. Let's go, baby. It's game time. Get ready for the Powell 22. That's the jet. That's good. That's crazy, man. Powell. So I hope you guys watch the watch list. Remember, the initial statement today is going to be potentially huge given all of the dissent on what is going to happen. So that should be a little bit of fun. We do got a lot of data still. Again, 10 a.m. I think you got two sets of data. I think 15 minutes after the bell. Yeah, 15 minutes after the bell, you got PMIs. And then 10 a.m., you have ISM. So just keep that in mind, and we could see a lot of reaction. Again, bonds will react on both of those. Even ADP already came out. And then Powell, man, 2 p.m., 2 p.m. and 2:30. And then the irony is, if the statement changes, we know the press conference, we know what will happen. If not, then that's where it's going to get interesting. So get ready. Again, regionals from yesterday. We got about like what? How much time we looking at? You got 1 minute. Wow, 1 minute until the bell. 1 minute till the bell. I hope you're ready. Watching the statement for changes. Yeah, the statement before the meeting, again, and if it doesn't change, then we know, then there you go. But if it does change right away and says, sufficiently restrictive, then that's it. Then we know the pause will be explicitly outlined. So I'm very excited. We're going to see what happens with it. That'll be at 2 p.m. where we have two data sets before we get there, and then a little bit of the post earnings, and then we go from that. So 30 seconds, Chad. Drop that thumbs up on the video. Make sure you are subscribed. And if you got any questions, let us know. You got any plays, any info, we'll verify it. And let's have a good day. Make it a clean fight. 10 seconds, my friend. Ba-da-ba-ba-ba. Where are we going to open at? 4119 is where we're at. Let's see. Round 1. Fight. Alrighty. Dow Jones and S&P are in the green. Consumer discretionary looks to be number 1. I don't know where NASDAQ's at. We'll give that some time. Again, watch the regionals. You could even watch any other chip makers. There's those earnings. And then, like we said, that Eli Lilly Biogen, I would arguably say that's the biggest news of the week. Tesla's on the high. J&J. Eli Lilly, it's only up 2. I just hate how Eli Lilly is up $40 in the last couple of days. Yeah, Tesla's running. Uber was up 1%. Again, they got that upgrade. There you go. They're back up to that. I was like, damn. So 36.85. Again, if they get to 37 APM, that was a reverse split. That was popping yesterday after hours. NVIDIA dropping. Disgusting. J&J. Holy J&J. That's crazy. A holy cancer-providing agent. Up 0.5%. Intel Estee Lauder sinks by record 21% after cutting sales outlook. So EL is still just absolutely demolished. FRC at 39. If there's a reference price, that's great. We're over the 200-day. So SPY's going up. Again, SPY is up 0.15. NASDAQ 0.12 and the Dow 0.13. Very, very small gains for now. Levels-wise, 41.26. So, again, you need to get to like 41.33, then like 41.47. So you should be familiar with those prices. PAC-W crashing, EL 162 PE. Intel is up 3. Maybe the guidance from AMD. Yeah, Uber up 0.7. I forgot, where's Airbnb? Oh, where's Amazon too? I've not even looked at the big tech. So Google 0.5 down. Where's Meta? Meta is barely up. Microsoft barely up as well too. AMD pop. Apple is up almost 1%. Yeah, decent on AMD. Again, this is like a right where it was at the last earnings. So this is kind of a decent midpoint in the last quarter pretty much. Apple 170. Habibi, that's insane, Habibi. That is insane. We got Uber. FRCB. Isn't that the fake First Republic? Yeah, this is First Republic. Wait. Is this First Republic? Is this it? Or is this the fake one? Is this Republic First or First Republic? It says First Republic San Francisco. So that's the OTC. Yo, that's it. No, yeah. So now you could trade. Wow. So that, I mean, I don't know if it's a new ticker. They may not let you get the options, but try to sell your options or shares if you can. That's insane. I'm shocked, actually. Yeah, if that's it, then you try to get your money. Damn, that's crazy, though. 39 cents. They did it immediately. That was 2 days. That's weird. Yeah, see if they transferred your options, because it'll probably be a non-standard option. Beautiful. 5,000. They let you get out. That's beautiful. Amen. So there, I mean, if you could sell out now, that is very surprising. That's not what I was expecting. I thought it would have taken at least 2 weeks, and then I thought they would have clapped you a little bit. You got to exercise the options to collect. Beautiful. Beautiful. And then Tesla on the high, Estee Lauder. What is Uber? Uber, more banks coming down. I've noticed Goldman's kind of coming down. I mean, they're up on the day, but in general, they gave up some of it. KRE's in the green, though, by 1.1. Remember, that thing was down like 5 to 7%. Bonds kind of slipping up a little bit. That 2-year play is up like $800 right now. So, again, some people said they're closing out bonds before data. Could be very, very smart. So, I may lose those gains after any data set, but plan to sell out before Powell. Baba's selling off. They're down. Enphase on the high, so is AMC. Google and Amazon. Google was down a little bit earlier, but your big tech's starting to run now. Dow Jones is negative. SPY is up 0.15, and NASDAQ is the leader here. Starbucks is down because they had, again, the stock is already near all-time highs, but they had very good earnings, but then they didn't raise their guidance, and analysts got disappointed on that. PacWest halted after rising 2.1, erasing opening declines. So pretty much Starbucks did really good, but then they didn't change their yearly guidance. They said we're doing so good and we're going to do so good next quarter that we're not changing our guidance. And then analysts were just like, that's a little too conservative. And then they sold off. And then SPY a little bit lower here. And then bonds are still moving around again. And that's probably going to be the play of the day today, depending on what happens. It's Tesla. Bill, I think we're about to have a couple days. Again, Bill, if we get more volatility, the only month, June, Bill moved up a very, very slow pace. So, again, we're in the same season. But for now, it's still good. Apple's up 1%. What the hell? AMD is not broken out yet from earnings. They're still kind of got a glass ceiling at $85. DRMA, drama. DRMA, Dermata, 28%. Biotech running up. I feel like every other day we've seen one of these biotech runners. Oh, this was the acne drug. I remember we saw this actually the other day. We saw Derma, like literally a couple days ago. KHC. I can't sell my FRC put. Try to exercise it. See if you could exercise it and then just sell the shares. Bonds near the high again. My SPY's is right in the middle too. IEP's down another 9. Geez. So we haven't gone past 41.30 again. 41.33. That's pretty much the level, or you break 41.19 where we closed. So honestly, if we get above 41.33, you have like 10 points, 15 points of upside. But then if we drop 41.19, we have 10 points, 20 points of downside. So we got to see. Again, data comes out in about like 7 minutes or so. MPW, that's good, but MPW, again, the REITs, just anything with bonds right now, they're starting to hit them. McRib is running. Uber to 37, but we just got to get past the highs. Like I said, I think it's like 37 or high 38s. If you get above there, Uber goes straight to 40. If not, just be careful because, again, Uber could literally move 5% in a day. I wouldn't be surprised to watch Uber go up 3% and then close down 3%. I feel like that's just what we see them do. Amazon going. Apple, little cheek-lay. SPY on the low. PAC W on the high. NASDAQ up a third. SPY down up 0.1%. And then Dow down 0.1%. Yeah, Amazon's killing it. 104.50 now. That's killing some of those puts. Where's Airbnb? The puts are holding. Their call prices are holding on Airbnb, but stock is coming down. McRib is MCRB, the biotech. Send stop moving. Microsoft on the high. AMAM on the high. Dish. The high ticker's running, but then again, the low ticker kind of has an equal balance right now. Couple names. Starbucks and Win on the low. Yeah, Starbucks is dying. Netflix starting to come back up here too. Oh, yeah, I forgot about Ford. Ford is kind of a dud in terms of earnings. And then even AMD's coming back up. Green pop here from the bottom. Chad is saying NVIDIA flush. Yeah, 1.8. Even AMD's going with it. Yeah, Icon Enterprises falls 9%, adding to Tuesday's record 20% rout. Darden buying rights to Ruth Chris. You mentioned, oh, really? That's weird. Doesn't Darden own like IHOP and shit? Or no way. Darden is buying Ruth. So IHOP and Ruth Chris are owned by the same people. That's like some weird, like Lamborghini is a Volkswagen. Or if you don't know, your Lamborghini is just the Audi. If you didn't know, the Lamborghini R8 or the Audi R8 is the exact same car as a Lamborghini Huracan for half the price. Same thing with the SQ8 in the Urus. Olive Garden, that's weird. That's weird to me. I don't know. What do you mean, Ruth Chris? How they go? That's Louisiana. That's crazy. Darden was Olive Garden, Red Lobster, and Yard House. Yeah, NVIDIA and chips keep selling. Google is on the high, though. Microsoft just had to hit the high and then red candle. Then, I mean, granted, the SPY just did the same thing. Again, you're looking for 41.33 to the upside. And all right, put on a stream alert with the levels. Just watch again, 41.33 or 41.19, and then again, if you are holding any bond plays, like, you better make up your fucking mind now, because you have 5 minutes till the first set of data, and then at 10 a.m. too. So there's this SPY move. Immunogen, they're up over 100%. They had that day to day. 4128 is the high. Let's see Bookmap. Wingstop Drilling. It's a follow Apple day. Graham's favorite. Could be. Apple's up 1% though. I don't know though. Apple is like actually killing it. But maybe the shape. I'm going to see with the bond. So SPY hitting a high. Bonds coming down. ISM data here in 5 minutes. Or is it PMIs? I think PMIs, excuse me. Bro, the CO move is crazy. I don't know if, dude, it's actually crazy. I think they could have. I think they probably knew China was not really going to go crazy. But, I mean, OPEC knew demand was coming down. That's why they cut supply. But that's it. PMIs in 4, ISM in 14. Yes. SMCI, again, they guided upwards. So there's Uber still right now in the middle. Again, it's playing that little back and forth. Chegg is on the high. Apple's still just holding up. Again, Apple is a solid 1%. NASDAQ is up almost a third. Top over 80 again. NVIDIA's at the low. AMD, no. Or if anything, AMD might have an earnings continuation to the downside. Tesla's on the high. Tesla 162. And regionals are in the green. Regionals are ripping right now. There's no non-farm until Friday. There was ADP employment, and that was bullish if you want to take good as good, but bearish if you don't. So it's ironic because we sold off on bad jobs data yesterday. We sold off, and then the ADP came in as good, which we should have saw a negative reaction, but so far it did lead markets to go up. People like the positive ADP, but ADP and non-farms are completely different. MRSN ripping. There's PAC-W. SPY still holding up here. Again, we're still within the range of the early morning, but haven't gone about it. 2 minutes until data. 41.27. So data right at the levels. That'll probably confirm the upside or downside. And again, right now, global services PMI is expected to be 53.7. Composite is expected to be 53.5. And that's, I think, services, as long as, I mean, a big beat, I don't think will be good. But then too big of a miss will have people panic, because then S&P Global Services will enter into contractionary territory. Because right now it's at 53, or it's expected to come in at 51. No, 53. The levels, yeah, there's nothing really. I mean, the next level is 41.55, and then you have two small levels that I don't have on the chart right now. Yeah, Netflix going up, and Netflix struggling. It has to, until it gets to the high 320s. So remember, 320 was its low of earnings practically, except for that 1 10-minute, or that one candle where it dropped 10%. Suddenly looking super bullish. I mean, take a look at Apple. But, dude, the last 2 days have been a trip. Again, you had a bank failure, and the market loved it. No reaction in bonds. And then the next day, without anything, you then had everything puke it all back up. And then now we're going into Powell, and then tech is up. Some of them are down. You're doing this little earnings reaction. So, if anything, I would just look at the move index and let it speak to you. in the sense that just volatility is increasing heavily across the market. So just be prepared for anything. But, we're getting back to the higher levels again. When we start pulling this chart out, you'll see. Again, this is a very elevated Vaughn volatility, more or less. Ford gearing up. SPY's trying to get it too. Data is out now. 53.6 on services. Estimate was 53.7. And then global composite, 53.4. Estimate was 53.5. First one's a dud. It's 0.1 away. 0.1 away, right above contractionary territory. I think wait for ISM. ISM services will be bigger now. 15 more minutes. That one's nothing. We might move off of it. Bonds are trying to react. Remember, yesterday I thought we were going to get a certain reaction, and the market took the data. If the bonds vomit, the market will react. So just keep that in mind. So I think it's a dud, but if you do get a bond reaction, you might get something here. So Apple's starting to pop. Bonds are starting to move. And I don't know if we're at 41.30 yet. 41.29. So again, 41.30 and then 41.33. But realistically, 41.33, very, very stubborn level over the last couple of weeks. NQ at pre-market high. SMCI. Dude, that thing is insane. Oh, wow. Look at your good guidance. Look what it does for you. Remember, they missed earnings by so much, and then they just guided up. That is crazy. That's a solid, 20% almost. AMD drilling. Amazon's at the high. I think all big tech is doing good. Actually, Microsoft's drilling too now. And then Meta's near the high, just holding 240. Amazon, Google, and Apple in the high. Again, Microsoft coming down. AMD's down 8% now, $82. So let's see. How low are we getting? They're 78 to 72. But that's a big drop. Uber breaking out, I hope. I don't know. Uber still, he hasn't made up his mind yet. Tesla is going up there, but again, it's like Netflix. Netflix and Tesla are both rallying, but then they dropped so much lower the last day or so. This rally they're still at a lower range. I mean, if they come down from here, there's no pretty. McRib. I say Starbucks. Oh, Starbucks is a crazy one, man. Again, they did so good. It was bad that they didn't guide up. I love the market, man. I love it. You know what I'm saying? They literally said, if things are so good, why didn't you guide up? They're like, yeah, we don't like you anymore. I'm still holding the McRib, yeah. I haven't sold any of those biotechs yet. Ascend went up, McRib went down. I think Ionis and the other one just are kind of in the middle or down 2%. JPM, Uber. ADP, I thought it was good, but it just speaks to what we've been seeing. I mean, I'm telling you, it's like economic data was already pretty unreliable because it was always, backward looking. But some shit's going down. Is the only way I could say it, is that the level of macro data, the back and forth right now, it's tweaking out. It's going haywire. So I don't know what it means, but it's like watching a gauge, in your car, and have you ever had it? I had this happen in my Honda once, where the gauge kept spinning around, where the needle would just go in a circle and it would just tweak out, and then it would surge up and then come down. So that's what I feel about the economic data right now. I feel like it is straight up going haywire because you're getting one set of data that one way, and then the next data is the opposite way, and then the next data right after shows that. So you got to realize yesterday you just saw your first amount of job openings decrease in 2 years. That was the first decrease in job openings in 2 years of that scale. Even the amount of people quitting their jobs hit a 2-year low on that last set of data yesterday on the JOLTS jobs openings, right? Today, another set of jobs data based on the same period comes in at double expectations, saying there was additions of 300,000 jobs. And that's after the previous data was showing you somewhat of a collapse in the jobs. So it's just wicked that you're getting that. So I think the data means nothing, and the volatility of it means we are approaching volatility. So 41.33 now. You're almost 10 points higher from the open. So again, 41.33. Watch how it reacts here, and we'll go from there. They're cooking the books. I don't think they are. I mean, I think by nature there's an element of nature of them cooking it, but in the sense of you don't want economic data to show up like this, because what happens? If you were, imagine you were a car mechanic. If you were doing diagnostics and, you have these weird outliers popping up, you're going to exclude it. You're not going to take it seriously. So that the problem is when the data comes back and forth like this, chances are you're probably going to start ignoring it, because it's just showing you that something's wrong and it's not accurately telling you what is happening. But sadly, the market will respond depending on how they feel. Again, it just all depends. Bonds are trying to come down here again. What time is it? You got 9 minutes. Mm-mm. 412, so that's 41.33 now. Woo. So again, yesterday we flushed heavy from here, but you got to realize if this gets back up here, you could recover a decent amount of this bounce, man. That's it. You're starting to go crazy there. Again, the data just came in line, and the bonds did start to move, and now from here we're doing the opposite. However, they're almost matched up. SPY is up 0.42, NASDAQ 0.53, and now Dow went negative to positive, up almost a quarter. That was a big move. Everything is in the green right now except real estate, staples, and energy. Industrials are number 1, healthcare number 2, discretionary number 3, and then energy is down 0.67. No news. Only news was the data. So again, no big surprises. I thought it was going to be a dud, and then we just took a reaction to it. And bonds reacted, but not too big. And no, it is not a FOMC leak. Powell is guaranteed to raise at this meeting. Again, the odds of him not raising is less than 2%. And then if he does raise, or if he doesn't raise, we have a huge problem. But for now, one rate hike. The real question about today is whether or not he clearly signals a pause in the future. Whether or not this is the last rate hike of the cycle of the last pretty much year and a half or year and a quarter. So bonds, a little bounce off the top, even SPY, a red. Again, 41.33, I think, to the dot. Or you went 3 points above it, and now we're back there. So see, if it gives up 41.33, you might get a little dancing queen. But if it could just reload and rip from here and get above to 41.48, then you might be more golden faster than I expected. Amazon pop, next leg. Tesla's on the high. Apple as well. Amazon is insane. So that's it. They're smashing those puts that were up. The data was ISM or PMIs, and they came in line. Service, PMI, and composite. So 5 more minutes, we get ISM data. That's going to be big because it has services, prices paid, employment, and new orders. So you're going to have 4 things to respond to. But we'll find out. We will find out. Because already a big reaction. And again, bonds are doing their thing too. Airbnb flip to the downside. Yeah, that's weird. Now the calls, again, the calls are holding, but they're giving up too now. Thanks for being consistent here every day, baby. You're appreciated. God bless you. And get ready. It's a good day to be here, man. Good day to be here. It's definitely the main event. NVIDIA, they might want it. Watch if AMD, bro. AMD at 8240. Tesla keeps going up. Again, Tesla, Amazon, Apple, and Google. Microsoft was trailing behind, so see if they come up a little bit. Amazon again. Even Netflix, but you need to get way higher than 320. AMD flush. It wants to. Apple's hitting a high again. Tesla as well. I think Apple and Amazon's enough, but just there's a lot of names running right now. Where's Tech? Tech is only up 0.27. The NASDAQ is up 0.5, but they're not even the best on the day right now. So watch out, because this could be the opposite of yesterday for now. You're slowly melting up. 41.33 now has acted as support in the last 3 minutes. That could change, but see, because if this holds 41.40, but really like 41.43 to 41.48, you get above here. I mean, you've recovered most of yesterday's decline, except for the gap down. Apple move, I mean, again, Apple's earnings is tomorrow. Could be the pre-earnings run-up, but there wasn't any specific news. Maybe just AMD, but I don't think AMD was encouraging for Apple. Could also be Apple Powell safe haven move. And then you know what I thought was funny? You guys remember at the beginning of the year how we were all tripping on this bond divergence? The thing I thought is funny is that this last 3 months now, in a weird way, it kind of matched up the bonds. It kind of matched up everything, and like you see it, the gap is a little bit open there on the 1 year, but to a degree now, this is now allowed. Remember, we were looking at this, and I was telling you it's only been like a week or two and wait, and then finally they kind of did their thing. Well, this little weird movement, the bonds in SPY are closer, getting to the closer point they've been at all year, give or take, besides after the SVB collapse. What time is it? All right, 2 minutes, 2.5 minutes till the data. That's deceptive because it seemed they were moving opposite 100%. And remember, there's a fat gap between bonds and yield, so it's like this little back and forth, and all the data in pretty much 5 months. You see how it's naturally kind of worked its way, where now they're much closer. Again, in the beginning of the year, that divergence was screaming. There still is a divergence now, and that's why, I mean, it kind of speaks to the importance of Powell and why the bond volatility has been elevated. But it's like, you know, after this, we're gonna get a real big effect on it, and now maybe that divergence from the beginning of the year resolves itself, or we see really who was the real winner, more or less. Almost to yesterday's high. We came up a lot yesterday so far, which is wild. Yesterday's high is 41.60 or 30 points. 41.48 though. Again, back down to 41.33 though. It was looking like it was holding support for the last 5 minutes, but just watch how it trades around here. And then again, I mean, even then, the data is literally a minute and 20 seconds away. So ISM services, that is expected to come in at 51.8. I think stronger will be bad, and lower will not be as good. So we'll see. And then ISM services, prices paid is 59.5. There's no expectations, so you just have to compare it to the last one. And then ISM employment 51.3, and then new orders 52.2. So prices paid is the only thing not in contraction. Everything, every other one's below 52, 52.5. So Vivo C. My clock is behind. I think that's just the YouTube stuff sometimes. Like you have latency is what they call it. All right, 20 seconds. Again, 51.8 is the easy number. I'd watch services, then jump to prices paid, then jump to employment, unless one of them is just the easy bid. Bonds are selling off already. Hold on. Watch out for that. Again, if bonds front run, that means you know the vibes. You know the vibes. So ISM services, 2-1, 51.9. That came in. Employment dropped, which is good. And then prices paid barely went up. And then new orders came up. Interesting. So the only surprise was new orders. New orders came in, and that's up by 0.4. Everything else was within 0.1 of each other. Employment dropped, which could freak people out like yesterday, if that's the case. And then prices paid barely moved, and then same thing with services barely moved. So new orders means I don't know. Prices paid is still a little bit up. If activity is up, I could say something. Not so bad. Employment dropped is not bullish. Well, that's what I'm saying. After yesterday, that wasn't bullish. So maybe today that's not, because that's the only thing that dropped. I mean, it dropped by like 0.5 or 0.6, but the new orders was your biggest data set. So watch out. Again, just like the earlier data comes out, then we're able to move. So just see. But that's your last thing now until Powell. So keep that in mind. Oh, you got to add? No, I need to go pee too, so let me go pee. Okay, follow me on Instagram at The Trading Fraternity. I love you. I'll be right back.
Obvious question, why? From New York, I'm Alex Steele with my co-host in London, Guy Johnson. Welcome to Bloomberg Markets. All right, here we are. It's Fed Day. We got the latest read on the economy. How did services do?
Let's take a look. ISM services just dropping onto the Bloomberg and pretty much in line with expectations. There's a few anomalies in here. The ISM headline number ticks higher. It's up from 51.2 to 51.9. The survey 51.8. Prices paid pretty stable at 59.6. The employment index a little softer, which is interesting in light of the ADP, comes through at 50.8. New orders, though, tick sharply higher to 56.1. I've been doing it a long time. I don't know whether I care about the ADP number, Alex, but I certainly care about this. And I think there's some interesting things in here that the Fed is going to certainly want to work through. Mike McKee, as ever, joins us to work us through what these numbers are telling us. Mike, your read.
Well, you gave me a little extra time here as you went through the numbers to go through the numbers myself. And I basically think what we're seeing here is sort of a status quo in the service industry that supports the idea that we're not right on the cusp of a recession yet, or even a significant slowdown. The services PMI ticks up just a little bit, not a whole lot. Business activity, though, falls while new orders rise. So there are some counterbalancing things in these numbers. The employment number stays positive, which is good news, and the prices paid number is basically unchanged, so it doesn't suggest that prices are going down, which is what the Fed would like to see. So it does put some pressure on the Fed to maybe not give up the idea of future rate increases if inflation doesn't come down, but it certainly gives them a way to say we can pause and wait and see what happens.
Yeah, and really no reaction in the bond or stock market. Stocks are still slightly higher. You still have a tiny bit of the bid into the bond market. All right, Mike, hang tight. You're going to stay with us. The Federal Reserve expected to deliver that 24 would be weird. 25 basis point hike this afternoon. I don't know what that is. And then pause from there. Former Dallas Fed President Robert Kaplan was on Bloomberg TV earlier. And
all right. Interesting. Sadly, again, the data is not moving too much. I think the last 3 days of data, if it's been having any sort of question mark, I think that question mark leads to stagflation. I mean, again, that's like what they're saying. Prices paid could have went down a little bit more. I think it went up a tiny bit, but new orders, I mean, things are ramping up, but also staying the same at the same time. So we'll see. Well, bonds just ripped off of that. Yeah, bonds are really, really popping. Clifford, MPW. Why do you like MPW? I like the yield. I like their history. And I just think, I do think they have troubles. But I think at the current price, I think people expect the troubles to materialize way, way sooner than it will. So I think, we could hold it for a good amount of time. They have at least pretty much they have value for a reason, but I don't think the reason why they're down is gonna kill them just yet, if at all. Dollar flushing. Again, just watch the bonds. Again, I'm surprised we move more following the PMI rather than the ISM. So let's see here. Again, you might be able to get a balance. Bonds have moved already. You already had all your big tech up there. Let's see. And now bonds and stocks are up. But stocks are now doing a little bit better. Or actually, it's almost the same. 0.31 on the SPY. The NASDAQ is the one. That one's up 0.5. Not bad. Not bad at all. Man, more stagflationary data, bro. They keep hitting us with it. Powell hikes. Does that entail the dollar will go up? That depends, but this case, people are going to be more focused on bonds. Just because, you know, if this really is going to be the last hike, there's a lot of trends that emerge from there. So I wouldn't be surprised to watch people go after that. And then there'll be a dollar reaction eventually. But, I mean, the dollar has been getting affected by a couple of other things. All right, Apple's coming down. Bond's still holding. AMD's getting their first little green here. I don't know. Maybe this holds. AMD's down 7.8. That's actually crazy. And then NVIDIA came back up a little bit. We had Amazon. Amazon solidly in the green alongside Apple. It's 3M trying to work up. MPW getting murdered right now. So are some of the other REITs, but MPW a little bit more. And then regionals. Futures playing pickleball. JP Morgan trying to come up. And then even Goldman in the green. MRSN, I don't know what is that one. Or AP. One of them was a reverse split. MRSN, they jumped 30% after Immunogen trial. So MRSN is a sympathy to Immunogen. Immunogen was the cancer one, I think ovarian cancer. And they're up like over 100%. And MRSN is mentioned as a sympathy play. So I think they work on a similar drug. So it's not too bad of a sympathy, but it's just, or a play, but it's just literally, it's based off of, what's it called? It's based off of just the other one doing good. Is it MSRN? What is it? MRSN. And then bonds coming down after that pop. Yeah, 48%. Again, Immunogen's up like 100%. How is Ford not up? It's kind of like Starbucks, but they were doing worse. But again, they did good this quarter, but then they kept everything the same. Guidance and all of that. So it's pretty wild. Nvidia.com. You always wanted to play soccer? Yeah, McRib is doing good for now. We'll see. I'm still holding that again. Ascend was the only other one I think that ended up doing good. Walgreens, I have no idea why it's getting murdered, man. That one is its own little unique situation. Is a very, very... Walgreens, I like it, though, if it keeps going a little bit lower at this point. Because someone was asking me if we should buy it. And I said I would have liked it at a little bit lower. There's definitely ultimate value play. I think they're a dividend aristocrat. I need to check their history again. But I'm not too against it. The McRib, hopefully it comes back. I mean, welcome to biotech land. Go up for a little bit, then come down, and then have to play that game. IEP, I never liked it. I was always weirded out by IEP. So I don't know. Again, that it seems like Muddy Waters or what's that guy's name? Hindenburg, bro. He's swinging at everybody. So I don't know, but I never liked the company in general. Like I didn't like the idea of what Carl Icahn was doing with it. I never really understood it. It seemed like a weird entity. But I don't know if I'm going to play it nor try to short it. What about Zim? Zim too. It's too confusing with the dividend. I don't think you could. I think you could try to flip it here and there, maybe close to dividends and dividend announcement, but you still got to be generally careful. And it's not like that's not an easy one, man. It's not an easy one. It's weird. So SPY's still holding here again. I believe this is right below 41.33. Yeah. So again, that did not hold. ISM. I mean, we did not move too much on this, which is wild. No, I'm not buying SoFi. I like Uber. Again, I do think Uber, it has to get above 37 or high 38s, and it can move pretty stupidly. So I think you're short. You're gonna have you'll have 1 point to take profit on it, I think for sure. But then again, it just depends. Uber it moves a lot. It's like a slow mover, but it moves back and forth in intraday a decent amount. We may run up into Powell. We could. I think the last couple ones we kind of did nothing. Except for like maybe 10 minutes. Immunogen is up again. MRSN or whatever one you guys asked for. That's the sympathy to that. Immunogen is the one that got the data. Microsoft's coming down. Hot dog. So, big tech is weird. Apple's coming down too, but they have big gains. Amazon has big gains. It's like some of them are doing good, some aren't. Bonds coming down. XLF starting to move up, though. So, see what the banks do. And again, regionals are up 2.5 after selling off 7. Oh, Walgreens could be reacting to, earnings. Meta's on the low, too. So is Microsoft. NASDAQ's only up 0.3 now. So, earlier... That's the thing, as we're dropping here, NASDAQ was up 0.5 like 10 minutes ago. Now NASDAQ's only up 0.3, and now it's matched up with the SPY. Meta's hitting a new low. Dow up 0.17. NQ dropping. As we've seen tech companies guide down a sandbag and rip to the moon, and Starbucks gets wrecked. Well, not in a weird way, though. Not every company that did good went up a lot. I think Meta was like the only one, and like Microsoft 10% is pretty big, but other than that, on like out of the 80% of beats, the average move is like 0.5%. It's really, really small. So it's kind of been a weird earnings season, I would say, to say the least, because most companies, even if they did good, it wasn't like, you didn't watch 10, 20, 30% moves on everything. There was a couple here and there, but looking at the numbers so far after a couple of hundred reported, there's been very, very minimal moves. So even if they sandbagged, and then it's like if you didn't do good, then you just got beaten with a stick. Yeah, Starbucks. I love their earnings yesterday. That was the first. I said that's a great earnings, but then I zoomed out the chart and I said that's a great earnings, but you gotta why would you buy anything at all-time highs right now? That's it. I think people, it makes sense with the analyst in a weird way, because usually I think they're all on crack, but in this case I kind of agree, because it's like, okay, if your earnings are that good and you're not guiding up and your equity is already at near all-time highs, I mean, you really need a great earnings or some great outlook to justify going higher than your all-time high. Imogen up another 20% since call out. Senate Democrats planning bill to focus on China competition. And then SPY came back down. Bonds kind of doing their little tweak dance here too. But back to 41.26. So you got above 41.33. We broke it again. Now we're back to the earlier candles off of the data. We moved a little bit faster off of off of the PMIs than ISM. But now we're starting to come back down. A defense after the Kremlin thing, they might get a little bit of a boost, but I don't know about the follow through. It just kind of depends on what happens from here. China, not the debt ceiling. Yeah. Again, it's weird because people keep talking about it in the sense that we have this next month, but a lot of people are saying until financial markets respond, the government's not going to do anything. It's actually going to be, it's kind of weird. I don't know. I don't want to believe it because I feel like I've seen too many times nothing's happened with the debt ceiling, but I mean, the risk is there. It's just now it's just kind of in a dormant stage until people kind of want to respond to it. Molten Coors target raised by UBS, $67 from $54. Amazon, Tesla again. Look at you. Even Uber's trying to come back up. SPY a little bit off the bottom. Bonds are kind of leading the way. Photo 127. FSR, lowest tick on the day, might get a bounce. JD's on the high. It's the first China name in a week I've seen go up. Yeah, even Baba was down a lot more earlier. Again, Tesla's running. Uber back to 37. But Tesla's getting a nice pop-up there, actually. Tesla's leading. Tesla's looking like it's Apple. Now Apple looks like the market, even though it's up 1%. Oh, my goodness. Oh, it's been arriving early. It shows you never know when it's going to arrive, but when it does, it's a blessing. Ladies and gentlemen, Jerome Powell Day, May 3rd, 2023. Bradley Frizzle and the Peach has arrived. Oh, no, let's go. Peach Nation, get your ass up. I'm standing. I don't know if you hear me. I'm standing. Oh, my gosh. Get up, man. Get up. Peach Nation, it's here. God bless y'all. Bradley Frizzle, thank you, my friend. Thank you. Oh, my goodness. Wow. That's consistency. I've never met him in person, no, but I feel like I have. I feel like I'll be honored, honestly. It'll be a humbling moment the day I get to meet Bradley Frizzle in the Peach, man. I'll be like, there's nothing has rivaled that consistency, man. It's amazing. It's amazing. It's amazing. God bless you. That's exactly. All right, now we're ready to go. Oh, it's still on black screen. I still got too hyped. Oh, now that's it. Now we're ready to go. We already know the data. I got one more Fed thing to go over with y'all today. We're ready to go, though. That's it. We're ready to go. Amen. Amen. All right, Microsoft pop, Uber pop. Picchiotti was saying lowest tick on the day. We are kind of getting a little bounce. It's just right at open. That's it. We just did all this little data move to just do this little game and go right back to open. Now you're doing a little VWAP dance. Bonds are practically the same. They just gave up. The bonds are more volatile than stocks right now. I'm telling you. You're getting way bigger movements on that. The Cal Ripken of stocks, baby. SCLX. Appel. I want to go donate a bunch of peaches to a community pantry. They'd be confused as I blow the horn walking away. Like some guy just came in and gave us 1,000 peaches. And then he just started blowing a blowhorn and then just walked away and said, Peach Nation, stand up. And then just left and we never saw him again. I like it. It's like a Batman version of the peach. I could get behind it. Let's go. Keep the tradition living on. All right. VWAP test came down a little bit. Where's Dizzle? Dizzle in the viddles. How much will bonds go down after the rate hike? They're supposed to win in the long term, so they might not even move. The bonds aren't going to move. It doesn't matter about the rate hike. It matters about the guidance. So it's like a good example is the 2-year. So if Powell signals a pause, even if he raises rates, the bond yield should come down, a.k.a. SHI, TLT, IEF, they should go up, but especially on the 2-year. Why? Because think about it. If now Powell says we're raising rates, even though he's raising rates and the interest rate should be higher, he's setting forth the logic that they're going to be stopping. So if you only have 2 years on a bond and you're looking ahead for the future, you're saying, well, yeah, even though the short-term interest rate is at 5.5 right now, if he's pausing today in the next 3 to 6 months, that means as we live through time, we're going to get closer to those shorter-term rates coming down because now they are pausing, and then the next step would be a cut. So the bond yields will come down off of the pause announcement. So if there's not a pause announcement and Powell just raises rates and says, yeah, we could be getting close to a pause, but, it's not as clear cut, then the bonds will probably reverse because now it's saying, well, now you got to wait another month, maybe another quarter before even getting to the pause. So then that's where we're going to get that volatility. But pretty much the bond should catch a bid if Powell announces a pause. Nothing about a rate hike or not, but it's all about the pause because that is a very clear-cut future signal on how to price interest rates. The inverse, well, no, this would help uninvert the curve because then people would buy the short end of the curve. They might buy the long end too, but then hopefully as people anticipate the short end to after a pause, they would expect it to come down in the near term. They're going to start buying it up. I have a bond play now, but I'm going to sell out of it before Powell, and then after Powell, we'll see what we could do. So back at VWAP again, kind of moving. Uber's near the high. I mean, the video is doing great. AMD bounced even like $1.40 there. Again, those are your post earnings. Texas grid operators see summer power demand rising to a record. Tejas. Bond plays, you could go with SHI, IEF, TLT/ZN/ZT, 10Y, 2Y. There's a lot. I think there's over 100 different bond plays you could find. I mean, there's kind of the popular ones, but there's a lot of areas. I think it's safe to hold Bill throughout Powell for sure. I mean, Bill's already not moving. I think Bill's already in this stage where we're getting ready for the next step with it, but as of now, I mean, your capital stability should be there. Options are effective, TYD, or excuse me, shares of TYD. The options can work, but TYD, I forgot about that. That's another one that you could go after. All right, little pop and then bonds hitting a low now. This is all after your data here and this little back and forth hiccup we've been dealing with. Chile CPI estimates nearing but still above target. You guys are sandbagging the likes. Yeah, hit the like button. What time is it? Because we got one more Fed guide to go over, and then that's it. Oh, no, we've already gone over this one. I think we're already up to speed. I think we good, baby. Bonds at the low. Nikolai rolling over. Nikolai. Oh, where's Ford? IP printing. Where's Starbucks? Starbucks 106. FRCB short squeeze at the Fed meeting is dovish. Don't get ahead of yourself on that one. Again, SVBQ, it went up 50% before dropping. But I'm shocked, though, that they have that already. I can't believe they already have a trade with it. But, again, there's been many times people try to squeeze SVB even after this whole situation. The best scenario for banks with regard to rates, one more rate hike and done. That would be, again, for most people, like, it's not a bad option. The question is, how does Powell communicate it? That's what I'm playing on. But for mostly everybody, it seems like one rate hike and done, or no rate hikes at all. What would be, I guess, what could be even better? But then again, it might cause too much bullishness is if Powell came in and just said, we're not raising rates. I'm just going to pause right now. That would be it. But so far, the base case right now of raise rates and pause, like that's not a bad option. And I think a lot of people would be okay with that. But the question is how clear is the pause signal? So I think he's going to raise rates, but I don't think the pause is going to be, he's going to create doubt around it where I don't think it's going to be as clear cut. But banks should benefit from that scenario. But then again, the banks are also, that's traditional logic. Because right now the banks are, we're watching banks fail at a pace of 1.5 banks a month. So I don't know. But it's like if that changes, it could. But for initially, higher rates should benefit the banks. But if it's leading to deposit outflows and it's leading to other problems on their balance sheet, then no. Then maybe, banks are already in the trauma zone. How many bank failures per rate hike does that you get? I think that gets you like 0.2 bank failures per, or no, I think like 0.5 maybe, 0.25. Yes, inflation could rekindle, and that could change this. It could, and that's why how he signals that will be the real key. At 7%, it's going to force people to not sell. It'll make sellers wait, and the market will short up again. Are you talking real estate? Well, again, real estate's getting weird too. Like I've been saying, I've been seeing some hotness, but then like I'm also watching like the difference in, you could watch people's positioning. If you owned a house for a long time and you were already never selling your house, this doesn't matter. It's like realistically, the more volatility I'm seeing in real estate is with the people who just bought houses or the people who did not have it secured, like, again, where a lot of it's new. That's what I've been seeing. Because I saw someone the other day, they dropped their home $200,000. That was one of the biggest price cuts I've seen in the last, like, month and a half. And I don't think it's because the house is worth that much less. I just think they need the money because that's it. Like, I think you'll get your price if you're willing to wait. But if you're not willing, like if you need money and something happens and you're not willing to wait 30 to 45 days, maybe longer to sell a house, then yeah, you're going to start reacting a little bit. Then the rates gets weird. Estee Lauder expects Asia sales to continue in the first quarter, and they said it could continue a bit in the second quarter. Blinken says he can't in any way validate reports that a drone hit the Kremlin. My neighbor's selling the house over $75,000 more than they bought it for. Yeah, that's because they don't need the money. So that's it. It's like if they really don't need the money, they're going to keep it at that price for a month or two. But then if it's 60 days later and they actually are like, oh shit, we need the money now, they're going to sell it for what they paid for it or less. It's hard to go less. The beauty is that most people have the equity. Like that guy I saw drop the price $200,000. He bought the house for $500,000. He's still asking $1 million, right? It was at 1.2, and then he lowered it to 1 million. Hartsco jumps after first quarter revenue beat. It's my birthday. 26. Oh my goodness. Happy birthday. Her. Yo, that's hype. On Powell Day. 26. Oh my gosh, still so young. Still so young. You know that? You're blessed. You're getting to the spot, though. 26, you have, like, I think you got, like, 2 more years. Maybe, like, another year, and then you go through the next 4-year stage of your life. It's weird. Like, I feel like it's like 4 years, every 4 years feels like 1 year. It's like 20 to 24, and then 24 to, like, 28. You see what I'm saying? So you got to just ride with it. And a happy birthday. EIA data, 1 million barrels fell, 1.28 million barrels fell. And then gasoline inventories rose by 1.7. Move to San Diego, good time to buy a home right now or wait. San Diego's still expensive. And inventory is surprisingly lower than last year. If you could get a good deal and it's somewhere you want to actually live and the area is good, I mean, I could justify if you plan to stay here for a while, but I would definitely try to get a good price. But then again, it's not like the alternative's good because San Diego still has pretty expensive rent. So, I mean, money is going to be spent on housing some way or another. Next thing you know, you're 31 with 4 elementary schoolers. Wow. I was not expecting that, but yeah, maybe. Okay. Shit, man. That's crazy. The crime is out of control there in San Diego? Nah, it's chilling. Like, I mean, I'm not going to lie to you. Like, in the last 12 months, I was driving by a real estate building and there was a murder. But other than that, I think the homelessness has gotten pretty bad. But San Diego's been like, it's been decent. It's not too bad. Oh, you're talking about L.A. Yeah. Crude inventories down 14% year over year. Just murder, no biggie. It was a crime of passion. So, I don't know. You guys have crime of passion all the time. Y'all get, again, that's what happened with, what's it called? Even the square guy was a crime of passion. Even then, y'all get passionate about politics. Y'all get mad. Y'all start violating the chat because of you get so passionate about it. You know what I'm saying? Like, that's what happened. The guy's like, girl cheated on him in the building, and he came home, and then he just started going crazy. I was like, that's sad. Get away from me. This is weird. Austin real estate came down a ton. Austin, they ain't even Hollywood anymore. Now they'll take your offer. Now they give you that California treatment with a smile on their face. A year and a half ago, it's like, get the fuck out of here. We don't want you here. Now, if you hit up a property in Austin and you say you're from California, they all nice to you now. They're like, well, we do have some offers, but we would love to show you. Now it's like, So no, Austin is calmed down, bro. Austin is chilled out. Yeah, now they got that Southern hospitality. That's what I was looking for a year or two ago. I was wondering where that went. IEP, I don't know, man. IEP sketches me out just from day one. I don't know about shorting it, but it's just I thought the business model was the weirdest thing. One for certain, two things for sure. Jerome Powell will switch up language to not have the market react, aka keeping the peace. I feel you. I feel you. But people don't agree with that, which I'm surprised. I genuinely thought my view would be consensus, but it's not. But, you know, people are very adamant that Powell is going to change the language on the statement, and that I don't think keeps the peace. Which is weird because, again, I don't think Powell spent 12 months to use that phrase one time. But I love your take. I agree. Being on workers' comp that is less than poverty, is it due to an injury or what's the reason? But I think you can appeal it. especially if you could even show that it doesn't even like cover your wages, or you find a way to get a higher paying job and then get comp from the higher paying job. Get a higher paying job, then leave. That's all. I don't know much about it besides that. Lyft, I mean, Uber did good. Uber CEO said it looks good for Lyft, but Lyft, they got the drama and just all of their, cost cutting, job cutting, restructuring, how the SEC views their EBITDA or non-adjusted earnings and all that. So it's I think Lyft it's compelling, but I also I don't think it's risk free. And then everybody even asking me about Uber. I tell you, I'm like, Uber's, I like it. I really think it could squeeze, but I'm also sketched out by it because these rideshare companies, I mean, they run up and then they flip. I don't really have protection today. I mean, I got a couple of plays. I mean, once I close out the bonds, I mean, we've been winding some things down. I'd like your medium-term outlook on oil. Unfortunately, we're trapped in demand destruction. That's it. We don't know. That's part of it. Part of this stagflationary data, part of this data cratering. It's not happening without oil, and oil is collapsing now. And now it's looking like OPEC was just leaning into the demand destruction. So I think midterm, it depends on rates. And as weird as it sounds, it depends on economic activity. And right now, it's like if we do get pauses, we do get credit contractions, I don't think oil is going to come back until we get out of that. Lyft running 4.5. And then SPY just holding near the lows. 41.26. Just barely higher than where you opened. 6 points higher, 7 points higher than the close of yesterday. Boyle Franken 2s. Think we run till Powell. Classic FOMC pump. There, I want to say February 1st we did nothing. I want to say. Or I don't think it was until later. Because that was the other Fed meeting, right? Yeah, it was this day. Will they give me a 1 minute chart that goes that far? Where is it? We need like 3 months. I need longer. I need 90 days. 90 days, 5 minutes. Is this our day? Yeah, so this was the last Fed meeting. So February 1st meeting opened at 40.77, gap down to like 40.50. We sold off actually most of the day. Then this was the statement. And then we went up after the statement. So actually, the latest Fed pre-earnings run, we had zero run up at all. This was, again, the last Fed, and then this was Powell. As you see, then there was the follow-up. So, yeah, last time we did nothing until Powell. I think there was a lot of data that day, too. Because remember, even today we had a lot of data, but I feel like there was a couple of other things February 1st that was also dictating some of the movements leading into it. Any morning tin? I kind of, but not really. It's like, I mean, I guess I could give you 10. I don't know if you want it. It's very bad 10. Can I get like 100? It's lending tips 10. I'm just going to, so I don't know. I could charge a premium. I wasn't going to charge a premium, but usually anytime I give you lending, I have to charge a premium on lending tips 10. I really do. So you guys know, because you know the reputation. Lending tips 10, it's not like it's nothing Like, this shit's always dramatic. You know what I'm saying? It's not. So I like, if I was going to say 100 likes, but if I could do 200, I could give it to you. It's Lending Tips 10. It's LT tips. This is a high quality 10, bro. I'm just saying, ain't not too many people do it like Lending 10 like that. So again, I was gonna give it to you cheap, but you know the vibe. Brand name. You're paying for intangible assets on this one. Smash the like. Show me what you got. I thought he retired. He did retire, but like it slips out. Like he told me this yesterday. I don't think he thought I was going to tell you as 10. Because I don't know if it's 10. I kind of agree with him. I do to a degree. I'm just a little bit more patient. And I have at least 2 to 6 more months, 2 to 8 more months on my time frame. But here it is. I'm not going to sugarcoat it. Lending Tips thinks it's all done. LT thinks it's over. LT was saying, you don't think it's weird that another bank went bust, FRC, and not one person reacted? Last time, all the money left. This time, another bank went under and nobody gave a shit over the weekend, and it all went down. Lending Tips sat me down yesterday and was trying to get me to sell everything. LT was like, sell it all. LT, I had another house I wanted to sell. I didn't want to sell it. He was like, list it. Trust me. Sell it right. He said, it's all done. So that's the LT 10. Very bearish. Very bearish. LT says it's done. He says all of it's done. I said I could see where you're saying. I said my yield curve video. I said I got 2 to 8 months, but I could see it. But I'm not in too big of a worry just yet. Not yet. I'm still kind of agnostic and giving myself time. But that's it. That's the LT 10. He says it's done. Just done. That's it. He says it's the last shot. He said this is the last run up everybody gets. He says it's 07. I said, damn, son. All right. And then he subscribed to the Twitch. So yeah, there's your 10. Mm-hmm. Mm-hmm. He's right. So again, I mean, I agree with uncertainty in the timeline and it could get bad, but I'm not like, I know damn well they're going to try to buy as much time as they can. I don't think it's as immediate as LT thinks it's going to be. But then again, maybe that's what kills me and that's what protects the people who are ahead of it. We're a little bit lower than open now. We're getting into, I guess it's like the bottom of the candle. We're really 41.19 now, and that is a big level. Bonds are about to break out. It's low key. Bonds have been pretty volatile leading into this. Yeah, that's the interesting, because now they're doing the opposite. Bonds are at the high, and now stocks are selling off. So it's like right here, we started going up, the bonds started selling, then we went up, stock market went down, then they kind of matched up a little bit like right here, and then all of a sudden from here, we started dropping, bonds started popping. Sell real estate. Lending Tips Lending Tips always wants to sell real estate. Like, it's not go like we got videos of us in 2018. LT was ready to sell, bro. LT loves again, I think he lived through 2008 at a much different period than I did. Like he was fully involved in the industry. You know, I was still a baby. I guess I was still playing Halo and shit. But you know, I still had a long term, but he's definitely you know, he sees a lot of what he sees in 08. I think is what is inspiring his confidence towards the downside. Yeah, he did. He sold some of his houses in 2022 in April. He freaked out with COVID too. Mm-hmm. In 2008, the market stopped making sense. Yes, that's what he said. That's what he was saying with like the whole FRC thing, because he was like, that's weird. He was like, the last time a bank went bust, FDIC, over the weekend, everybody was scrambling and there was a giant run on every bank. This time around, nothing. And then again, we were talking about what the bonds did yesterday. That was insane. I hope you guys realize, like, what we just did. Do you not realize how crazy our bond play was and how stupid that is? Like, I'm not the one to call manipulation, but it's fucked up, dude. You mean to tell me bank goes bust, you buy the bonds on Friday, and then you wake up and then your bonds are whacked by 1%? That's insane. Only to be back up and with a gain of another 0.5%, leading into now another additional 1% the next day off of nothing? Dog, that's insane. That's like part of those things where it's like, that's what we're saying. It's like shit is going haywire. That's where people get worried, because they look at the market and they're like, yeah, this doesn't make any sense, because that's wild. Yeah, dude, to go 36 hours, 48 hours to be down that much on a play that was almost a guarantee, you know what I'm saying? And then to go back up, that's a wild swing. And now people are fucking piling into it now. And we still have the bond supply, and you still have Powell. So it's wild. But that's what we were kind of talking about, and just bringing up some of the other factors. But it was a very oddly muted response to what it was, or by a weird response by the 41.19 now, by just market participants in general, the FRC. Something happened afterwards, but the delay is unconscionable, or it's hard to digest. That delay makes no sense, and it makes sense that things should be delayed and that things don't always happen right away. But considering the scope and gravity of what it is, that's weird. So yeah, little Clifford, you've filled the gap now. Little baby gap fill. But 41.17, again, if we can't hold here, you go down to it's like 41.16, 17 to like 41.10, and then back to the stubborn zone between 41.10 to 41.06 and 4100. Interesting move all day. I mean, I think it might look like last Fed meeting. We could go down a little bit, get a couple of VWAP pops, and then we're probably just going to end up, give or take, again, this was a data set. I think we'll probably give or take, and Powell will come out where the data's at. Powell is today, 2:30. In your opinion, is this a relatively bad time to start investing and getting into the market, or good for all the information flying around? I think it's always a great time to get in the market. Again, I mean, this is why we do what we do, man. We do all of this for free. We encourage everybody. I mean, this is the reason why I started this channel, man. I think everybody should invest. It is always a great time to get in the market. I think if you go about it the right way, you space it, there's no such thing as a bad time. Trust me. Again, people love to say it's a bad time and react to it. I started at the worst time in history. My life is amazing. If I didn't do it, my things would have been very, very different for me. And that's where I just say, just start small, space it out, you'll be good. The bad part is that you're entering into the stock market when the investing culture has been perverted heavily. And that's it. Yeah, that's the only thing that sucks, is that you probably run the risk of learning the bad habits. You're probably going to get exposed to ridiculous logic. And again, there is a lot of info flying around. And even then, the risk, you guys know what people are saying is the risk of AI is the risk of spamming and misinformation and all of that. And honestly, I already think that's hit the stock market. So, you just get ready for that. But I think that's the bad part. But for now, man, I think you should always invest. Again, the market could crash tomorrow, but if you go about our strategy where we're saying you space out your money and go little by little, it shouldn't affect you. If you took $10,000, $12,000, you know what I'm saying, and you didn't put it all in at once, and you spaced it out $2,000 a month, $1,000 a month for the next 12 months, dude, even if the market fucking crashes tomorrow, you're not going to lose. So, quite frankly, this moment in the market, it's bad for the people who have money. Do you not get that? Like, think about it. It's the people who have assets, the people who have to decide to either sell them out or not, or decide to hold them and lose a lot of money on them. And then now your wealth, you think it's one thing and then it changes overnight. So, like, getting into the market, easy decision. Starting out right now, as long as you space it out and don't throw it all in at once, fucking life is easy for you right now, because you could rebuild build a portfolio and move way, way bigger. If you already have a big boat, it's very hard to move a big boat. It's hard to move all of that furniture out of a mansion, if you know what I'm saying. Yeah, great time to start. Not so good if you're close to retirement. Exactly. You entered right as the reduced rates near zero for a decade. That was the absolute best time. It wasn't, though. Again, it was when we look back at it, and that's where your modern information has provided that to you. But you see it every day, even in real time. When we make a decision that goes, we go against the grain, it doesn't feel like it's the best time. So, like, again, in like 2000, dude, when I wanted to flip a house in 2010, 2011, what do you think everybody told me? When I was buying real estate, even 2014, 2015, what do you think people said? Again, holding on, I only had a little bit of some of the stocks, but then buying them after 2010, just right off the right. What do you think people were telling me? Rates were at zero. I had people with way more experience and money than me, as well as people with way less money and way less experience. Both of them were telling me I'm an idiot, no matter what I was doing. It was like, oh, you're buying real estate, you're an idiot. Did you not just see the crash? Oh, it's done. Oh, look at the stock. Why would you be buying into the stock market? You know what I'm saying? Like, it's not. It was a great time when we look back and you're like, oh, yeah, that's what zero rates does and this. But nah, in the meantime of it, it didn't feel like it was easy. Again, same thing when we bought Meta. We look back, we're up 160% on Meta just as of October. It did not feel like it was that easy when we did it, because when we bought it, everyone thought that thing was going to go to MySpace. That's a recent example. But hopefully you see where I'm getting at with it, where I agree. I mean, that's why I always think you should start right away, because you may not realize it. You may be at the best moment in the next 10 years, and you'll never know if you don't start today. But you're always going to have people telling you, there's always going to be market fear. There's going to be fear porn in the market no matter what. Everybody is going to tell you it's dumb, it's stupid, it's scary, it's going to crash. There's not going to be 1 year where you don't hear that. So how do you balance that? That's why I've realized a little bit always is better than nothing. And that's where I said start. I don't have to throw it all in. Again, even when we started the YouTube portfolio, the market was at a high, then we had a big drop, then it went to another high. The beauty was, if we threw all of our money in at one point, the results would have been way different. But by spacing it out, you see, we're barely up, gentle dividends, adequate, 15% in dividends, 5% in equity. It's small, but it's little by little, and it just starts to build up. But that all of our money is just sitting there. And then now you did better than anybody who threw money in at the non-optimal time. So you're going to hear this for your whole life, Chad. That's all I'm telling you. I don't know. I'm pretty young, but I've traded for a long time. I've held stocks for a long time. You hear me. You've seen me for years already. Every single year I've had people tell me this thing is going to hell. Everything is worthless. You're an idiot. You buy this, you're dumb. You're going to lose out of everything and you deserve it. I've heard that for almost 2 decades. At this point, that's insane to me. But I hope you're ready for that, because welcome to the stock market. Like, that's it. Welcome to the stock market. This is what it comes down to. You are going to have these competing opinions. Again, I'm not saying the market won't go down. It can go down, and there can be it. But this is not to say, like I'm saying, if you took $10,000 and spaced it out over $2,000 a month, $1,000 a month, you're not getting wiped out by the biggest stock market crash in the world. That's it. Hands down, if you're just starting and we had the biggest stock market crash in the world, you would not get wiped out if you started today and spaced it out. Why? Because you don't have enough invested. And then if you start off and give yourself that 10 months of wiggle room, holy shit, you're investing too slow to lose. That's what happened with our long term. It doesn't matter what we dealt with. Why does that shit just look stable? Because little by little, we're adding to it. And that's it. You give yourself time. Oh man, that's all you need. So just don't start investing and throw all of your money at one thing and then walk away. That's how you're going to lose in this type of environment. What if after 10 months it crashes, then GG, spaced out every month? So assuming in that 10 months, hopefully you got either better prices and then the average alone will be there. But the beauty is 1 out of 10 will never kill you. It's called small good decisions. So if you got 12 deposits, you have 12 investments to make in a year, you have to make 12 bad decisions in a row. You got to try to do that. You'll get lucky once. Like, you know what I'm saying? So that's the whole idea of going little by little and not, again, having ammo and not just throwing it all out there. And hopefully in that 12 months, by the time you invest it all, hopefully you found a way to even get more income or find a way to balance it out. You could do that easily. I think you could do it easily in one day. Like, have you ever noticed that, like, some days when you make a good decision, you keep making good decisions, and then other days you make like one bad decision and then they just don't stop? It's like playing 2K and your player gets cold. So you could make 12 bad decisions in one day easily. I've seen it happen. I've done it myself. I've done 12 bad decisions in a day easy, like it's nothing. But to do 12 bad decisions in a year, like we're talking once a month, and you could only make one decision a month, that's hard to do 12. Like, to make a bad decision, have a month to think about it, and then go again, and then fuck it up again, and then still have another month to think about the last 2 months, and then do it again, and then fuck up, and then that's 3 months of just bad decisions. But like, you have time. Like, you are gonna have to try to make 12 bad ones in a row, is what I would argue. So if in a short time frame, easy to make a lot of bad decisions. In a long time frame, not really. Don't you have to pick the right stocks? Yeah, or just don't pick the wrong ones. And that's where it's, again, you have a very long amount of time, and space out your time and learn from what you've bought and didn't buy to be able to start making that judgment. Buy all Kathy Wood stocks. It's that easy. Oh, wow. You're a genius. Bro, that's the play for today. I forgot. Bro, ARK is your pause play. This thing is going to go insane. No, dude, literally, I know you were joking around, but don't forget the first pause or any rumor, ARK went crazy. Kathy Woods is the ghetto bond play. That's what you do, because if you think they're going to pause and then it's like, yeah, bullish, you buy Kathy, because she's the only one who would benefit billions of dollars at a time off of low interest rates, and her companies need it. Yep, ghetto bond play. That could be a good one to watch here. Very surprising. It surprised me in the beginning of the year, but then I laughed at it because I was like, it makes too much sense. Apple back to open. Tesla. All right, little pop here. We haven't done anything, man. We chilling. Where's the volume at? Remember, yesterday was high volume. What time is it? It's 11 Eastern. So 30 till Euro close. 15 mil. Volume's low. Volume is low. And Amazon's down. Tesla's still holding. Uber's doing great. I don't know why I'm so greedy. I want more. I just don't trust it. That's it. I love the rallies, but it's like I want him to go crazy. The theoretical option price is higher. Just be careful with that. Because on TD, the theoretical option price, I've seen like wicked numbers on it. I don't even know what they base it off of, but it's not really accurate. Or usually there's just like a giant gap between the actual price. Like I've seen theoretical option prices at like $15, then the option will be worth $1 or trading at $1. Buy low, sell high. The pros and cons of seller financing. The pros are that it technically won't show up on your credit unless they report it. And then you don't need to qualify with the bank, just the seller. The cons are usually it's a higher interest rate. And then it only lasts for like a couple of years. And then you have to refinance out of it. AMC brings Cineonic laser projection to prime AMC locations. Mm. 4115. So you're slipping now again below 4117. So just get ready because now, I mean, the door down to 4100 flat is open again. I don't know. We might hold it there leading into it, but volume's already low. Last Fed meeting, we did not really. This kind of looks the same. We dropped a little bit, then bounced, and then kind of just ended up by open. But you are getting a little flush there into a new low. On Deere, well, industrials have been weird. I mean, I think the company's good in general, but we do have to see how it just plays out in terms of like earnings guidance. And again, remember Deere, Cat, all of them after this last earnings, those are the ones that got murdered. And in a weird way, like some people have shied away from the defensives to start off. Datadog earnings. Yeah, even Apple tomorrow. Qualcomm today. Uber getting another candle here at the high. Where is DoorDash? Come on, DoorDash. Airbnb still down. Again, you have Booking too. Booking is tomorrow after the bell. That's still at 52-week highs though. Starbucks new low. And then where are we at? NASDAQ is up a quarter, just under. Dow is down 0.19 and SPY is down 0.007. And then bonds got like 0.5% across the curve, it looks like. Oh, you have O earnings is after the bell? So they shouldn't like shock people, but I think any updates on how some of these REITs are performing will be good. If they do bad, though, we might have a buying opportunity on O. Because if they do bad, they'll sell off. But if they do good, maybe it attracts some money. But again, REITs are suffering as part of the banking stuff. When Jerome Powell, the stock market went red. Last time this year, yeah. But last Fed meeting, we went up. So again, I mean, if we want to go over it, This is what we were going over earlier. Where is it? This was the last Fed meeting. So we opened at 40.67, went as high as 40.70. Until the meeting, you hit a low of 40.50 at 9:30, 9:20, worked your way up, and then this is how it was. The release came out. You shot up near the high of the day. 15 minutes later, you were pretty much into the low by the press conference, and then right when the press conference started, we rallied up from 40.38 to 41.51. What the? That was 100 points. So we will see. But I don't know about the last Fed, like last year, or last February meeting, or last May. BWO 3M Bill. Spire, they could. Oh, I didn't even think about that. The pre-Powell earnings run up or IV run up. You might get some of that. Let's see. Calls are in the green. So a lot of those dailies are actually up from yesterday. Interestingly enough, I guess they were just up 50%. We talked about the last feeding pumped and sold. What date? They said that was May. That was last May 2022. I just went over the February meeting, and that one we sold off just like 10, 15 points into the meeting. And then after the meeting, we shot up 100 points. All shares UVX. Coinbase, I could get you the earnings preview. I do have one. And then Coinbase, because that's tomorrow. Man, I can't believe it's already Wednesday. And Wednesday, call real estate, baby. Ooh. Shout out Call Real Estate. God bless you. Tonight, 6 p.m. We'll see you there. See you there or be bust. Just bust. That's it. Was down yesterday, ripped up today. Will the long-term move later or before the short side of the curves? We don't. It really depends on what the policy does. But the point is, bonds are very volatile, and this is what we were saying. It is going to be like that. I think we get one more death dive. I think you get one more pump fake before it goes crazy. But sadly, there has been years where it does kind of just hold here and then kind of go crazy. Yeah, that is what happened in 2019. Or Canada, join the call. Yeah, we need more Canadians. Do it for you, Mad. He out there running it out in Canada. He said, give me more Canadian brethren. SPY, new low. You're down 0.10 now. NASDAQ still in the green. And we are at, what, 41.15? So, again, watch like 41.13-ish. And then we get back to the 41.06-ish or 41.03 to 4100. Powell, you didn't like the video. So, like, go up and answer the poll. And you'll see what it says, man. That's crazy. That's crazy, man. Yeah, one more month. We're already halfway through 2023. I feel weird about it. I can't believe it's already halfway through. I don't like it. I feel awkward as hell. Arthur Fires, my man. Let's go. Let's go, Toronto. PNC. The refunding announcement. It's going to be for 2024. It's not too big of a deal, but in a weird way, I believe that rebuying announcement feels like we may have lower rates by 2024. Maybe a lot lower, because it doesn't make sense. Why would you rebuy? They're going to buy back their lower maturities and all this stuff, but it makes no sense because the rates are way higher. So what are you going to do with buying back lower yielding debt? It doesn't really make any sense. So we'll see, but most people are forecasting though that it's going to keep. They're going to try to keep everything the same. I think it's part of their what's it called? I think it's part of their just kind of balancing out QT, because theoretically everything should stay the same. So they're only going to buy back like a very selected amount, and then it's going to be weighted. Dollar dying. Why not buy for Friday Strangle? Sell the short to make both sides free. I would sell the premium ahead of it, because after the release, all of that premium is going to die. That's why a Strangle would be bad. Quite frankly, though, fuck the stock market. If you want to go for a Strangle, I would be strangling the bonds right now. 10-year or 2-year. Take your pick. That's it. But I think that'll be the only straddle that I think will pay, that the premium won't get totally destroyed. And then you still have, you have volatility in your favor. But I would straddle the bonds both ways if that's really, otherwise I wouldn't go. I think the time decay after, because again, this meeting's not even pricing in a lot, but it's going to be weird with that. But I think bonds, you're going to be, that's borderline easier. Only thing you have to deal with bonds is what we dealt with on Monday, where it's going to go opposite to where it should go, theta you out, burn you for a day, make you second guess it, and then it's going to shoot up. That would be the only thing I could assume. You felt that. It's good, man. That's how I feel. I like the bond plays. I'm excited. I'm going to probably trade the bonds a little bit more than, because I was thinking we could get a futures plays. Those are nice on Fed days, but I think bonds are just, that's it, man. That's where it gets nuts. All right, you're selling off one more time here. It's trying to air brake. I mean, you've been doing these levels pretty slow, but it's slowly working its way down now. And this is where we flushed yesterday a couple of different points and even got a little bit of support here. So pretty interesting level, 410.40. Amazon, sadly, I'd want Amazon in the $80, maybe even lower for the long term. Why did you say we went up last meeting? Didn't we dump after Powell spoke? I don't think so. If it was February 1st. No, yeah. No, we went up last meeting. We died 2 days later. No, even the next day we went up. I mean, here, just chat. Here's the chart. You don't need to, like, there's no, just, you could go back. I encourage you to go look up February 1st, 2023. Where is it? Right here. So here's like the week after. So here was the Fed meeting. That was Wednesday, February 1st, 2023. The stock market closed the day before at 40.77. Oh, was the last? Oh, March. You're right. There was one more meeting. I'm going off of February. Okay, that makes sense. Oh, why was I going off of February? I forgot we had the March meeting. So March meeting, we did nothing into Powell again. You actually bounced up, sold off, did nothing. Then you shot up, then you dropped, and then, yeah, then we died. Senioritis. No, I might be, bro. Something. That's weird. Well, I'm going off of February 1st for some reason internally. All my eyes are on February. Yeah, so that meeting, it did end up dropping. Thank you for that correction. And then February was the one. Both February and March, the market did nothing leading into the report. It did moves, but you were pretty much at the same price as open. SPR, Spirit Aerosystems. They're dumping right now. Watch Boeing too. SPR on the low. I don't see anything. The biggest, yeah, SCP was the biggest difference. What was it then? That's not good. I don't think it was the bank issue. What was it, man? It was the pause announcement that made people like it, the change in language. But what was the reason it brought us down though? I want to say it was something regarding the data or the jobs, and then we responded to CPI afterwards. Yeah, SPR is dropping now. QURE on the high. Yeah, he said no pause in the future. Appreciate what you're doing. Scooper 2 of pre-workout on me. Amen. Honestly, bro, that sounds really appetizing right now. Why did you say that to me? I kind of want a pre-workout. I feel like that'd be fun ahead of the Fed day. I would love to watch the bonds while I'm itching because of niacin. Honestly, that sounds really exciting. I kind of might do it, maybe. I don't know if I have any left, though. I've already ate all the send in the Jets. Yeah, bro, nothing like trading the bonds with a little bit of an itch, you know? So it's getting high in here. That beta-alanine. Oh, I have an Alani Nu. I got one. No, I have. I'm going to crack one. What time is it? It's 8 o'clock? Oh, fuck that. Why does it? Damn, it's moving slow. We have a long day ahead of us, Chad. Hold on. Damn, you just got me excited. God bless you, Key Fob Rob. God bless you. Thank you, my friend. You inspired me. You inspired me to get some pre-workout at 8 in the morning, man. I think I have a problem. That's beautiful. That's beautiful. Did you ever try ephedra? I have back in the day, like hydroxycut, bro. Hell yeah. Dude, hydroxycut used to be the OG Ozempic. And then, back then, even the hydroxycut companies would all do good, bro. It was actually very exciting back in the day. But nah, that stuff, that was just like ghetto caffeine. $10 a.m. in Texas, you good. Yeah, you good. Yeah, ephedrine-free hydroxycut. Nah, y'all should have kept the ephedrine. No, dude, it was like ghetto Adderall. That's what it was. Goldman Sachs appoints Kim Postnet as global head of TMT Group. Powell's statement comes out 2 p.m. Eastern. Love you. Thank you for what you do every day. Love you. Let's go. Chest to the sun, baby. Amen, man. Nah, bro. Thank you guys. For real, man. Let me work today. Let me give you guys the info. Let me give it to you in real time, Hopefully you understand. I do not warrant the accuracy of anything. I could be wrong. We live in a very, crazy time here, But let me work and give you what I could give you on a Jerome Powell day. Because I said it yesterday, bro. I was just coming back from the bathroom. I'm looking at the chat. I'm seeing like y'all talk about the day and reminisce, and it's like you guys have given me a gift. I cannot explain it in words, bro. It's a beauty to be able to be here. I'm grateful for the opportunity. You have no idea, and it's like I love it, man. We're vibing, and so thank you. You know, please don't even thank me. Let me give you something back here, and I hope we could do it today. So. God bless you all, man. Shout out to Chaz, the real ones, you know? Even if you a fake one too, man, you're part of the memories as well too. You know what I'm saying? Even if you fake, bro. Like, that's what I mean. That's how positive I feel about it. Even the fake ones got memories with us. You know what I'm saying? And it's good, man, because not everybody got memories. And if you got good memories and could look back on them, you know, that's a life right there. That's a life right there. Oh, I hope they feel me. I hope they feel me. Yeah, man, and I know straight up too, a 1,000,000%, and just everybody evolves. You know, I've seen people go forward, I've seen people go backward, I've seen people stay the same, but a majority, I've seen people, the mindset just evolves, and you know, and we all been working and growing with each other and learning off of that. But like I'm saying though, in a very weird way. You got memories. I know I do. At least I do. And that's why I'm like, man, we cover so many things in a day. And we have so many just little memories throughout the day of what's been happening. It's like, that's a blessing, bro. So I feel good about it. So thank you. Your thank you has inspired my thank you. So thank you for the thank you of the thanks that inspired the thanks, you know? The lurkers. Yeah, the lurker, man. The lurkers. We love the lurkers. They already know. There's not. I won't even differentiate between the lurkers and a real Chad because they real Chads. They still there. You know what I'm saying? Amen. Appreciate you. 3 years in, no membership, but plenty of love. Amen, bro. That's fine with me, man. Let's keep going. Let's make some more memories and let's make it till the end, baby. You tell people all the time about the channel. That's dope. But I was thinking about the other day. I was like, I like it, man. I like giving you guys news, and I like making you guys the guy that your friends go to. It's fun. I like it. Because you know what I'm saying? I feel like there's some of you out there, you get the info. You are just naturally like 10 steps ahead of all of your peers who don't know anything about it. And I love it. I love that you get to be, you know, equipped with the info. So amen, bro. Amen. Amen. Bop. Yeah, they get the news 5 to 10. Yeah, you know the vibes. All your friends 5 to 10 business days later on the news. I feel you. They're like, did you hear about Microsoft earnings? Yeah. What? I said, give it a week. You'll start hearing the debt ceiling. Amen. Amen. Bop. Tesla. Well, my job hit me up still. Amen, bro. Amen. It's good. Just spread the love. Spread the love, bro. Spread the love. Apple is on the low all of a sudden. What happened with that? And then even the SPY 2 Dash is on the high. I don't know if Uber just hit a 52-week high. Still up there, actually. Now just power. Birthday was last Friday, baby. Turned the big 30. Paid off all my debt. Love you all, baby. Horn. Hey, man, bro. Big 30. The trade sage. And no debt, bro. Congratulations. That's always exciting. That's the mental freeing of debt is always a good one. And if you have yet to get there, you will one day, and you'll know. So we're rooting for you. Please do some president talk. Like you want to talk about the debt ceiling and the negotiations of what could potentially be one of the biggest, but not biggest, black swans in the world. Or do you want me to talk like this, huh? I tell you how my day was. I can tell you how my day I was doing. I did a lot today. I woke up in the morning and I looked at my phone. I went back to bed and I woke up again and I pooped. It was a good poop. I had a great poop. I said, "Wow, Jerome's we're gonna bring you home to an economic recovery, huh? That's what we gotta do." So that's what I'm gonna bring about there. So I told him, and I said, "Jerome, you better saddle her up there." I said, "Come on, you better get the rates under control because we're resilient, huh?" Oh, that's what you wanted. Okay, I'll talk like this. That's fine. I mean it, seriously. Do I take Adderall? If by 30 milligrams of high-low ticker daily, then yes. Otherwise, no, because Tiva ran out. And honestly, Adderall is just confidence adjustments, and I have a pretty decent amount of confidence already. Honestly, I should probably, some people say I should take something with less confidence, and I should take something to make me sad, but that's why I don't drink, because alcohol is a depressant. So, yeah, I'm just fully dosed up on that. Oh, Estee Lauder, that's like a 5% recovery, but I get all my dosage from the high-low ticker. Uber just went up and then it just dropped because it couldn't hold. They actually had the last Uber earnings were very good. Everything has been very, very good. Trying to go to Australia, you could get round trip for 40,000 points. That's really cheap. But no Australia for me. I'm trying to go to I'm really trying to go to Egypt, bro. But wasn't it about Tesla? Oh no, that's not related to Uber. Yeah, but Estee Lauder coming up. SPY a little. Bonds are still holding. Manu and NCLH up. General Mills is up on the high. General Mills actually kind of popping there. Turkish Airlines. You could definitely make the dollar stretch. They take advantage of people like you. Maybe me, but like, you know, I have more family that lives there than in America. That's what my mom said. Bro, I even told my mom, I was like, can my girlfriend come with us? And she went, no. Haram. She said, you cannot stay at hotel with somebody and you have different last name. No way. She said, don't you forget your family all live there. I said, what? I said, what do you mean? She said, they will want marriage certificate. You need marriage certificate to share the hotel room. What do you mean? Your whole family live there. How dare you? I said, what? I said, what? I was so confused. She was tripping out. But yeah, most of my family's there. So like, I think I got the plug. I'm in tears right now. Yeah, so is my girlfriend. She thought I was just lying to her because I didn't want her to come. She's like, if you don't want me to come, you could just tell me that. I'm like, no, bro. So I'm serious. This is what I was warned about. I did not even know. Like, wait, hold up. I said, man, this is crazy. So yeah, so she was crying about it. She was sad. That's why I got to go to Australia. Dude, 40,000 points for that round trip ticket that's a deal. That's like less than $400 equivalent. Nvidia's coming down a little bit. Tesla's now coming down after leading. AMD back down after a little $2 push. You could be fine. You could stay there. I've been Egypt twice. You've been there twice? That's dope. But my mom was just saying because of our family and stuff, and it's not. She said it's heavily looked down upon. My mom asked me if I was insane. She said, are you insane? KRE, if that, oh yeah, gave up about 1%, maybe 2%, I think. I want to see the ancient stuff. I just want to see it, bro. I'm really like, I think it's time. I gotta go see the motherland, bro. You know, because I saw something and it made me like, it was very sad, bro. It was very humbling, but it was it made me like very, very sad, bro. It's weird because, like, you know, I love America, bro, and God bless America. And I always say it, bro. The opportunity that we've been presented in this country. I was born here. My parents weren't. And it's like, it's wild. But I saw this, it was like this fun fact. And it was like, based on like the average wages, how long you would have to work to make $1 million. That's what it was. And it was going over every country. Like America, it was like 12 or 15 years or something. And that doesn't even sound real, but it said 12 to 15 years. It said like Germany, 15 years. It was going through all of these countries, right? And then they got to Egypt. Yeah, you saw that video. Bro, I got sad. I was like, I don't know, like the room started spinning and it was like an out of body experience. I was very humbled by it because then it got to Egypt. Egypt is 684 years. And I was like, that's so wild that my mom was just there and my dad. Like, wait, what? So it's about average wages in Egypt. To make $1 million, you would have to work 646 years. And that's why I was like, damn, bro. I was like, you know, I want to see this play. I want to see where we came from, bro. We need to see the motherland now. Yeah, man, we're very blessed. That's like, it's crazy. I'm telling you, like, most of my family still lives there. So it's just like, that's a very, very trippy thought. Uber. Let's see. Bonds are still up. Masri. Maybe Egyptians don't believe in earthly worries like money. Nah, man. This is like government. This is like balance of trade, natural resources, macroeconomics could be the reason. Everybody uses money. I mean, nobody would willfully be like, I wish we had a lot of poverty and very low wages and high cost of food. I think because we don't like money, so we'll pay a lot for stuff. Yo, what the hell? Yo, what the fuck? Uh-oh. I just realized something. What the hell? Ooh, this is creepy. Bro, my bracelet is not on me. You know that bracelet I wear? The TOT bracelet? It's not on me right now. It fell off. That has never happened. I was like, wait a minute. How comes nothing's pressing on my wrist? Oh, no. I don't know where it went. Did it fall off while I was sleeping? Is that an omen? Is that, yeah, maybe TOT. That's weird. Very simple. No, bro, this is, I don't know. I might have to go check. What in the world? Habibi. Playing X-Files theme song. It's a sign. Another hit. That's actually weird. You didn't know? I had it on the watch list. I remember I had it. Interesting. Euro close in small hands. All right, here, let me see. That's funny. That's actually funny. I don't know if it's a bad. I take it as a positive omen. Zelensky, we did not attack Putin. We'll leave it to tribunal. All right, follow me on Instagram. I'll be right back at the trading fraternity. Get ready for Powell.
Stocks today. At a headline level, nothing's happening, basically. We're waiting for the Fed, waiting for the ECB tomorrow. We're going to talk about the ECB in more detail in just a moment. It's definitely been eclipsed by what is going on in the banking sector and with the Fed. So European stocks basically doing nothing. Below the surface, there's a little bit more excitement. The earnings season continues and is providing, I think, quite a lot of color as to what is happening out there. This is the choppy session that we've had, but as you can see, it signifies nothing. We're going sideways. We're waiting for that signal to come from the central banks. The macro story is back and I think is dominating. It's eclipsing what is happening with the single stock story. But the single stock story is still there. So let's dig into the sectors and figure out what is happening. The miners have come back today. As you can see, we're up by 0.9%. Food and beverage, that's defensive. Construction, that's hard to get a read on right now. The luxury sector's bouncing back a little bit, but has been beaten up sort of coming into this week. I don't think, again, there's much signal. Energy is the only real story that I think is interesting here. Energy's down by another 0.9%. The oil price is rolling over, but for how long? We get Shell numbers tomorrow. Pay attention to what is happening there. Single stocks, so I think there's some interesting stories to dwell on here. Lloyd's down by 3.43%. It's always an interesting gauge as to what is happening with the UK economy. But I think today, actually, I think the story is what is happening with that rates narrative. I think we may be getting to the peak or have had the bulk of the benefit from the rate rises that we've seen coming through. Maybe the net interest margin story is beginning to fade. The NII is beginning to fade a little bit, and the best is already in the price. Certainly that was maybe the signal today. Airbus down by around 0.9%. The real competition for Airbus right now is what is happening in the supply chain. It's not what is happening with demand, it's what's happening on the supply side. And that continues to constrain Airbus, and it's a significant and ongoing issue. We've got IATA coming up in Istanbul. We've got the Paris Air Show coming up. I'm really looking forward to getting some answers onto what is happening with that supply chain story. But Airbus down by around 0.9%. And in some ways, it's an interesting read across from Airbus into Stellantis, the car maker. That stock down by 2.18% today. Basically, the signal there is that the supply chain is easing, therefore more cars are becoming available, but this is meeting a weaker demand story, particularly maybe in Europe. And that, I think, is an interesting narrative that we need to continue to watch out for. Really, obviously, supply chain constrained through the pandemic, but that's starting to ease up a little bit. Stellantis is down by 2.18% today. Tomorrow, though, we get a whole raft of auto earnings as well. We've got VW out with numbers, VW and BMW both out of Germany tomorrow. On the shipping side, we get Maersk, which is also an interesting kind of read into what is happening with the global economy. We get Shell, we get Equinor. So that Shell story, I think, is going to be fascinating. As I say, the auto story, Novo Nordisk is going to be out. AB InBev is going to be out with numbers tomorrow. So the earnings season continues, and we're going to continue to watch what happens with these single stocks. But we're probably tomorrow, I think, going to be dominated from the fallout from the Fed. And Alex, tomorrow is all about the ECB, that ECB rate decision. How much more hawkish than the Fed will the ECB sound?
Price that. Totally agree with you. Let's get to it. ECB tomorrow. We're joined now by Jens Eisenschmidt, Chief European Economist at Morgan Stanley and formerly an economist at the European Central Bank. Jens, what is the path of least resistance tomorrow for the ECB?
Yeah, first of all, thanks for inviting me over.
Thank you.
ECB will,
ECB. Everybody in the ECB. Put your mother. I found it. We're good. And then I did something else, too. I grabbed in Alani Nu. We're going pre-workout, Chad. Let's go. I'm excited. It's Powell Day. Oh, yeah. It was right next to my bed. It didn't even break. It just opened. It was very, very weird. It was just right next to my bed. I was like, man, that's crazy. Wait, I have 50 gifted memberships from Co-Real Estate? Oh, baby. Oh, that's why, because Co-Real Estate at 6 p.m. Oh. Amen, bro. Amen. Let's go. 6 p.m. tonight, Chad. Every person that is in there has gotten there because they heard. That's it. They heard 6 p.m. one day, and they went. They heard all the real estate talks, and then they went. And then they finally did it. So that's tonight, man. That's it. How can they hear if nobody tells them? How could somebody tell them if nobody was sent to go and tell them? You see what I'm saying? How can you do better if you don't hear that? Oh, my, that's the whole logic. So there you go. If you hear it, you hear it. Hopefully we see you there, baby. I haven't even sipped this Alani Nu and I'm hyped. So just get ready. Get ready. Schwab dumping. Regionals were dropping earlier. Microsoft recovered a little bit. But regionals still up 1% on the day. WTI. SMCI is still up 26%. Absolutely insane. I think AMD down 8. That's a little bit more than priced in, but a borderline right there. SPY call premium died. It's because you bounced, but you didn't bounce as fast as we went down. I think that could be it. What time is Powell? Man, you didn't like the video. You didn't even vote on the poll. That's crazy. Check the poll, and you will find the answer to your life. Not your whole life, but some of it for today. What's a good ETF that's levered and will rise if rate rises? So inverse of yield. TBT. Or no, I don't know. I think TBT goes up. I think, yeah, TBT goes up when yields go down, I think. But there's TBT, TMV, TMF. Those are the levered plays. Just figure out which one. I'm not thinking on top of my head right now. I'm at work. You did vote. Well, it says it there. Like the video. Jerome is at 2:30 p.m. Eastern. If you ask, you didn't like. That's what it says. So 2:30 p.m. Eastern, sir. XOM, they got, well, oil has been getting washed, but the oil companies did good on their earnings. XOM had a record profit, or Chevron did. Oh, that's my tinfoil. I got tinfoil. Well, give me 50 likes. 50 likes. We're almost at 1,700 likes, Chad. If you could hear my voice right now, if you have love in your heart, if it's a beauty, because it's a beautiful day outside. I don't know if you saw the sun. You should go outside, smile, like the video. I got something for you. I got something for you. I have tin. I got my little tin foil. It's kind of weird when you think about it. Okay, are you ready? Here it is. Here's my tin. It sounds kind of funny. But when oil was at like those highs in 2022, are you ready? The oil companies, they were giving us a discount. So when gas was $7 in California, that was a discount. Why do I say that? Because now it has been 9 months of oil down over 50% from the highs. And the price at the pump is borderline the same price when oil was at $100. So think about it. Right now, oil is trading half the price, but your gas price isn't. It's now back up. So in a weird way, again, they're making record profits. So by that logic, I'm just assuming if they are making more money now with lower oil and the gas price is the same practically, that means they weren't really selling it for that much more at $7 when oil was $120. So there it is. Again, I said this a year ago. SPR release does not affect you in the United States. So our reserves, the Strategic Petroleum Reserve, it's mostly sour crude, meaning it has a higher sulfur content. And higher sulfur oil is used in India, China, and the East. We don't use that as much with our engines and everything else we got. So all of the oil that gets released from the SPR, I would say virtually none of it hits the United States. It gets sold and then goes overseas. So this was just, whatever it is, the point is, I mean, the price of the main commodity is down tremendously, and the gas price now is relatively the same. So if they were charging us a little bit more when oil was double, my logic was they were giving us a discount. Thank you. I rest my case. I know it sounds freaking ridiculous. Wouldn't that be a balance of trade thing? Nah, realistically, it's refining and transportation. So it's not like, it just kind of shows that there's more to oil than the price of oil, at least for an oil company. Or again, and even then, these oil companies still have the ability to turn record profits even if the price goes down. But yeah, demand destruction plays into some of it, but I mean, you don't think it's weird that the price of oil is down so much and, you know, the price at the pump isn't. But again, that's refining, that's transportation, the working, getting it there. You know, again, even the ethanol shit they're bringing about, there's a lot of different factors that could make sense as to why that's occurring. But I just thought it was a funny observation. Mm-hmm. You know you don't believe that. Well, that's the reason. That would be the prevailing logic, but the point is, I just think there's like a minimum oil price at the pump, and everybody's going to charge it no matter what. So we thought it was high when the price of oil was high, but apparently that minimum production price might be way higher even without oil going up. And then it helps me feel a little bit better about paying $7.70 for a gallon at one point in my life. I told you that I paid $7.70. It was like $7.70 or $7.90. That was my top tick on gasoline in 2022. It was a wild moment. I didn't make any plays on Apple. No, I think they already moved a decent amount. Like they're still up 0.65 after selling off the high of the day. VIX one day at all-time highs, 10%. So, you know, like people have made an extrapolated VIX one day. So even though the VIX one day is brand new, some people have made an extrapolated version. And that's what I was saying on the watch list here is that coming into this meeting, this is the least amount of pricing for a Fed meeting. And then even if you look at the extrapolated VIX one day, the volatility is even pricing in lower. So the VIX one day technically wouldn't have been this low ahead of a Fed meeting any other time. All right, little pop. I mean, it's 8:47. I think February, it was like 9:20 when we started moving. Even yesterday around then, I was like 8:30-ish. I forgot we did have Euro close. We have been going up since 8:30. Kind of like yesterday, your drop wasn't as big. Airbus first quarter EBITDA, $773 million. Estimate was $820. Watch Boeing. They might go up or down. They might go up as a sympathy or down as a sympathy. Again, Airbus earnings are coming out, and they confirm full-year guidance. This FOMC will be a dud. It could be. But then again, it's like if it could be a dud in the sense I think the statement stays the same. But you got to realize if that statement stays the same, which would help lead it to a dud, the problem is that would be a disappointment. So I don't know how people are going to react to that. Because then a lot of people wanted that pause announcement. So you will get a reaction off of not getting it. But like I was talking about this whole week, this isn't the big one. The big one is in June. So I could get behind not, going too crazy on this one. Eli Lilly's hitting a high. Again, they had the Alzheimer's drug today. They're coming back up now. U.S. stocks trade steady as investors brace for the Fed. Trading little change following a loss on Tuesday. Investors are waiting a Federal Reserve policy decision. S&P rose less than 0.1 in New York after plunging 1.2 on Tuesday. Regional banking stocks, including PacWest and Western Alliance, inched higher after heavier losses this week. Investors are bracing for a volatile session as the Fed is expected to deliver a 25 basis point hike increase and signal a pause in their aggressive tightening campaign. Market watchers anticipate the central bank will stop raising rates as tighter lending conditions and signs of a slowing economy suggest inflation will cool more meaningfully in the months ahead. The Fed must now pivot away from promising further hikes towards a more neutral stance, or we could see further turbulence in financial markets, particularly those in regional banks that still look vulnerable. Senior market analysts at Uwanda wrote in a letter to clients. They're stressing the banking sectors are a headache for Fed officials. BMW decides on share buyback of 2 billion euros. As they weigh on financial stability concerns against stubborn inflation. The ADP data this morning showed private payrolls increased in April by the most in 9 months, highlighting a resilient labor market even as the economy cools. Rally in U.S. equities, supported by better-than-feared earnings and hopes for a less hawkish Fed, lost steam this week amid weak economic data and concerns about the banking sector. The sell-off pushed the CBOE volatility above 18 after it spent most of April near a 16 handle. When it comes to thinking about the potential for further hikes from here, I don't think the Fed wants to keep the door open, specifically given that the fact that the economy has been quite resilient, said Madison Fowler, global strategist at JP Morgan Private Bank. Whether the last hike is today or even in June, we're nearing the end of the Fed tightening cycle. And then chips, food, and regional banks are the sectors in focus. Boeing, Eli Lilly's coming up. Uber about to get to 38. Boeing just went negative after being green. If they did pause, are we fucked? No, but we're getting close to it. I mean, it's wild. I mean, I was saying, I was just even telling this when I was having that conversation with Lending Tips, because I was saying, I acknowledge what he's worried about, and I could see it, but also at the same time, time is of the essence, and time could have a dramatic difference on everything. And what I was saying there is that it's just like, it was almost 12. We're 2 months away from 12 months ago. I gave you a time frame. So it's one thing, was I right about it? It looks like I am, but I don't even care about being right, because I'm like, why is that timeline holding so good? And what I'm talking about is the yield curve. Right when the yield curve inverted, I was saying how, again, give it 12 to 18 months. Once it fully stays deeply inverted, that is our clock, and that is when the clock started. So now, based on that timeline, which is playing out perfectly, and why I say it's perfectly, because you're telling me I am 2 months away from my 12-month target, which is the first point, and now we are at least 2 months, or even today, could potentially be our last rate hike of the cycle. So it's moving in line. So if we got a pause, I think it would be initially bullish by people, but then that means that timeline is pushing up if we got a pause, because then that means the yield curve, the yield curve will start to normalize. So if we do get an announcement of a pause today, you will watch the inverted yield curve, the 2 and the 10, you will watch it normalize. People will buy the 2-year, and then the 10-year will either stay the same, or maybe people buy that too, but you will get a bullish steepening on the curve. So, or even flattening more or less. So that's where it gets quite interesting. So if we pause today, it would be a surpriser. People would take it bullishly for a little bit, but in my context, that would mean the time frame of the recession, it just got closer. But I'm still on that. I think pretty much the next 2 to 8 months now is really, that's where I'm at. Or is it 2 to 6 months? 8 months max, 2 months minimum, pretty much. Fed is hypocritical. They allow normal people to suffer as interest rates hike. It affects bankers and friends, then they cool off. Sadly, yeah. They're like, we want people to lose jobs. They're like, sir, a bank is about to go under and lose 45,000 jobs. Not them. Just not them. Just anybody else. Okay, there's another bank with like 15,000 employees also. Is there anything non-banking? Is there anybody, can we like fire like teleprompters or something? No? Okay. No, I don't know. And then we're just chilling. Bonds. Eli Lilly had the move. Boeing dropped. Uber hit $38, actually. That's crazy. All right, so get ready now. Maybe we do get our squeeze. If this could actually hold on Uber, I mean, now you're, again, $38. I think 39 bucks, 40 bucks is your next level of support pretty much. If as long as 38 doesn't give it back up. Here's Uber, 38.13. The possibility of recession, I think recession is borderline almost guaranteed at this point. The question is when. That's why I'm saying 8 months max, 2 months minimum, and maybe even the maximum if Powell finds a way to artfully buy more time. We'll see. Yeah, Uber's running, though, above 38 now. Not only a 52-week high, but, I mean, multi-year level. I don't know. The covered calls might be the price of last earnings. Yeah, now the covered calls are negative. I was positive on those earlier, but now we have 20% gain on the shares, which is actually quite big. Uber, Spotify, IRM. Good for you, Uber. And then SPY at VWAP. Bowen bouncing a little bit. I did not sell Coca-Cola, no. We still have it. Are you not scared of getting assigned on covered calls? No. No, Netflix pop, Meta pop. Netflix 319, Meta 241.31 at the high. So Meta's breaking up here. Bond pop for now. Bonds are still doing, again, another 0.5% almost is crazy. Dude, I'm like, I don't know how I feel about what we've seen in bonds in the last 48 hours. I know what we witnessed and I know why, but I'm just like, my confidence as an investor after watching bonds over the last 48 hours, I'm definitely not like, I am not okay with it. And I'm just like, okay. So we'll see, but it's so far, I mean, I think after today, the bonds are going to move, but it's going to be tricky, and it's already just tweaking out. But yeah, Meta's moving up to the high right now. Melly, I think they already had earnings, or they have earnings after the bell. Mercado Libre. And then SPY, you're right near the opening candle, I believe. Yeah, this is right where we open now on the day. And we have what? You have 2 hours till Powell. 2.5 hours till power, 2 hours till the release. My concern with the bond volatility is that it's usually with like bigger macro factors, the bonds are very sensitive. Like usually equities can be delayed, bonds will usually respond immediately. And just after what we've seen here and this back and forth with both the debate and then what happened with FRC, the bonds they're moving not really tied to anything, and then it's moving at 1 to 2% every other day after a large event. And that's just very, very weird because 1% moves are not common, and it's doing it back and forth. But now 2, in how it's responding to macro events, it really shouldn't be delayed like that, and it was. And that's what has me a little bit weirded out. And then go look at the MOVE index. It's now, after dropping for a couple days, it's starting to come back up. And then when we zoom out, bond volatility is pretty much still at the breakout level of the highs. So with everything going on, if the bonds aren't going to be responding as they should, and then you're getting 1%, 2% back and forth, it's going to be hard to read signals. And that's why I don't like it. And then SPY right at VWAP again. VWAP and right where we open. Nvidia.com. Tesla. Microsoft at the high. Eli Lilly still. If your cover calls and long terms in the money close to expiration, do you roll them? Yes. Or it depends what it is. And someone asked, they're like, why aren't you worried about your calls getting assigned? With the long term, I make sure I sell covered calls above my strike price. So at this case, 47.5. If this ever falls into the money, I'm guaranteed 50% on my position. So that's fine with me. Because then I could either roll out of it, or even then I'll get paid and then I can just buy right back into it. And then there's Biogen. They sold off. Tesla's holding. Suave on the high. That one's a crazy one. Uber's still at 38.14. 2 hours left till Powell, till FOMC. And again, FOMC statement, hopefully you know what to be looking out for. It's simple. All we need to look out for is the word sufficiently restrictive. If you really don't even want to focus on the other one, but that's it. As long as if sufficiently restrictive shows up on the statement, that's going to be very bullish, and then people are going to react. Otherwise, we should be looking for Powell to talk about sufficiently restrictive during the press conference, and that could be what leads him into talking about a pause. Can Uber hold up? They can hold it up, but again, my thing with Uber is I've seen it not hold up. So that's what you got to be careful of. But again, Uber has stayed flat for multiple years. This is now their like second or third recovery quarter in a row. So, I mean, I've saw like Uber's actually doing very great on their earnings. Like if this was Meta or something, this thing would be up 100%. And it almost is from here if you think about it. But it could probably hold it there. But then again, intraday, it's a very volatile stock. So just don't get too crazy. I'm still holding my shares. I'm up like 500 on them right now. All right, SPY moving up, bond staying the same. But let's see if we get above here. I don't know what price this is. Probably 41.17. No, 41.25. So 41.26 is a baby level. 41.26 to 41.33. That's the other level here. We'll see. We're done. We're done. I'm still in MCRB. It came back up quite well. So we're still down on it, but we were down way more following the approval. And so hopefully it just has the delayed reaction. Actually, let's see. Okay, there's Ionis, DSNKY, McRib, and Ascend. So right now, we're down $150 on Ionis, $72 on Daiichi. And then we're down $200 on McRib, and then we're up $560 on Ascend. So out of all of the PDUFAs, holding them before until today, we pretty much have like what, a $200 net profit. We're down $360 on those two, or maybe no, you made like $100, $100 if we sold off everything now. Give him the... Yeah, again, Ascend is going crazy. I do not eat breakfast, no. So not bad. The bio, they didn't move like too crazy, but at least we got something out of it, but kind of uneventful for biotechs in that whole little setup. Snap, we're down a decent amount. I did have a decent in there. What is it? We're down 6,800 on the long term, but then we've realized like 3,500 in covered calls. So net, we're probably down about 20% since purchasing. And that's on the bigger account. The smaller account, no covered calls, is down 30%. So could have been better, could have been worse, but at this point, after suffering the losses from 2022, Snap just doesn't really, it's in our portfolio, it has size, but it's like you've already suffered all of it. So it doesn't really like move us too much considering how much other stuff we've gotten. We're going up a decent amount here. Ionis. I think I'm gonna sell out of Ionis. We'll take the loss on Ionis. I don't like that one. That one's down 160. That's the biotech. So I sold out of Ionis. What's the other one? Then I'm gonna sell out of Dauchi. $70 loss. And then I'm gonna keep McRib and Ascend for a little bit. Those are the two biotech plays. Big pop on Wall. Even the market's going up. ANET too. They had a very big drop yesterday. And bonds, I think the 2-year, bro, 2-year is moving more than the 10-year, it looks like. It's just holding up that way better. 10-year's up 0.10. No, Gimda, we sold out. Remember, we made like $1,000 on Gimda. We had a very nice flip on Gimda, so I was just in and out on that. Adding some AMD. I would try to flip it, but I'd kind of want to wait here until we see what's going on. But AMD, I mean, it has a lot of upside and downside, and surprisingly, you get a good price on it. Starbucks or 3M. You were going 3M in the beginning. Starbucks is down. I'm thinking I'll get Starbucks at 90. And if you could get Starbucks at 90, maybe even lower, but I just don't like how Starbucks ran up a lot. That's it. I feel like you should have gotten Starbucks a long time ago last year, but now it's like it's chasing. But it's a good company. FDIC Matt Curtin says failed bank auctions aren't competitive. Why is somebody from the Fed talking right now? They are not supposed to. And I haven't sold I sold my 10-year yesterday, and then I'm still holding the 2-year bonds for now. And Q going up. I mean, it's kind of like yesterday. We had that. Yesterday's sell-off was way more aggressive, but you've been doing the post-Euro close melt-up now for quite some time. But never mind, you get your little Clifford right there. Spoke too soon. The Aladdin lamp. Yes, exactly. Yeah, FDIC McCurtain. Oh, FDIC, not Fed. Yeah, so it's FDIC McKernan. Yeah, bro. Aladdin chart pattern. It's real. It's really real. Like PHILO time. I'm still watching Ted Lasso. Yeah, great show. Tesla working its way up. Again, we're waiting on McRib and Ascend, though. I got rid of the other two. For now, the big four is down. So when rates come down, the yield on bill comes down? Yes. Because now 1 to 3 month bonds should react immediately and in anticipation. This is what I was saying ahead of this month. I thought because the bonds bounced out, I thought it would have chilled out, but I think that's why we're watching bill get off to a slow start this month, because last month there was some of the volatility surrounding all of this. So, but yeah, once there's a real change in policy, though, bill is done. But the beauty is, like, why we could wait for now is because it's already solidified for the 1 to 3 month. You know what I'm saying? They're already, for the month, it should be guaranteed. It's usually after the next result. After they change rates or not, then you get to the next month, then they buy new 1 months and 3 months and so on and so forth. Mele. Again, Meli has earnings after the bell today. Clorox on the high alongside PXD2. Starbucks, 2 million shares just traded. Where's Uber? Eli Lilly again. Meli, we've seen it a couple times on the high. And then Uber still holding 38. I'm surprised it hasn't had its little random dump yet. Market coming down here to VWAP. Still surprisingly higher. As long as they're above 41.19, I mean, there's not really anything to worry about. 41.19, that's what opens up the floodgates. So this bounce has been decent so far. It's been about 45 minutes since Euro close. And then Powell is here in about an hour and 45 minutes, or at least for the FOMC. What the F? Russia's Medvedev drone attack leaves Russia no options except elimination of Zelensky and his clique. Okay, those are some fighting words. It's simple. You try to assassinate me, I kill you. Okay, good day. Thank you. I see you after Powell. If you'd like to buy dollar-denominated nothing, let me know. I will sell you gold-backed currency backed by China. Please, if you're interested, contact me now. Your dollar is paper. Why? Please join the BRICS. All of you Americans say dollar is no longer good. So please, let me pay you in a ruble. If you would like, let me know. Contact me today. I will mail you a ruble with pigeons. I send pigeon carrier because that's how we bypass sanction. And then you take ruble and give me product and service for ruble. Backed by gold. Do we have a deal? Okay, good. Perfect. Why you laugh? I thought you guys like dollar brick system. Come on, I thought you said it's collapsing. Come now, limited time only. Pigeon later, better than Fed now. Much more reliable. and privacy. Very good. Pigeon, don't read your text message. Simple. Uber. Again, right at VWAP. Bro, Uber's hitting another high. This is crazy. We'll let him do his thing, bro. Let him do his thing. Alrighty, Chad. And you know I love you. It's going to be a good day. Let's make it a good one. But I need to go potty again. So follow me on Instagram at the Trading Fraternity. I will BRB. And get ready. Hour 45 minutes, man. Hour 45 minutes on the dot. Yalla. Okay, I'll be right back. See you later. Okay, that's loud. That's a loud commercial. Is it too loud? I think
Let's
it's good.
talk
Oh, that's good.
artificial intelligence with AI pioneer Geoffrey Hinton leaving Google and adding his voice to a growing chorus of experts, really warning about the dangers of AI. But what does this mean, his departure for Alphabet's efforts and its DeepMind AI lab? Well, DeepMind CEO Demis Hassabis sat down with Bloomberg Originals and talked about how the industry is not just losing people, but also attracting a lot of talent. Just take a listen.
It's an incredibly dynamic field right now. All sorts of new things happening, research going on. Literally, I would say in the last 6 months, probably hundreds of thousands of people, very talented engineers and others have got into the field. I think they've come from many other fields and they've decided maybe they weren't interested in AI until very recently, but they've decided this is a great growth point. And so that's brought in a lot of energy into the space and a lot of dynamic ideas. And so even for us who are, right in the middle of it, it's hard to keep track of all of that at once. So you have to try and take into account and look at the main trends and the main threads and sort of focus on that, I would say. But it's almost like you need an AI system to help you keep track of all of the developments that are going on.
Google DeepMind CEO Demis Hassabis, and you can watch more of that interview on Bloomberg's Originals AI IRL and stream new episodes Wednesdays, 8:30 p.m. Eastern, 5:30 Pacific time. Let's keep the conversation going about AI with Sequoia Capital partner Konstantin Bühler, who's been immersed in the world of AI for a decade already. We've got some catching up to do with you. That was an interesting move because the history of AI is very closely tied with DeepMind. They've kind of brought Google and DeepMind together. You heard Demis there. Can I just get your reaction to the landscape and that in particular?
Absolutely. First, thanks, Ed, for having us. It's a pleasure to be here always. So we are in the middle of an incredible revolution in AI. It is probably most similar to the personal computer revolution of 40 years ago. And Demis alludes to this briefly in his comment when he says we're in the middle of something very big here. Why do I say personal computer revolution? Because of the impact it's having. Imagine right before the personal computer revolution, you were a typist. And every time you made a mistake, or you had to make a change, you'd throw away the paper.
Right,
you'd have to
hear the clink of the typewriter when you explain.
Exactly. You throw away the paper.
Now you
have to
do
put
nothing.
a new one in. And you have to start all over again. And then the personal computer comes around. And everything is faster, it's easier, it's way more streamlined. But there are some changes. There's some retraining that needs to be done.
Interesting. Well, AI. That's been 2023, the year of. It's been 5 months we've been hearing about this shit now. I say all with ChatGPT. Already had its first victim. What was it, Chegg? Look what I can do. I want to abandon Fourplex, but it's in probate. How do I go about it? Contact whoever's managing the probate, the family or the lawyer, and you could get it. You just have to go through probate, and then you need the approval and all of that. It could probably be a better deal. They're probably motivated if it's still abandoned in probate and nobody, most people don't want to deal with it at that point. I don't know. AI, we'll see. I was thinking about the other day, though. It's like, it's crazy if they do, if all this AI stuff, if like Meta and all the, like if the ad companies can start to use AI to target ads better than their privacy invasions, then that's it. It's going to be the second wave of all of these ad companies getting involved in the newest technology, but it just seems so early. I don't know. It's going to be very fascinating to see who survives the AI stuff, like which AI techs will become the next big dogs, which big companies actually act on it. But in the meantime, all we care about is interest rates. If someone left me a house through a trust, can I still get a FHA loan for my first home? I believe so. FHA is not necessarily like a first home buying thing. You can only do it one at a time. So like if you got a FHA loan for your first house and then you sold it, and then like 5 years later you still qualify for FHA, you could go get another FHA loan. You just can't have two of them. That's it. So yeah, you could keep getting a FHA loan over and over and over again, believe it or not. It's a restrictive loan though. Even though the down payment requirements are very low, which is why I like it. The part that sucks is that it's a very expensive loan. You got to pay fees, mortgage insurance, all of that stuff. So yeah, you can. Yeah, FHA, you have to own or occupy for at least 12 months. No, but even then, even with I didn't know they did that. So even with FHA, even if you get 20% down, like even if you end up paying the house down or whatever it may be, they still make you get mortgage insurance. I thought they changed it, but apparently they brought it back. So even if you have 20% down, but it's a FHA loan, you're still going to pay that mortgage insurance, believe it or not. It's crazy because I was even, because I was like, whoa, I was like, wait a minute, I don't have any FHA loans. I was like, I could go get one myself if I wanted. But then I was looking at it, I was like, wait a minute, even if I put a good amount of money down, it's like I can't even take advantage of it, like to the point where you're still paying. I don't want to pay more interest and fees if there's no benefit. Yeah, they won't let you remove mortgage even though I'm now 80%. It's crazy. So I thought Trump changed that, but I think Biden brought it back. But yeah, you still have to, you still got to pay for it, unfortunately. If you refinance and then get out of the loan, then yeah, you're good. You just can't. If you have an active FHA loan on the property, though, you can't. You have to pay for mortgage insurance on every FHA loan. So you're stuck paying PMIs forever until you get a new loan, until you refi to a normal loan. So 3% down is the only benefit, and then I guess easier qualification, kind of, but then you're also limited in borrowing amounts, and then the property has to qualify too, which makes it a hard loan. Yeah, you have to refi to a conventional to take it out. And then SPY, that could be a little reload. XPEV on the high. XBI on the high. Let's do an industry check. Tech is actually negative, believe it or not, down 0.1. Staples down 0.12. Energy 0.9. Remember, energy dropped almost 5% yesterday and still down today. Healthcare is the best on the day, 0.53. Communications, number 2, 0.48. And believe it or not, young real estate up 0.45 is number 3. NASDAQ up 0.25. SPY up 0.13. Dow down 0.05. How much more interest rate will you pay with only 1 year of tax returns? Not much. I think maybe like 1%, but it doesn't even matter. If they'll give you a loan on 1 year of tax returns, I mean, the rates are already 11%, man. Who gives a shit if it's higher? I don't know. That's my Arab logic. Like at that point, if you mean to tell me like I only have 1 year of tax returns and like you'll give me the loan and you're going to charge me 2% higher than already 9%, I don't even give a shit at that point. Just give me the house, you know? Give me the loan. That's fine. We'll figure it out later. But that's not, if they'll give it to you, that's even better. Again, what's the down payment? That would probably be the key factor. Hang my license with the Colt. We have the Colt team. It's through EXP. So you would pretty much just hang it with EXP, but then you'd be through with us. But then it's like you don't have to, pretty much you hang your license with your own, with EXP, it's yourself practically. But hit up Trey and Tyler or come to the call tonight. They could literally get you set up with everything. What if I don't have credit history? Well, that's the thing. Your credit history doesn't even matter. Like whether you're young, like that's what the young guys do. Like you get your first credit card. You had your first credit card for like 6 months, and you're like, my credit score is 800. Nobody gives a shit because you've only have 6 months of credit history. You see what I'm saying? So the credit doesn't matter. What really matters is your income and what you have verified. So it's like if they'll give you a loan on 1 year, then that's really the biggest factor. And then if you don't have 2 years of income history, but you could prove that you are in school, they will accept 1 year of loan of income history. So let's say you have 1 year of tax returns, but you need 2 years to qualify, but then you could show that you graduated from university in that you were in college, you could qualify with 1 year, believe it or not. Birmingham, Alabama. It's cheap. But I've seen some people buy some of those cheap Alabama properties trying to flip them, and then you could end up holding it for a while. But very, very good cheap opportunities there. You just got to find the right one. That's dope. I didn't know that. Yeah. So if you have an excuse for why you don't have 2 years of income history, you could get a loan. So that makes a lot of sense. If you're like, hey, I've been working for 1 year. I just got out of college. I only have 1 year, but here are my transcripts to show you like my timeline. You know, it flows. I was in college. I was doing this. I got out of college. I made money. Here's my trajectory. Here's my history. They'll qualify you off of 1 year if you have that. Kathy Woods adds 15 million of Coinbase stock ahead of earnings. They won't care about credit history. Just 1 year of taxes and income will be good enough. If you have somebody to do that, again, you're the one who said somebody wants 1 year. So if you have somebody already doing that, yeah, but traditionally you need 2 years of tax returns, and credit history is a big deal. But your credit history, if you're young and don't have, like, if it's less than 3 to 4 years, even then that's not really a strong credit history. They're probably going to give more weighting to your debt to income. United Air plans to hire 50,000 workers from 2022 to 2025. I did my first house flip at 18 years old. That was a big thing. I'm big fan on real estate young. Always, forever. Start now. I don't know why you're waiting. You've heard it for years. No, I went to college too. Did I learn finance from my parents? No. My parents lost everything in real estate, in the real estate bubble. Like, we were borderline almost homeless after they almost lost. We were in foreclosure on the last house we lived in. They were able to get like a stop on it by doing a mortgage. What was it called? They said mortgage. They renegotiated the mortgage, I think. But got to, they've had some experience in it. We got to learn from it. And then they told me the stock market's gambling. Loan modification. There it is. Yeah, I did real estate in college. 100%. That's why I said, you could do it, bro. College, you have a lot of time. Y'all could start right away, and I'm sure you could do whatever you want. 41.28. So, again, 41.30 baby level. Realistically, 41.33, though. G7 to warn China against using force to alter status quo. LT can do the 1-year tax loan. Well, do you have did you go to school last year? Do you have school history to back it up? That's the only way if you could do it, but I'm sure he can. Hit him up, and other lenders will, but we just got, as long as that's the actual scenario. You're in school right now? Yeah. Then hit him up, see what he says. But even hit up any other lender should be able to do it too. Or at least we'll figure it out. All it takes, 1 or 2 lenders, have them look over everything, and then you'll pretty much find out what's realistic or not. Forex trading. I like the idea, but I don't like Forex trading. So, I like the idea of playing currencies and all of the, Forex and foreign exchange. It impacts so many assets. Most people don't realize it, but most Forex brokerages are a scam. So what I'm saying is if I was going to trade Forex, I would trade it on TD Ameritrade or trading United States futures on currencies. That's how I would go about it. But if you're trading Forex with a Forex broker and they're giving you 100-to-1 leverage, 99% chance you're getting rocked, aka scammed. But if you do it on a established exchange, centralized, you do it based off of CME futures, you have a little bit more stability, more or less. Refinancing for equity. Well, what are you going to do with the equity right now? If you want to refinance right now, you better have a fucking golden idea. Excuse my language. Because you're not going to refinance cheaper than 8% right now. So that means you're about to pull out your equity paying 8% interest on it. So that means you better be making 8% minimum on whatever you do safely in the next 12 months, if not longer. So you can do it, but right now, most people, it's if you're going to pull out money for equity and you don't have a very solid strategy of what you're going to do to it, then there you go. If your business, so if you're going to add capital to business, so let me go see how much capital for your company would cost right now without the home. You see what I'm saying? So if you could get a business loan at a cheaper rate than borrowing against your home, I would take that. A credit line for business might be better off than not. You could refinance 6 to 7. I think that's usually good, low DTI, low loan to value, good credit, good history. You'll get around 6. Some people may be lower, but that's the whole point. It's still high as shit. So you're not refinancing right now to take out equity. You're not you're paying a lot for it. So that money is not cheap. Mm-hmm. The scam with Forex is that Forex is not regulated because all it is money changing. So this is what I've said for years. You know what Forex is? Have you ever been to the airport and seen one of those booths that change money? That's Forex. That's a Forex broker. There's no you don't need anything to be a Forex to be a money changer. If you want to change values, and then there's no centralized standard value unless it's dictated by the country, and not too many countries do that. So for the most part, they could charge you whatever. That's why if you go to Mexico, some places like in Tulum, they fuck you because they set they set the rate for the money changing. Nobody will change your money, and it's like 18 pesos for $1 or even less, no matter what. So that's why. That's why I say go to a centralized exchange, the CME. At least you know it's the same prices quoted everywhere else. That's why, like, you could sign up with 10 different Forex brokerages, and legally they could all have 10 different prices. So then a lot of times what ends up happening is people get B-booked. So they'll let you deposit money. They'll let you, it looks like you're making a trade, but they never make the trade for you. And then if you lose, they just keep your money. And then that's pretty much it. And then the prices, the spreads, all of them are whatever they want. It's not even they take the spread. You could make the spread. That's what money changers do. They're the ones who create this spread. It's like buying gold at spot value plus premium and then selling it. That's why I say the best thing you could have is a centralized price exchange. So that's why I say just go to the futures if you want to trade Forex, because then that way you'll be able to see it. Forex is the most liquid market. You are right, but it's not a market in the sense that it's an activity. Forex is an action. It's the exchange of capital, foreign exchange. So it's not like there is no centralized market, though, for money to change. We just do it on a day-to-day basis. Borderline, the dollar is the central market if you wanted to look at it. So that's why it's like it's an action of changing. But it's trillions of dollars every day because you have to. You can't buy anything in Europe without Forex. You can't buy anything in India without Forex. You can't. Nothing works without foreign exchange. Because when you go, like, you want to go buy a beer, in Europe, you can't give them $1. They will not accept it. You have to take the dollar and change it to a euro. That's what happens with your bank. They do it automatically for you. So by that nature, think about how many transactions every day are occurring of just, oh, we need to buy here, we need to buy here. So a lot of it is automatic, but that's why Forex is quote unquote so popular. But again, they use that to the advantage. There's a definite like gap in the logic, because once you try to bring it to like trading Forex, it's a lot different than what you'd expect. So my tip is just go for centralized exchanges, play it on the futures. You'll be good to go. You've watched me make a lot of money on yen futures. We've traded the yen, we've traded the pound, we've traded the euro. You could do it all on CME futures. How long you reference refinance from 7 to 4? It just depends on if Powell keeps rates high. So if Powell actually holds for another year, then maybe beginning of 2025. But based on the current bond market now, bro, by middle of 2024, maybe beginning, you may have your low rates again. It just depends on what Powell does. That's why we're watching so close. So even for real estate, stocks, everything. But again, if you're like, oh, when should I refinance? Hopefully you see how important Mr. Powell is. Because if Powell actually does not cut rates at all in 2023 and wants to hold rates for a year, then that'd be like pretty much the Fed saying we won't lower rates till end of 2024, beginning of 2025. That's what they are trying to do. If that changes, and then if you look at where the bond market is pricing it in right now, the bond market is saying you're going to be able to refinance by the end of the year, and that rates will go down. So it just depends on what Powell actually does and how the situation goes from there. Goldman said to be in talks to settle gender bias lawsuit. How can I use business credit to help flip homes along with using business loans? Well, one, you would need to have a business that is in the business of real estate. Otherwise, it's going to be a difficult task. But number two, this is the change with our society right now that everybody needs to realize. The last 3 years and prior, every mother effer on YouTube, even myself, they were giving you ideas. What were they saying? FHA loan, 3%. Oh, you could BRRR, but do this. You pull out money here, then you buy this, then you buy this house, and then you buy an Airbnb, and then you do this, then you do that, then you do that, then you can pull out them. Everybody's been doing that for the last 3 years. Here's the, even longer, fuck that, not 3 years. But here's the problem. You're like, oh, well, should I get business credit to flip a home? Can I get credit from here? And how can I get money? The problem with all of that right now is that the right answer depends on how much it costs, because all of it used to be 0%. So now there's going to be a different interest rate on a business loan than a home loan. And so depending on where that rate is and how much money it costs for you to go after all of these activities, you should use that to make a good decision. So quite frankly, if you're out there right now and like, how can I scheme up some loans and leverage to flip real estate right now? That may not be the best idea if all of your rates are at 11 to 12%. You see what I'm saying? And then again, what's the difference? Like I told the other guy, he wants to refinance. I said, check your business rates first. His business rate might be higher or lower than a mortgage rate. So depending on that, those are the questions you need to be asking yourself right now. It's no longer about, oh, I could just buy this, hold it, and make money. Boom, I'm rich no matter what. No, you could pull off the arbitrage, and it's just going to take, you got to do a little bit more math now. That's it. You have to run the numbers and make sure it makes sense. So, yeah, you could go find business loans. One, you need a business in real estate to get that. You could find other avenues, hard money loans, all of that, but don't take any of them if the numbers don't make sense now. You have to really run the numbers and ask yourself, if I'm going to start a project, if I'm going to buy this property, what am I actually going to make? And now my carrying cost is going to be anywhere from 7 to 15%, depending on how hard you go to get that leverage. You see what I'm saying? Because don't forget that when you want leverage and you can't get it, or they make it harder, if you want leverage, somebody's going to give it to you. But they're going to give it to you at a very, very high price. You see what I'm saying? So realistically, most real estate deals, they could be in the realm of 7 to 15% right now, depending on how bad you want it. I mean, ask Elon. That's why his margin on the Twitter, how bad do you want it? And then there you go. So I would think about that. It's one, like, seriously, it's getting money. It's getting a little more challenging, but that's always the easy part. You got to really be asking yourself, what deal am I going to be doing? How much am I really looking to make? What is my margin? Because now interest could eat up all of that. No rate hike yet. 2 p.m. Actually, hour 15 minutes. Uber's finally coming down. Again, I just think Uber has very volatile post-earnings. So I'm still in my shares, but I think both sides you could probably get a couple of flip opportunities. No leak. No, I'm not a CFA. Powell could affect gold because if you get a gold, because if you get a pause announcement, that's it. That puts gold one more step closer to something very, very big for them. Would I have to create a LLC for the business credit? Yes. And then some people might give it to you, some won't. But you will need a business history, though, too, and then you'll run into that issue of now having qualified income for it. You'll probably a hard money loan will be your best. JPM to be deposed on Epstein lawsuit May 26th and 27th. CCB, certified cult boy. Lenders don't want to do HELOCs right now because you don't know the value of the property. Or if you're worried about things changing and giving money out and giving it out at too low of a rate and then rates move around, it's not worth it. Like Wells Fargo halted HELOCs a while ago. They did that like middle of last year, even before. Can I buy a car under a new LLC to avoid sales tax, but with my personal income? You could guarantee the loan of the business, but you're still going to pay sales tax. The only way you don't pay sales tax on an automobile is if you buy it out of state. So you have to either get the car shipped out of there or go make a LLC in Nebraska, because then Nebraska is the only place you could title a vehicle without it being there. And then you could register it to Nebraska and then zero sales tax on the vehicle. Otherwise, you're paying tax if you buy it in the state. So if you're in California and buy the car in Cali and receive in Cali, you're paying sales tax in Cali. Or no, Montana, not Nebraska, excuse me. I think Nebraska has it too, but Montana, that's where you don't have to be present to title the vehicle. And then you could register in Montana, zero sales tax on the vehicle. Takes a little bit of work. Dealerships get mad at you when you try to pull it off. But again, I mean, depending on the vehicle price, that's like 10 grand, if not more. Like I did that on I just did that on the car I bought. I saved at least 20 racks. So that was good. That's my premium. Yeah, that's exactly. You'll see a lot of supercars with Montana plates. No, go make a company in Montana or go get a registered agent. And then maybe you can make the company in Montana, then buy the car and tell them you're from Montana and I'm registering it in Montana. And then that's it. Or if you have a company in like Arizona, Nevada, out of state entity, some states, as long as you just buy it out of state, you don't have to pay as much. But yeah, fun fact. Not a recommendation. I'm not a financial advisor. Start over 15. What would you do? Well, I would get income. I would find a way to add to that 15K, but then I would use that 15K. I would put a little bit into a long term, start building it up, and then whatever, I'd be operating to find my first real estate deal. Well, then I said if I had to start over, then I get a job, Starbucks, Costco, give me some benefits, let me get some income, and I would just long term in real estate till I flipped the bag and then didn't have to work again. You cannot trade the Naira on the CME, no. Most people don't trade the Naira unless you're in that region. The Kremlin, I mean, we're going to see. There was already a response. Zelensky, Mendev, whatever his name is, he said they want to clap Zelensky now, but we'll see. Watch LMT and any of those if it leads to stuff, but I think we need it to get confirmed. Clear, anytime something big happens, like if you haven't noticed, big things, like really, really big things happen, and what do? Everybody says, well, we can't confirm that because it's too big, and they don't want anything to happen. Again, that happened when the shell fell in Poland. That's what happened after, what other one? There was another time. Oh, we came very close. It was the shell in Poland. Remember that? And they were like, well, no, we can't confirm. Actually, then there's one more in this whole saga that it happened. Oh, and then this one right now. No, not the balloons. Where was it? It was the first. I know the Poland strike. That was the one. There was one more during this whole Ukrainian thing where they were just like, they play, Nord Stream. There it is. Yeah, Nord Stream. Uh-huh. Yeah, exactly. Yeah, Nord Stream. Then the Nord Stream bomb in Poland. Those are two events that could have changed the trajectory of everything. They should have. But you'll notice when those happen, even the bridge, they blamed it on Ukraine. But those two events, every single time, they're like, oh, wait a minute. Well, we can't confirm. Let's confirm. We don't know. And this. And then they take a very long time to confirm that. So I think that's what's happening here. We'll see, because that wouldn't be good. All those events are clear escalation. And it seems like people want the situation where it's here now, and we don't want it to escalate anymore, but we also don't want it to de-escalate. So that's just my take on it. Oh, I agree. It is. It has been sandboxed. Because right now, I mean, you get war headlines all the time, and now the market reaction is not, it's not really there. So we need like a real escalation, and we'll see. But keep it on the back of your mind, but definitely not on the forefront. And that's pretty much it. TLT. By the way, I'm in Kyiv at the moment. No way, really? Send me a picture. How is it? I hope you're okay. Is that or good luck? I don't know. What do I say to that? Did I say good luck or good God willing, Godspeed? I am not in Palaner, no. Life here is normal, yes. Did you say Hunger Games, 2 fingers? That's messed up, bro. Alrighty. So we're kind of moving up. Bonds did drop a little bit. I mean, we have what? You got an hour, 10 minutes, man. Oh, man. 1 hour and 10 minutes until the F. And we're going up again. Like we said, we'd probably be around here. We're a little higher, honestly. I didn't think we would be this high this early. I thought we would get around like here by the meeting, but there it is. AXP on the high. Oh, they got mollywopped. Scammers. Barrett Gold's files 4 billion mixed security shelf. Weren't they just pumping gold this morning? Mulan Automotive 1 for 25 reverse stock split. Yeah, humble observation. A lot of war rhetoric on the timeline is from down oil traders and macro hotheads. Not the Schadenfreude, just the observation. Man, dispassionate just getting too smart for us on this, man. That's why you guys said Mensa. Yeah, but I could agree with that, honestly. It is just like, but then it is also been like just sandboxed. We've dealt with this for a year now. So like we've seen the worst of the worst. It has to really get bad for there to be anything. But I do see you definitely get more promotion out of people who have self-serving interest in it. I don't know. Kathy Woods bought 15 million, but again, Coinbase is going to be very interesting earnings because Bitcoin has had a little bit more volatility. So this could set up a lot because, again, it seems like they only make money if it is volatile. So that's what everybody's kind of been waiting on. White House issues updated COVID response plan for 2023 and 2025. And then 412, man, we've actually moved up quite nice so far. Coinbase, we'll see. They're already down a lot, though, now. As long as they're not, like, if it was at 80 again, then yeah, but they're already getting back to that $50 level, which is very, very low. And where's the SPY? 41.31. So 41.30 is a baby level, but 41.33. I'm not playing Apple earnings, though, not yet. And then Uber chilled out a little bit. Yes, Coinbase is under SEC watch. Or they got the Wells notice. And then the latest headline on them was debating or giving a response to how they plan to deal with it. Netflix, I I wouldn't get excited till 326. It's good volume though into there, but it's stair stepping its way down. That's why I'm like, it's kind of hit in the last couple of weeks. It's at the lower end. Best time to sell gold. I mean, if you're worried about Powell delaying, maybe today. But again, if Powell and anything pause related happens, I do think gold will start getting, it just supports the thesis with gold. And gold has been one of the better assets, believe it or not, in a very, very weird way. I mean, just like Bitcoin, gold is it's had a pretty phenomenal year, and it's actually holding. Possible today is a dovish rate hike. That's what people are expecting. That's exactly how it's described. People are expecting one rate hike and then a clear admission of a pause, and that would be considered a dovish rate hike because you're hiking, which isn't good, but then you're getting followed up with positive forward guidance that could be taken as dovish. No way he pauses. I bought SPY puts, but the more I think about it, if he pauses, everyone will freak out. I think if it's a clear pause, the market will run, and then it will go down. But I agree with you, but just like we even saw with the bonds, it may play out a little weirder here, but I just don't think he's going to make it that clear. I think everybody wants it now, but I don't know if I could really get behind it. Airbus says first half deliveries to be significantly lower than second half. Yeah, they had their earnings numbers earlier. That's when Boeing started dropping. So watch, any Airbus updates are there. They said last 4 months a year to be strong. Yeah, the hike is guaranteed. I mean, it's less than a 2% chance that he just pauses flat out, but for now, it seems like a pretty sure bet you're going to get a rate hike. The real question is language on pause. Would his confusion cause fear? I think if he doesn't change the language and, again, just does not make it a clear-cut signal to pause, the markets will sell off because people want that. So, again, just like last meeting, people did get a little bit disappointed there once he starts leaving the window open, and I think he's going to do that. But then, again, I think he's going to try to signal that, hey, we are, if things continue for another month, we'll be at sufficiently restrictive, but it's just too early to say. The rhetoric has to stay consistent. There's no way he changes it after one meeting. No chance. Again, I agree with that, but it's strong, dude. A lot of people in the market, even the thing I read over in the morning today, a lot of people from Morgan Stanley to JP Morgan now, even Bloomberg, they are all expecting that he's going to actually change it. They're just saying it's too much, another bank failure, but we'll find out. Yeah, Apple is way too close to all-time highs. Boeing popping a little bit. GNRC, did they have earnings? I think it was in the morning, Generac, or they're going to be after hours. Should he care about the bank failures? He should, but there's no way you could care about him. You can't care about it too much, because if he cares about it too much, then that means we have a problem. So there's the paradox. That's what does it say? They say, nothing unreal is threatened, nothing unreal exists. Therein lies the peace of God. So he should respond to the banking situation, but he can't respond too much. Because if you acknowledge that it's real, then you have a really big problem. But if you act like nothing's happening, then you get to have people calm down. So it's kind of weird. Financial stability or price stability in hand, baby. Amen. Good afternoon, ladies and gentlemen. Today, the FOMC decided that we will be raised. That's how he's going to start it. Sound in Brazil. Dude, Generac is up 17%. So I don't know what that... The ARW on the high. Uber got a pop. Chad, we're near the highs pretty early now. You're back to 41.32, right below 41.33. You only like 3-4 points higher than this at one point. So let's see. FTC proposes new sanctions for Facebook owner Meta. FTC alleges company violated early privacy order. Meta's FTC order on privacy. Oof. I don't know if it'll stay up. I hope it does. Bottom tick, Josh. I'll risk $100 on it. Yeah, I shorted it right now at what? 240? 240 flat. Yeah, FTC another one. They said Meta violated terms of their privacy agreement or a previous privacy agreement. Got that early. Yeah, very early. That's why I was like, I'm down with it. I'm only up 20, but if it pops up to 241, I'll lose $100. But if that actually plays out, that could be bad news after jumping 20. But we've seen weird reactions to FTC stuff, but it is reacting for now. Meta, big drop. Again, it's not hitting as breaking, but it might later. We are early on that one for sure. Again, they propose new sanctions for Facebook owner Meta and preventing Facebook from monetizing youth data. Proposes blanket prohibition for monetizing youth data. That was the privacy order in 2020, and they allege that the company violated that. All right, well, we'll see. The market's trying to go up. If Meta has been a leader, you got your bad news reaction. Let's see if it actually holds. Yeah, let it hit CNBC. They've repeatedly violated their privacy promises. Samuel Levine, director of FTC. That's good. We got $1 a share now. So that's a decent pickup for there. Just now hitting your wire. Let's see. Yeah, FTC proposed. I'm seeing it again now too. Again, I mean, Google, all of them, they've had their little FTC moments. The question is, when does it actually kill it? And then you're going to get a stupid pop eventually. Good thing it's only down 0.25% right now. Is Ford turning into Kodak? No, I don't think so. And 238, that's the other level. No, it's not going to get halted. It's fucking Meta. Unless it drops 10%, but it'd be at $200 if that was the case. Yeah, Meta quickly turns negative after FTC proposal. So you're getting more hits on it now. And then there's Netflix. How about Google? No, Google's even holding up. All right, there, Meta again. Another. That's $2 a share. That's pretty nice now, considering. And that's kind of your low here from Monday. So Meta's going back 238, 235. I think that's where I sold out those ones. No, bad news right now. Again, another investigation here on Meta. All right, I closed it out. I got $200, $2 a share. That was very quick. I still think it hasn't hit all the news sites, and it's only down 0.4, so they could probably drop another 1%. But good luck. We got that one very early. Yeah, you got at least $2 on that. That's in 5 minutes, man. So that's fire. I will take it. It hasn't hit in red, I know. And there's a lot. That's another 0.5%. I just dropped another $1. Oh, man. If you got, I think the options, if you could ghetto spread those, it should be good. Yeah, there, bro. It just flushed another $1 and bounced right back up. Again, people are reacting to it now still. Red day, a little less red. That's good, man. That's good. Hey, man, get ready. We got Powell, too, so all of this is still going to change. Snap is even dropping now, too. Oh, man. What did I close that out? Oh. I closed out at 238? Whoa, whoa, whoa. They dropped it another $3. That's crazy, actually. Damn, they hate me. I closed out at 238 and still made $200. What the fuck? Oh, there it is. Another low, bro. It's so... We'll see. Maybe you'll get a bounce, but this is the price it was at on Monday. Bottom tick, Josh. We didn't get top ticked on the short, but then on the close. On the next episode of The Stock Market Hates You, as traders perfectly time the drop and get dollar for dollar, their field fucks them. Why is Meta so hot? They had no idea. The news on Meta FTC investigation. Meta, the FTC proposes blanket prohibition on them monetizing youth data, and they said they previously violated privacy, a prior privacy judgment. TikTok is launching a new ad for publishers. Let publishers sell ads and take home half the revenue. Product for publishers, giving them a 50% cut. So now TikTok ad news to weigh on top of that. Oh, man, Meta's dying now again. So now you have TikTok launching an ad product. Talk about a double win. Now I'm mad I went for the quick $2. Like this, that was perfectly timed. So low-key a double whammy, but we'll see. Again, you've already sold off like 1.5%, but it looks, I mean, dude, this has been a straight knife down. Double dip. Nah, if I'm going to double dip, I'm going to double dip to the upside, but then I don't want to get trapped. So I'm done. I'll just take $200 in a couple of minutes. We got it early and then limit my risk ahead of Powell. I still got to get out of this bond play, but that was it. That was it. That was a nice hit. TikTok CEO got the price alert. Again, FTC proposes limit on new Meta products unless privacy complies. Wait. On all products? So you're getting more updates on the FTC thing. Limit on facial recognition tech and then monetizing youth data. Oh my gosh. So I don't know if they're limiting any other future products. That could be way bigger than I expected, but I don't know if that's the case. Not bad. So 234 again. It's almost $10, man. Easy $7. Left a lot on the table there, but it's going. If you're riding that out, Meta 233. Watch if it breaks 230. That's it. You're about to hit the lowest since earnings now. You've already broken the 236. So if it doesn't bounce off of that, you have a long way down now. 230 and then way lower. Yeah, even the puts hit on that one. You had puts and shares. Bro, that was immediate hit. That was great. Netflix going up. Watch if any other tech gets a benefit off of it. Maybe Google. But even now, Google's starting to pay for it a little bit. Yeah, NQ is in a world of its own. Well, it seems like it's just specifically for Meta. And then, again, Meta's still like, what, 500 billion? You know, and the video is a little bigger. Fine. I know, we needed that. It's been a while since we've had just straight early news and then just big reaction off of it. I don't know if MCR beat it. Again, Meta drops after FTC proposals. That's your first pop. So like I said, if I was going to double dip to the upside, I'm done though. I don't want to get involved ahead of Powell. Meta FTC, a new investigation because FTC says they violated a previous order. Netflix, they're even going up. Netflix at 230? No, 323. I'm blind. Yeah, you got 45 minutes till Powell. The private payrolls ADP jumped up by double today. But again, yesterday you had bad jobs data because it went down. Today it went up. So welcome to macroeconomic confusion. McRib. So again, candles on Meta are huge right now. I think Snap and Google, they also responded. Snap's about to go below $8 too. Bills should pay out on the 10th. Let's see. Microsoftian. Just watch. Again, 233 is a fat level for Meta. Well, if it could maybe bounce up to 240 again, I'll reshort it. But at that point, maybe everybody gets crazy. Netflix is still go. That's the only thing I saw go up as a result. But again, things were going, and then the Nasdaq's not really responding. Love it. Good for now. Good for now. And SPY's coming up. Lotus. Oh, Lotus. You know, that was like my dream car for the longest time. GSK. Prita. SPY's coming down. Yeah, GSK. Big pop. Something about Venezuela. GSK. RSV vaccine approved for older adults by FDA 10 minutes ago. Oh, Meta is selling off too. My goodness. Meta, bro, that's another $5.5 drop there. Almost $3. SPY's even getting a candle. FTC for Meta. And then GSK just got a FDA approval for we saw one of those RSV vaccines approved. I didn't think it would be big, and it was. So we'll see. Yeah, shout out to Lotus. I love the Lotus. Lotus is a great vehicle, man. Glad to have you here. Glad to have you here. That was like my dream car for like half my life. And then another flush. Bro, you have flush and pop on Meta there. Watch out. AMD too. So kind of Meta. AMD's down 9% now. And now AMD is getting to halfway through the earnings gain that it had last time. I don't know. Meta's just. I think we need more updates. Wait till Meta hits CNBC and everything else. But I don't know if it's a stay on new products or only products related to the youth. But if it's an injunction on everything, that's crazy. So we'll find out. But then again, it might be bullish. You ready for this? You guys are gonna get mad at me. Let's say the FTC stopped Meta from developing any new products because of this, right? Until they fix it. That would be bullish. Why? Think about it. Why would that be bullish for Meta? It's the funniest reason ever. Yeah, because then they can't spend money. There you go. No more reality labs. Hell yeah. Fuck yeah. FTC. Come on, bro. Come on. That's it. They're saying you can't work on any new products. Oh, fuck yes. That means they cannot spend $15 billion a month on some fuck shit. So, hell yeah. I'm down. That's it. So, I don't know. Maybe it ends up being bullish for them. Free cash flow to the moon. Thank God. They're like, well, this quarter our free cash flow increased 1,000% because the government wouldn't let us develop anything new. Ended up being the best thing for shareholders. Wow. Amen. 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 Well, they said Meta got a judgment in 2020 about not being able to monetize youth data. What the FTC is saying is that they violated that, and now they're saying as a punishment, we're going to limit all of this stuff until you fix it again. So that's it. How did you think of that so quickly? Just running through because I'm saying I don't know if they're going to limit more products or not, or if it's just the youth products. But if they get limited on products, it sounds bad. But in Facebook's case, all they do is spend money on new projects, and that's what's killed us. So we'll see. Yeah, active shooter in a hospital in Atlanta on Powell Day. Fucking, come on, man. All right, there's your little bounce. It's kind of just above. I can't believe they scammed me on that on my sell candle. And then what time is it? 10. Wow, 45 minutes, Chad. Oh, my goodness. Are you ready? That's it. 45 minutes till pow pow. That's it. We just get the statement, and that statement's going to have a lot in it in and of itself. Woo! Get ready. MPW. Microsoft even went up. NVIDIA, AMD still at the low. Excited, the peach. Disney. The Powell play, we already made it. Bonds. So, I mean, the pre-bond Powell play hit. We're going to sell out of that right before, and then I'm just going to wait. I have nothing else to really until I hear what happens. But again, I know what I'm looking for. Just restrictive territory or not. And depending on that, the bond market is the play though today. I could say that with a certain degree of certainty. Maybe it pump fakes us like Monday, but the way I'm looking at it, bonds are the cheapest thing you could play right now, and they'll give you way more volatility. So that's where I'm at. Just sell out my bonds ahead of time to reduce risk, get back in afterwards, and then we go from there, either short or long, depending on what sort of forward guidance we get. Coffee, refresh, accounts low. I already had, dude, that pre-workout, the Alani Nu didn't even get me hyped. I kind of want another carbo. I'm kind of sad. I drank that whole can of Alani Nu, and I don't even feel like new. I feel the same. Why am I such a crackhead? That's crazy. Maybe it's because it's Powell Day. I don't even feel it, man. USDA to extend current telemedicine flexibilities. That sounds bullish. Teladoc moving again. They're post earnings too. The Treasury buyback? No. That's not till 2024. No, I would ignore the Treasury buyback stuff. Honestly, what you should be looking for is how they start changing issuances, and then if they start moving other shit around to get further than June. Otherwise, don't let any other Treasury news distract you. That's till 2024. If anything, the Treasury today announcing that tells me that rates will probably be a lot lower by then. So I wouldn't worry about it till we have to. Really, Treasury, you should just be worried about the X date and any other extraordinary measures that get altered to try to buy us time in terms of the government funding. UNG. All right, Meta came back a little bit. Still $5 off the top, though. And then Teladoc just got that government news kind of moving. Keep your eyes out for it. McRib on the high. EXPI again. Airbnb. They're not moving, but then you have Booking today, after hours, I think, or tomorrow. I think tomorrow. Apple's trying to come back up. Microsoft, the red Chicle. Tessie's doing good, comparatively. Is Uber climbing back up? All right, Medtronic too. Again, last couple of weeks, they've been getting device approvals left and right. Medtronic's another pop at the high. Close out of that Meta. Good work, guys. That was all good work, man. Shout out Troy as well. Everybody else who helped with the news. That was beautiful. If you got to play on it, I see you won no matter what. Like, I don't think if you were here when it all happened, it was impossible for you to lose. So I hope you make your decision now. Do whatever you need to with it. But GG, baby. GG. That's just the pregame. We still got pow. We still got pow. Yeah, come on. What am I telling you? Come on. We did with Meta. The federal Tom commit Tommy. Tom, who's Tommy from Rugrats? Yeah, listen, seriously. I mean, it's not hyperbole. That's how we got it. That's how we got to do things around here. You know what I'm saying? Huh? Come on. That's how we do it. Okay, I'll see you later. All right, Meta, they say the FTC Papopolis is a political stunt. Come on. Nah, you're a little prick, Zuckerberg, you little lizard. Come on, what are you trying? What are you a political stunt, huh? Fuck you. We're gonna destroy you until you help me. All right, I gotta go. I gotta head out. Josh is looking at me like a walrus. Josh had these little big teeth. He's looking at me. He's looking at me like he's about to body slam me or something. I'm like, what's happening? Come on. Okay, SPY going up. I need to go pee. Yeah, 10:20. Damn, I'm leaving right before your ad break too. I'm sorry. Well, I gotta go, bro. They say you gotta go. You gotta go. All right, I'll be right back. Follow me on Instagram at the Trading Fraternity. I love you. Medtronic's on the high. Tesla responding, and I will be right back.
All right, back at the Bloomberg stage at the Milken Institute Global Conference. While the severity of the banking crisis is nowhere close to the stress that we saw back in 2008, some are looking for parallels out there in the lagged effects, pretty much when we talk about the Bear Stearns collapse in 2008 and the subsequent and more systemic failure of Lehman Brothers later that year. Alan Schwartz was the last CEO of Bear Stearns. After the collapse, he found work at the broker-dealer arm of Guggenheim Partners and went on to build Guggenheim's advisory business into a deal-making juggernaut now responsible for more than $1 trillion in announced M&A and more than $200 billion in financing transactions. Alan Schwartz, co-chair of Guggenheim Securities and managing partner at Guggenheim Partners, joining us right now. Alan, great to see you.
Nice to see you.
We should point out for our audience, Guggenheim has been an advisor to the FDIC on some of the issues that have been going on with the regional banking crisis, particularly with effectively the government-orchestrated bailout of First Republic this past weekend.
Right. So, yes, my partner, Jim Milstein, who is very, very skilled in restructuring and all of this and has been in government in the Obama administration, he's the one in our team that's been advising the FDIC. And the FDIC did an extraordinary job, in my opinion, in the weekend being able to take First Republic, which was, it had to go into receivership, but be able to have it sold so that by the time it went into receivership, it was then being owned by J.P. Morgan. It was a very good thing they accomplished, and I'm proud of the team and the FDIC.
So it was a fairly orderly takeover, but we should point out we've had 3 big regional banking failures in just the past 2 months. Are you concerned at all about any contagion risk?
You have to be concerned, but I do believe that those 3 were idiosyncratic. They had an exceptional rise over the last several years in deposits, uninsured deposits. They put them into long, mature assets. They took extraordinary duration risk. And then, that duration risk caught them to where they went through all their capital on a mark-to-market basis. I don't think other banks is anywhere near as aggressive as that. So I would be surprised if in the near term we had any other banks that were hit hard by duration risk. They've been making sure they get liquidity. So I think that wave of what's happened is probably stabilized, in my opinion.
Do you see any parallels with what's happening now relative to what happened in 08, 09?
Well, I read about what happened in 08 and 09. I think it's very, very different in a major way in that.
He said he read about it? Mother effer, you were like still 60. He's like, I read about 2008. No, you didn't. You were alive. You have 5 kids at that moment, sir. Your kids were finishing college. What do you mean you were just... What? Meta on CNBC. Well, Meta's already responded now. So now it's getting back to where we closed out. That's it. So a good warning there. Oh, and just finalize your plays, because until it goes back up, I mean, borderline, we were so early on, like it was impossible to lose if you played that at any other time. But you have to make sure you do something within. SPY's coming up, man. Again, we're about 30 minutes till it's playing out a little better than I expected. Again, I was saying we'll probably be around these levels when the report comes out, and we're already near the highs. Again, 41.33. Phenomenal level. You've heard it a lot so far the last couple of weeks, even today. I made 1,400 with Meta, so I subscribed. Let's go, baby. Let's go. I hope it gets better. That's how it used to work back in the day. Because nowadays the news plays, I mean, it all just depends on the market we're in, and everybody likes to freak out about way more. But, on days where it's really focused and then you get a news hit, that one was a very nice one. So, God willing, we get some more. But either way, that was all just the teaser, man, because, again, the shit we're about to see here with young Powell is going to be wild. No, I closed the Meta short. I closed it early. I got $200. I didn't, because I was ready to lose on it. I thought I was going to bottom ticket. I thought it'd be like one candle down and then go up. But the scope of the news and just how people are like, wait a minute, does this mean future halts? It went down. So I covered at $2 a share, but it went down like $7 more or $5 more. Seeing some houses on Carlsbad Caravan. Thankful for the light, man. You out there. You getting the sun. You out there with the clients. You doing a lot, baby. All righty. All right. Well, I'm not going to get greedy, too. It's time. I sold the 2-year bond, $850 net. So even then, and we got like $690 on the 10-year yesterday. 2-year bond play is now closed, and I am free. I am free. I got no strings, so I can ring. I got no strings on me. On to the next one. The next one will be in a little bit, in like 30 minutes. So that's what I'm going to be going after, the 2-year and the 10-year. That's what we're going after. We're in 412.50. I wanted to hold it a little bit more, but I don't want to see bonds go down, SPY hitting the high already. I'm cool with what we got here. The 2-year trades under /ZT. So /ZT is the 2-year. The /ZN is the 10-year. If you want the ETF to represent the 2-year, SHY, 10-year, IEF, and then you could even go for 30-year bonds too if you want, and then TLT. And then you could also use TBT or TMV or TFV, one of those, or TMF. Yeah, 30 minutes, man. So again, you could wait up until the end, right before the meeting, but I would get ready to finalize plays with ever, hold what you want to hold and clear up what you can and just get ready. Get ready. All right, you're about to hit a new high right now, too. My goodness. Yep, 40. Well, no. 41.37 was the high. I guess we wicked into it, but you're there. You are literally right under the high of the day now, 30 minutes ahead of Jerome Powell, ladies and gentlemen. Icon Enterprises changes first quarter earnings to release May 10th. Oh, yo, hold on. Wait, when were they supposed to happen? Oh, May 5th. Ooh, that's kind of bearish. If they moved the date up earlier, I was going to buy it. But they pushed it back by 5 days. I don't know what that means. Yeah, I would say it's leaning bad. If they pushed it up earlier, I was going to say, oh, fuck yeah, short squeeze. If Carl Icahn's like, release it earlier. That would have been bullish as hell. But you're reacting a little bit. They're delaying it by 5 days. That's the short report one by Hindenburg yesterday. My birthday on the 5th. What do you mean? Your birthday's like tomorrow. You have 2 days, man. Happy birthday. We got Nepal a day. I think we have a lot of May birthdays. I know we have a lot of March birthdays, and then September. I think we have a lot of September Chad birthdays. Nah. Hey. Ray, hike. Nah. Hey. Ray, pause. Nah. That's it, bro. Whoo. We gotta get on the. That's it. 30 minutes, 15 minutes, man. We better get your warm ups on, cause that's it. We're gonna start the shoot around. I've been playing way too much 2K. He said priced in. All of it's priced in. White House briefing. It's interesting. And let me give you this. Are you guys ready? I'm pretty sure 90% that whatever Powell says today, he is aware of the CPI numbers. So that's another little cherry on top. Remember, CPI is next week. But whatever Powell says, he is holding the answers to the next data set, borderline. Oh, now you want to go up bonds, huh? That's what y'all want to do? That's the game we play in? Powell comes on at 2:30. 2 p.m. for the release, and then that release will be very volatile depending on the changes made. So bonds bouncing there. Yeah, police say one person died in Atlanta shooting. And then TikTok to announce deals with BuzzFeed and NBCU. And then Meta's bouncing back to 238 now. So that is above where we covered. And then bonds kind of move in. Where's Netflix? And then Tessie, they're still doing great. AMD still down. Cam Pepe's all Yoto. What's up, baby? Good morning. Or good afternoon. I don't know. But welcome. What brought you to Twitchlandia? And Mike, so I get a couple of red candles on the tech names. Boeing still down. Eli Lilly still up. Who else was there? Mickey D's. JP staying there. FTV announces strategic investment from Blackstone. The Meta hit CNBC, but there was already a response by Meta by the time that hit the news there. So Meta said it was a political stunt. So I think they covered it all at once. Oh, you were streaming? You want to stream? You were poking around for FOMC? There you go, baby. I hope you're not the one guy, because that one guy, I had to ban him. I had to ban him because I banned him before, then he came back, and then he said he wanted to do a stream. I started promoting him and helping him out, and then I was like, wait a minute. He was just trolling the shit out of me last time I spoke to him, so I hope that's not you, but either way, man, good luck. Good luck and welcome, and get ready for Powell. I hope I'm not. Yeah, amen, man. Amen. I think we'll be good. And there goes Charlie. Oh, he's ready. Here you go. Take one, pass it around. Beautiful. Snap, you got to wait till next earnings, my friend. There's FTC news on Meta. Meta already responded, got a little reaction, but did not sound good. AMD came up a little bit off the bottom. I think all the banks. I think everybody's still tripping on the banks. That's why they really haven't moved much. Even regionals up too is decent. And bonds are coming up. HCDI halted up 150. Am I bullish or bearish on the data? Agnostic. Again, I know depending on what is said in the statement, that will change everything. So it's like straight up, if that statement makes a change, it will be bullish. If there's no change, it'll probably be bearish. And then after that first reaction, depending on how Powell communicates restrictive territory, that will determine our answer. Jean-Pierre says, U.S. to announce new Ukraine aid package today. The bearish case is that nothing changes. So, like, that's what the watch list yesterday will give you a great explanation. But we even talked about it a lot today. If they come in and that statement does not change and it's exactly the same, and you don't have a very clear, explicit, in writing, we are going to pause, then people will not like that. And the way you communicate that is by saying restrictive territory. So that's the bearish case, is that everybody is expecting this is going to be the pause announcement today, and all we do is get one rate hike, and then we're left with uncertainty, and now we have to wait another month to confirm a pause, which I believe is going to happen. However, many people do believe the opposite will occur today, hence some of the strong feelings. So that's the bearish case. The bullish case is that, boom, you get a clear-cut pause announced, and the markets are going to love that for a little bit until they kind of start looking around and saying, wait a minute, why are we pausing? Mm, 20 minutes to go. 20 minutes remaining. I'm excited. Yeah, we're going to see, though. U.S. unable to confirm authenticity of Kremlin drone reports. That drink good? Yeah. Am I slurping it too loud? Am I? My bad, dog. My bad. I feel like you my girlfriend. That's what she says. Is that good? That it tastes good? I'm like, sorry. That means I'm chewing loud. My bad, sir. Can't confirm. We'll see. We'll see. It's 20 minutes. 20 minutes remaining. You guys are saying pause, but I don't care. You know why? Because it's Fed Day. You don't get it. You're just speaking economics to me. You know that? That's it. You're like, pause, Josh. And I'm like, I don't think they're going to pause today. So, amen. Pause. Today is pause day. Supposedly. That's where it becomes bearish, because everyone thinks today's going to be a holiday. So today is supposed to be International Jerome Powell pause the interest rate day. And if that doesn't happen today, everybody's going to be sad, because then everybody got fireworks and they bought the barbecue and everything. So that's what we got to see. Either way, we're clapped. No, because if they do give the pause will keep us up for a little bit. The pause will keep you up probably till Friday, maybe a little longer. It just all depends. It's never been logically explained why it's a pause. Because right now the logic is current interest rates are now above the headline CPI. The only thing that's not above it is core. So right now, interest rates are higher than headline CPI. Once interest rates become higher than core CPI, we are now in restrictive territory. The real yield will now become, pretty much negative. Or now it's going to be like your interest rates are higher than inflation. That's what people want to see. So the whole idea here is that right now, we are about like 0.2, 0.5 from core, coming below now the interest rate. So that would mean restrictive territory. And why people are saying that could happen is because we've already raised rates. We're watching economic data slow down. We're watching inflation come down. And then now the cherry on top is the bank failures. And people are saying that the bank failures, even Powell said they're expecting it to have like pretty much a bank failure acts as a quarter-point rate hike. So now with 2 of them, 3 of them, that's where people are saying with all this in play now, it would make a lot of sense to do one more rate hike. And now Powell and the Fed acknowledge that we are in restrictive territory and then begin to cool down on raising rates because we're already seeing some of that evidence. So that's the logic, but of why people are saying that. It doesn't mean it's correct. But this is why everybody's coming to this idea that, okay, we have to pause now. And again, people want it. Look at the bonds. Everybody and their mom is already front running it. So we'll find out. But that that's the general idea of what's going on. The one thing I could get behind, it's what I told you guys after the last CPI and PCE. Just take a look at it. Just legitimately, though, interest rates are about to be higher than CPI. Granted, that's year over year, not in general, but, you know, that's good. We haven't had that happen in years. So that's what they're aiming for, per se, or as of right now. The Fed Fund says we're going to get a rate hike. Fed Funds, up until this, the Fed Funds are kind of obsolete right now because everything afterwards, there's a stark difference. Like if the bond market is saying we're done, the bond market is saying rate cuts multiple by the end of this year. That's Fed futures. And then Powell and the Fed are saying nah. So in a weird way, anything past this meeting, there's just a very big gap between the bond market and what the Fed is saying. So the Fed futures say we should be cutting by this year. Powell, and we'll find out today, it seems like they're holding the line in terms of nah, that's not what we doing. Look at that bounce on Meta, yeah, and even the bonds too on the 10-year. Nonsense has been going on for 12 months now. I know it has. Amen. It's stupid. Again, we just get tricked into looking into the next thing. I remember they took us from 25 to 50 to 75 basis points, and we got excited when we went back down to 50. It's just weird, dude. Yes, we will have the audio once it comes out. We'll have audio and video once it's here, and then I will have the statement right at release, and then we'll be good to go. And then honestly, yeah, I'm about to actually start having analyst comments here now too. So get ready for it. But I need a favor from you guys, okay? You know, I love Jerome Powell days, and we are striving to get you the top tier information, and it's gonna be a lot of fun. So I need you to do something for me. I need you to like the video. I need you to subscribe. And I need you to spam the stream everywhere. Yeah, baby. But show some love, man. Come on. Show some love and get in the game. If you have any questions, you let me know. And get ready now. We're actually we're about to start getting analyst comments here. So 15 minutes ahead, get ready for what we got going on. Yeet. We need more likes. All right, we're coming down. Bonds are running. The final move, and here it is, Chad. So, this month's FOMC meeting, which ends today, can be a pivotal one for policymakers. The Fed is widely expected to deliver another 25-point rate hike, and the benchmark interest rate bringing the range to 5 to 5.25, and it could be very well the last time that the Fed hikes in this tightening cycle. A slowing economy is paving the way for inflation to cool, handing policymakers the relief they've been searching for over the past year or so. The Fed started raising rates in March of last year and ratcheted them up at an aggressive pace, including jumbo-sized loan productions, Ford F-150 disrupted by missing door handles. The Fed started raising rates in March last year and ratcheted them up. For jumbo sizes of 75, it has slowed that pace at the last 3 meetings. And if data continues to show moderating price increases, policymakers may opt to hold rates at this level until inflation is on track to their 2% goal. Bloomberg's, they are expecting the committee will prioritize inflation despite First Republic and will hike by 25 basis points. And Chicago Goolsbee could be the only dissenting president. One focal point on the deliberations will be the degree of credit tightening after Silicon Valley in March. Cumulative Fed rate hikes, not the banking crisis, explain most of the credit tightening to date. The policy statement will retain language describing inflation as elevated, but remove references to robust growth. And our base case is that officials will replace the clause in March stating some additional firming may be appropriate, with language suggesting rates are now sufficiently restrictive. Again, that is what Bloomberg's base case is. I disagree 1,000,000%. But let's find out. So Anna Wong, chief economist at Bloomberg, says that they're expecting the Fed to follow through with another 25, marking the terminal rate for this cycle. Signs of softening economic data and tightening credit will likely drive the consensus, the committee, that rates are sufficiently restrictive, hinting at a bias to pause at the next meeting. Still, with inflation stubbornly elevated, Fed Chair Jerome Powell will stop short of assuring markets that a pause is a done deal or that rate cuts are imminent. So looking at the chart, what is this? This is a backward-looking real Fed funds rate using actual CPI versus forward-looking Fed's fund rate. The chart may explain why the Fed thinks it has more room to hike and while participants may feel the Fed has gone too far. So this is the Fed funds rate using actual CPI, and then this is using the 12-month swaps. So pretty much the Fed is like, nah, we still got a long way to go. That's an interesting one. Swaps show a 25 basis point is largely priced in for May, and that the market message is that the Fed is one and done. The latest chapter in the U.S. bank failures and stress saw swaps for the June meeting erase expectations of further Fed tightening. Treasury yields are now back under 4, roughly in the middle of April's range of 3.6 to 4.3. Alan Ruskin, chief international strategist at Deutsche Bank, said that the inclination as a policymaker is to go with the original call and not be swayed by the latest price action. What it does is shift the idea of a hawkish signal. There will be much more open-ended sense of where we're going to go from here with the Fed. Naturally, Powell will keep the door open for more hiking, and the last ADP jobs data suggests data demand or labor demand in the private sector remains solid while inflation is sticky and not coming down. Ed Al-Husani, rate strategist at Columbia Threadneedle, he says Powell has to keep June option alive, and it's likely that June SEP forecast is pushed up a little bit. Expect the bond market to look past this and mainly focus on what the Fed says about tighter credit during the press conference. As it stands, swaps for December show 60 points of cuts are anticipated, with a credit shock seen doing the job of cooling inflation. It's a market bias that also anticipates the familiar playbook of the Fed riding to the rescue, an outcome that looks less likely if inflation is sticky. So while economists and future traders alike reckon that this will be the final rate hike, policymakers may be wary of being so explicit. Back in June 2006, when the Fed raised rates for the last time in that cycle, the policy statement referred to inflation risks remaining. The FOMC went on to say that the extent and timing of any additional firming would depend on how the growth and inflation outlook evolved. Even with signs pointing to economic slowdown, the Fed wants there's a lot of uncertainty about future policy. Wednesday's statement will likely see the Fed shift to meeting by meeting approach, using data to determine whether more tightening is needed. All eyes will be on the key sentence of FOMC statement, where it previously said some additional firming may be appropriate. Fed watchers expect that to be tweaked and reflect the new data-dependent path. Officials say that policy is sufficiently restrictive to further bring down the level of inflation, and add that they will be watching to see how data evolves. So again, that's what we've been talking about the last 48 hours now. So the final rate hike in a tightening cycle has typically been a positive catalyst for stocks. According to Goldman Sachs, in the 6 cycles since 1984, the S&P has notched an average of 3-month returns of 8% following the peak in interest rates. However, the conclusion of this cycle may differ from historical pattern. Rising valuations typically drive equity rallies at the end of hiking, but the S&P is already trading well above the multiple at the end of the cycle, except the one ending in 2000, after which the S&P declined despite the Fed pause. So if valuations were cheaper, we could rally. Any other time in history, we've rallied. But any other time in history, overall valuations were not this high coming into the last rate hike. Matt Maley, chief market strategist at Miller Talbach. What time is it? Damn, we got 7 minutes. If history is any guide, today's announcement press conference should give us a couple of wild moves in both directions before the market draws a conclusion about the Fed's intention going forward. The consensus seems to be looking for a hawkish pause after a hike of 25 points today. If that's the case, we would think this would cause yesterday's decline to have more downside follow-through before long. A key inflation gauge that Powell signaled out late last year is the PCE price index for services excluding food, energy, and housing. That's because services is a bigger concern right now. The thinking being that the goods sector is coming in better balance, but services are where consumers are spending what pent-up demand and savings they have left from the pandemic. Housing prices are affected by long lags, so this gauge set that upside too. And the latest reading of the gauge was helpful. It rose 0.24 in March from February, the least since July. Let's see if Powell offers any take on the outlook from here. Assurant. All right, it's slowing down. Both the market and the data. Just above 5 minutes, Chad. So Powell's inflation gauge, you can see the higher trend over the last couple years. It's a helpful move lower, just a chart of PCE. Will it stay down? Core services are thought to be influenced by wages. Remember, we will get a fresh measure of that on Friday with the monthly employment report, which Powell already knows. Oh, I'm excited, bro. Dog, people really... The pause. I guess we're going to find out in 5 minutes, man. That statement is going to be unreal. Get ready for it. So the Fed's preferred recession rate spread indicator, the 3-month, 18-month forward, is now flashing red, implying a 94% probability of recession within the next year. Application specialist Owen Mind notes that it may be argued the spread is distorted with the 3-month yield move higher from escalating debt limit standoff. Something big. It might not. Again, this meeting right now is the least amount of pricing for any Fed meeting. And again, the interesting part is after this rate hike, the Fed will be at the terminal rate projection that they have outlined over the last couple of years or the last year. So it's going to be important, but they're going to hit SEP or the terminal rate, but then next month is when we get a new SEP. So a lot could happen. So Powell will have his work cut out for him in Wednesday's press conference. If policymakers agree on a pause after this meeting, he will need to communicate to the markets that they won't hesitate to hike again if warranted. It has been tricky to convince markets of the Fed's resolve over the past year. Market participants are currently pricing in a cut as early as September, even as no Fed official has a cut penciled in for this year. A key element to watch for during the press conference is how Powell talks about the impact of reduced bank lending on the broader economy, especially in light of last week's renewed stress among regionals. Banks were tightening credit even before the collapse of SVB in March caused the broader sector turmoil, and policymakers are now carefully assessing how much that pullback in lending will contribute to tighter financial conditions. This could also mean that we see a dissent at this meeting. Chicago President Austin Goolsbee has signaled he may be more hesitant to further raise rates, and a dissent from him would be the first in nearly a year. So bonds hit that little high and coming back down. Again, bonds are already tweaking out even more than stocks if you think about it. And we got Meta, we got Tesla. Yeah, very low volume, but it's all going to rocket up after this. Chad, 3 minutes. Wow. Are you ready? We got 3 minutes. Data comes on, 30-minute reaction, and then we get the press conference. Holy. What? All right. That's it. I'm not doing any pre-plays unless I've already been holding it. So a couple of the post-earnings plays, a couple of older ones I've been down on. I took some profits. I got Uber, closed out my bond plays. I got a decent amount of cash to play with, and I'm really just going to be going for bonds after this. So other questions that could come up are First Republic sales of JP Morgan, Vice Chair Supervision Michael Barr's report on SVB, and then questions on the debt ceiling following Treasury Secretary Yellen's announcement. The Fed may start to begin the transition to focus on inflation to labor market data soon, says application specialist Owen Mind. Who is this guy? I've never heard of Owen Mind until today. All righty. Get ready. Man, right at 41.33. So just watch the 2-year. I think this is going to be the big one. If it's pause, we buy. If not, we sell. All right, Chad. This is it, bro. This is it. God bless all of you again. Hopefully you liked the video. Share the stream. Subscribe. But it's game time, baby. You got 1 minute remaining. 1 minute remaining, baby. 1 minute remaining. Wow. Wow. Well, I wish you luck, my friend. Okay, 15 seconds or 45 seconds. Woo! Thank you, man. Good luck. We'll see. I mean, we're going to find out right away. Right away, we're going to get an answer. That statement will be key. Let me see. I already got one website up with it. Let me check. All right, 20 seconds. 2 years down 3 basis points. Spot index is down 0.43 on the spot or on SPX. 10 seconds. Get ready. Again, volume. Everything's going to tweak out. Watch the bonds too. That's the 10-year. There it is. There it is. Hold on. Where is it? Fed raises 25. Extent to which more firming needs hinges on the economy. Hold on. All right, 10 years popping off of that. I think they changed the statement. Come on. Low. It's not loading on the website yet. Extent to which more firming hinges on the economy. They omit prior language that signals more hikes ahead. Federal funds rate is now returned to the level of the global financial crisis. So there you go. I don't have the statement on the website yet, man. This is stupid. I'm waiting for it on the website, but they changed something. There it is. The committee achieving support. The committee will closely monitor incoming info and assess the implications for monetary policy and determine the extent additional policy firming may be appropriate. No, they didn't. Wait. They added it. No, that was a no. That's a pump fake. Hold on, because look, it says the exact same shit. They just added. They added that they will closely monitor, but look in determining the extent additional policy firming may be appropriate to return to 2%, and they'll take this into account with cumulative tightening. Yeah, no. It's a pump fake. So 25 basis for it, tweaked the statement to say that they'll be data dependent, but then they kept additional policy firming. I don't know. So some people like it. But some people are, again, they kept the exact same phrase. So it seems like the pause is potential, but it's not as clear. And then quantitative tightening will continue on pace. Stocks are headed higher a little bit. Let me see the 2-year. No, again, they added a part to it that said pretty much they're going to be looking at data dependent, but then they kept additional policy firming. So we'll see. Okay. I'm buying one ZT for now. I'm buying one 2-year. Because I think the statement was the same. I think it's kind of bearish, but I think people might eat up the first part for a little bit. So they kept half of it the same, and then they made one other different change. So they made one change to say data dependent, but then they kept additional policy firming the same. So again, I'm 1/3 the size of my initial one. On the little changes. Yeah, it's all about the press conference. But then again, though, I don't know, because do you realize nobody's right or wrong? That's the fucked up part about this. So me and Bloomberg and everybody else are both correct. What happened? They kept the phrase of policy firming. That's what I expected. But then they also made a change to add that they're data dependent. You see what I'm saying? So that's why I said it was like it's a little bit of a pump fake. There's now both of us are right. So everybody who was like, oh, there's going to be this, is that, everybody got what they wanted. The press conference now will have a little bit more. So like I'm saying, I think it's bearish, but we'll find out. How was I right? You could go watch the video from yesterday, but I was saying they are not going to take out this statement. So like I said, in determining the extent to which additional policy firming may be appropriate, they didn't take that one out. All they did was they added that they will closely monitor and assess, and then they kept the same statement. So that's the only, and that's, I mean, again, that's why the market's not really moving off of this. I think they gave everybody what they wanted in writing on both sides, and now we have to wait for Powell. But it's not like, it wasn't a clear-cut pause, and it wasn't a clear-cut no pause type beat. Honestly, kind of wild. So that's the pump fake. Yeah, gold loves, I think gold in general, this is supportive of gold. It's kind of the same situation. Powell, and then no dissents either. Let's see. So here it is. Let me get you it. This highlights it perfectly. That's weird. It's not weird. It's just, again, Powell does it again with their little trickery. So here's the strike through. So again, they said economy expanding. They changed growth to pace. They changed spending to first quarter. They said picked up. They added robust. People thought that wouldn't be there. They said recent developments. They said tighter credit. They're likely to weigh on the economy instead of are. And then here, they said in determining the extent, they kept additional policy firming, and then they took out sufficiently restrictive, and then they said in determining extent of future hikes, they took that out. So they added the extra statement, but then they kept additional policy firming, and people thought that was going to change. So they added a little bit of pause language, kept the original, and then that's it. So that's why I'm saying the press conference is going to be the press conference is where it's going to be at now. But that's a small reaction so far because I think they gave everybody a little bit of both. Yeah, they just took out the first half. They didn't, and then take a look at what it says. They took out the part that says in order to sustain sufficiently restrictive, they took that out, and they said in determining where it becomes there, they said, I think they did say, they said restrictive at one point. Bill should be a little bit better. But then again, let's see what Powell says. He announced the hike. So you have a hike now. Your Fed funds rate is now higher than it's higher than inflation, CPI, but we don't know the path. So again, now June is that much more important, but we still got to listen to the guy. Just wait till Powell starts talking, and then we'll find out. But that's crazy. Peep September meeting. Did they go up or down? And there's the 2-year. Even then, the 2-year is still at the same level. But like I said, I think it's bearish initially, but I think that little change has people excited because then if you really want to like reach for the pause, you have a little bit of it, but then it's not. This isn't a clean. It's not a clean statement change. Again, they're closely monitoring to assess implications. The lag, yeah, but they took out restrictive. So that's the only bullish part is now by taking out restrictive from the last time, you could assume it's there. No. They took out restrictive. But last time they mentioned it, so if they mentioned it last time, that means we weren't at restrictive. So if you bring it up now, maybe they're arguing they are, but Powell fucking did it again. So there you go. Bonds are stocks are reacting to that. Bonds coming down. There's a couple of them. They said the tighter credit. So what is a surprise here is that the vote was unanimous. Traders are taking this outcome as dovish. The dollar index is down 0.6. It's worth noting today's hike is indeed the last. The 5.2 peak is a bit lower than people thought. It shows how the slowdown. The analysts are taking this as a pause. I don't know why. But some people are still eating up the pause idea. Powell is going to have to beat them down. Honestly, we got to see what Powell says. These analysts right now are all still, they're saying this is the last hike now, even after the release. So they're saying initial bond market read is dovish. 2-year has fallen below 3.9, and the belly is leading the rally. The Fed hikes 25, largely priced in, but it's not signaling any more hikes. They're clearly worried about tighter credit conditions. I guess so. Pretty much the idea of taking out any signals of more hikes. That's their pause, I guess. And then Treasury curve is bull steepening with more cuts being priced in for 2024. That's the market shift we could get once they reckon the Fed is done. The change in language was consistent with our view, and historically, the evolution over the prior few meetings signals the end of the tightening cycle. All right, interesting. The bonds are still way too stable on this. Even the market, we're like barely moving. It's been about 9 minutes, so give it like 6 more minutes. We'll see at 15, and then we'll probably get our final move. People here, a lot of people are, again, I think, so just the idea of no reference of more rate hikes is having people double down on the pause rhetoric, even though the statement did change a little bit. But I think it's just all in Powell's hands right now. That's it. You need to see if Powell comes out with that beginning of the year dovish attitude or if he bats it down. But like straight up, I mean, the market is eating this as a pause for now, but the the bonds are starting to chill out, which is weird because if the market really is going to eat this up as a pause, the bonds should catch a bid. So that's why I bought them. I said I don't believe it, but I'm going to buy one and then scale in throughout the bonds throughout the day until we get the press conference. But if anything, I think we might, unless Powell is like a bombshell, get ready for BS until June now. But we'll see. They ain't pausing, but they're not talking about more. That's the thing. In writing, they are not talking about more hikes, and that's what has people getting geeked up right now. Because they're saying they're going to assess the implications for monetary policy. In determining the extent of firming, not more rate hikes, not anything. So they're just not saying more rate hikes. And that omission is what has people feeling this bullish for now. You need clarity from Powell, sadly. Again, that statement change wasn't clean enough. It was unanimous, yes. That's the surprise. But again, it's not, I thought it was going to be clean, change the statement or not. They literally did both. So we were talking one or the other, and a hybrid of both happened. They kept additional policy firming. They removed any recognition of, they took out the word restrictive policy, and then they also were saying that they have just no mention of more rate hikes, further rate hikes, additional increase. None of that is included in there. So that's how the market's taking it for now. But we gotta have Powell. He is going to give it to us all. Because again, Powell saying restrictive, that's what we want to look out for now. That's still in play. Just anytime you hear restrictive territory out of Powell's mouth during the press conference, you will probably get a reaction. Powell is in 12 minutes, 18 minutes. So again, you might get a little pop right here. 15 minutes is almost in the books. Again, every 15 minutes it does its thing. Again, people are reading this as a pause right now. So the market's not reacting bullish. The bonds are just holding up whatever was already bullish in the morning, but that's it. It's not it's right now you're getting a little bit of push and pull. Again, they're believing it's a pause. That's all I'm seeing right now. I'm seeing people talking about it pretty dovish for now. I want to see what Powell says, but that's where we're at as of now. Yeah, Uber didn't even move. Where's Apple? Bro, nothing even moved off of that. That's actually wild. Nah, it was they did both. The hybrid. Powell, man. It's good for Powell, though. Now I think, again, well, let's see what he says, though. Because, again, that's still a whole nother Pandora's box we haven't had yet. But for now, I think it's good for Powell because now there's some anticipation of pause. He's kind of flexible. The language is still broad. He still kept what he said last time. I mean, Powell has a month to maneuver at the very least now. Oh, yeah, where are the banks? That's actually a good sign. You should watch the regionals. Yeah, everyone's way. Again, because this statement was supposed to be bullish depending on the changes, and then that's it. It sucked. Bro, the changes that were made to this statement, I don't know. Like, I think everybody is finding what they want in it, but this was not as clean as what anybody was expecting. So again, they gave you a little bit of everything. Even they mentioned robust instead of taking it out. So that's the crazy one. They say extent of effects remains uncertain. They said likely to weigh on economy. And then again, they said determining the extent to which policy firming as opposed to some more. So they're just lowering the pace there. So SPY's starting to pop now. Again, 15 minutes on the dot. I told you, every 15 minutes, that's how the computers play on Powell Day. So just keep that in mind. But 15-minute now pop. Bonds are still down. SPY has not moved too much from the statement release. You're practically unchanged. For bond, well, that's the thing. If it's really bullish, the bond should catch a bid. That's it. If people really take this as bullish, you should buy. There should be a bullish steepening of the curve. If not, then stocks will rally. If bonds sell off, then the bond market's saying, nah, we don't believe it. But you got to wait till we get, what's it called? You got to wait till we get the press conference because Powell, he still needs to talk about restrictive territory. There's still one part of the question we have not answered yet that the statement kind of left us in the middle of. All right, Apple didn't move too much. I wonder what's moving industry-wise. Only consumer staples and energy are down. Utilities are number one. NASDAQ is up 0.63, SPY 0.3, and 0.1. Again, SPY was at 0.3 when this all came out. And then bonds are leading the way down. So that's your first little divergence as of now. Eli Lilly's still going up. So despite the talk of de-dollarization, the debt limit, so they see 70 basis points of interest rate cuts are now priced in by the end of the year. So Ira Jersey, the tightrope for Powell is the press conference. It'll be to convince the markets that near-term pause does not mean an early cut of the federal funds rate. The market isn't likely to price no cuts before year-end, but if Powell is able to do so, that's as good as a hike in June. The question is, how does that happen? So Ira says the removal of the Fed's firming language is telling. It allows the Fed to hike if needed without pre-committing, as they've basically, during recent meetings, we think they are likely to pause in June, but that's not a given. Again, this is why I'm saying some people are saying removing of firming, but that's not true. Again, it says firming, but they just said in determining the extent rather than saying some policy firming or policy that is sufficiently restrictive. But I agree with the last part where, like it's saying, it lets Powell raise or pause, but it doesn't corner him in writing. But that's the fourth person I've seen say that, and that's just not true. That's why I'm like, people are really reading into what they want to hear on this one. I think Powell's attitude is going to be key here. We got to see if Powell comes in all geeked up and excited again. Otherwise, he might want to make that clear to everybody. So again, Anna Wong says Fed has marked 5.2 as the terminal rate in this tightening cycle, raised by another 25 at the May, and more importantly, signaling statement this will be the last hike for a while. Bloomberg expects the Fed to pause now at June meeting, at which point the labor market will be showing clearer signs of softening. We expect the Fed to hold rates at this peak through first quarter 2024 as inflation comes down only gradually. There will be questions, yes. Powell is going to come on. So bonds trying to move. SPY is holding this gain so much. Did Timmerhouse come out with a statement? He said the Fed approved another court and signaled it could be done lifting rates after that. Yeah, Timmy, everybody's taking it. They're taking it as the, what's it called? Until the bonds move up with it. Or if it really is going to be bullish, then this will just be a nice hit there for now. But they are taking it there again. Even Timmy's reaction, the reaction is very subdued for now, but everybody is even if it says policy firming, the logic is now by taking out that little sufficiently restrictive thing and additional, people are reading that as a pause signal. Again, even Bloomberg and everybody else is changing their expectations. So forward guidance is over, tweeted Harvard economist and former NEC Jason Furman. It'll be interesting to see how Powell, who has been frustrated by market interpretations, handles explaining this. Oh, wow. That's a good take. Now we're talking. So Jason Furman just says that the statement we're getting now just says forward guidance is over. So he's not taking it as a Powell. He's not saying Powell is what's it called. He's not saying it's a pause. He's just saying it's 50-50 and now you're just not going to get clear-cut forward guidance. Very interesting take. Another key economic moment comes after the jobs report on Friday. This is going to be tough for the Fed, which wants inflation to come down. At this point, it's worth remembering analysts that 2 Harvard economists did this year, which showed that Powell's press conference packed a bigger punch for markets than the policy statement. We're 10 minutes till the presser. They're talking about pausing, yeah. That's what I think he'll say. Again, that's where we need what it is. But for now, people are seeing it as the maybe a hawkish rate hike if he comes in hawkish, but people like the statement. I'm pretty surprised. But it does make sense though. A lack of additional, I could see why people are making that judgment, but I think they're reaching for it. And then now we need Powell to clarify it for all of us. So again, last time they said additional to get into restrictive. The fact that they're omitting any language about additional, some, or more, that is where people are believing this was a clear signal for pause. Again, I do not agree with that. And it's the weird part is my evidence still remains. They kept the original statement from last time. They just added to it in a different fashion. So sadly, it just means the statement is not as important anymore because if it was, we would have had a clear-cut move by now, and that's just not what's happening. So we need Powell to really clarify. Are we talking about a pause, or is this the forward guidance of pause, or is forward guidance dead? We'll find out. And then bonds hitting the low of the day for now. Not confused. Everybody got a little of what they want. That's the thing. Bulls and bears just got what they wanted at the same time. And now you're just weird because you have to wait till Powell. And you're like, wait a minute. So he just as easily could raise rates as much as he could pause right now. That's all I got out of that from writing. Is that, assuming certain things happen, the bulls could be very correct. And vice versa. Assuming certain things happen, that statement means the bears could be correct. It does not, the clarity behind it is not really too telling. The only thing right now is markets are finally going up, but the bonds have not played along. Meta's green again? Well, isn't that hideous? Where's ZN? Where's the 10-year? The ZN's still decent amount. So SPY, this is as high as it's been almost for the candle. High of the day is approaching. You're going up. Let's see. All right, I grabbed 200 shares of ARK. So pretty much I'm going to hold any bullish bond, bullish ARK until fucking Powell beats it down. If he doesn't beat it down, everybody's going to eat up fake pause. That's what I'm going to call it. The fake pause, yeah. That is what I'm calling it. All right, you hit your high. It could come down after the presser. I just want to see with the bonds. And then, even if they sell off, I'm chill with that. It's pause, but future policy dependent, which is not, that's what I'm saying. That's not as explicit. But I see how the bulls are reaching for it. I'm surprised. I didn't think Powell had it in him to give everybody what they wanted. I thought Powell was going to just make it clear and that's it. But makes sense given that you have another SEP by next meeting. Kathy, will ya? He's going to say they're thinking about pausing, or they're talking about pausing. That's it. But we'll find out. China stocks are moving bigger. Top tick, Josh, maybe. But that's good. I mean, it makes sense right now. You got your press conference in 5 minutes, so, and right when the press conference starts, it's just like after the pre-written statements, or if the press conference, again, as he reiterates the changes, if the algos take those good, right when that press conference starts, you're going to get a big move. Again, that is where all the action happens. So it's either this is the top tick and we flip, or it's going to rip up on the press conference and then go hit another level up until Powell reverses it with whatever rhetoric that he provides. Again, you have a big divergence, though. Bonds are coming down. They're still holding their gains from the day. But now SPY is up 0.25% from the statement, and bonds are down about almost a quarter, 0.1%. All righty. Yeah, get ready, man. Get ready. All right. I got video. Everybody's waiting. SPY new high. The question you need to look for, you need to, when you hear the word restrictive territory, you should be paying attention to the market, because that's going to be the question that gets the movement here. Alrighty. Okay, I'm going to leave this on. ARK is going. SPY. So look at what's going to happen. Powell is about to talk. If the market rips, the bonds are going to rip with Powell. If not, and Powell says something bad, the markets are going to catch up to the bonds at the low. Okay? Because right now, this is a weird part. Usually, if you remember some of the Powell days, bonds and stocks will move exactly the same. So right now, they're going straight up inverse for now. We don't know who the winner is. So if you really believe the bullishness, the bonds will catch up with stock. So if Powell confirms the pause, the bonds are going to rocket back up with it, and vice versa. If we don't get clarity out of Powell, there's a good chance that the market and equities will catch up with bonds here. So just be on the lookout for that. We have a minute and a half. I'm going to go pee. Hold on. I'm going to see if I can push out a pee real quick. Please hold. Man, it's so quiet. All right, we're good, Chad. 15 seconds. He usually takes about 15 seconds to get up to the podium as well, too. So keep that in mind. Write that number down, how long it takes him after 1, because that's going to be important. So now it's 1 o'clock. Timer starts now. So someone write out the number that I give you, because I'm going to need that for the post-analysis. So it's been 15 seconds now. He's still not at the podium. Or 30 seconds now. I don't know if it takes longer than like a minute. It might be the longest it's taken him to get to the podium. I hear him. I hear a door. Camera's moving. 45. All right. Hits podium, 47 seconds. Speech begins. Hold on.
Good afternoon.
56 seconds.
Before discussing today's meeting, let me comment briefly on recent developments in the banking sector. Conditions in that sector have broadly improved since early March, and the U.S. banking system is sound and resilient. We will continue to monitor conditions in the sector. We're committed to learning the right lessons from this episode, and will work to prevent events like these from happening.
So, action, nothing said.
As a first step in that process, last week we released Vice Chair for Supervision Barr's review of the Federal Reserve's supervision and regulation of Silicon Valley Bank. The review's findings underscore the need to address our rules and supervisory practices to make for a stronger and more resilient banking system, and I'm confident that we will do so. From the perspective of monetary policy, our focus remains squarely on our dual mandate to promote maximum employment and stable prices for the American people. My colleagues and I understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy does not work for anyone.
Okay, so right now it looks like bonds are stocks are catching up to bonds.
A sustained period of strong labor market conditions that benefit all. Today, the FOMC raised its policy interest rate by 1/4 percentage point. Since early last year, we've raised interest rates by a total of 5 percentage points in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. We are also continuing to reduce our securities holdings. Looking ahead, we'll take a data-dependent approach in determining the extent to which additional policy firming may be appropriate.
That's...
I will have more to say about today's
Dude, it's the same exact statement as last time. Instead of some, he just says data-dependent now. That's it.
The U.S. economy slowed significantly last year, with real GDP rising at a below-trend pace of 0.9%. The pace of economic growth in the first quarter of this year continued to be modest at 1.1%, despite a pickup in consumer spending. Activity in the housing sector remains weak, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. The labor market remains very tight. Over the first 3 months of the year, job gains averaged 345,000 jobs per month.
Said labor market's tight.
Unemployment rate remained very low in March at 3.5%.
It's the same labor assessment.
Even so, there are some signs that supply and demand in the labor market are coming back into better balance.
Okay, that's bullish from him. We've already known that, though.
The labor force participation rate has moved up in recent months, particularly
Again,
for
this is all part of the
aged
statement.
25 to 54 years. Nominal wage growth has shown some signs of easing, and job vacancies have declined so far this year. But overall, labor demand still substantially exceeds the supply of available workers. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in March, total PCE prices rose 4.2%. Excluding the volatile food and energy categories, core PCE prices rose 4.6%. Inflation has moderated somewhat since the middle of last year. Nonetheless, inflation pressures continue to run high, and the process of getting inflation back down to 2% has a long way to go. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses,
Again, any
and
questions too
as well as
about the
measures from
SEP? That could also cause a big response.
The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides.
All right, there's your flush now.
And we are strongly committed to returning inflation.
So stocks are catching up with bonds.
Objective.
Again, people might come to the reality it's the fake
At
pause.
today's meeting, the committee raised the target range for the federal funds rate.
We need him to talk questions.
Bringing the target range to 5 to 5.25%.
And then market could do complete reversal once he goes into questions.
Significantly reducing our securities holdings. With today's action, we have raised interest rates by 5 percentage points in a little more than a year. We are seeing the effects of our policy tightening on demand in the most interest rate sensitive sectors of the economy, particularly housing and investment. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. In addition, the economy is likely to face further headwinds from tighter credit conditions. Credit conditions had already been tightening over the past year or so.
Okay, this is
important.
important.
Policy actions and a softer economic outlook. But the strains that emerged in the banking sector in early March appear to be resulting in even tighter credit conditions for households and businesses. In turn, these tighter credit conditions are likely to weigh on economic activity, hiring, and inflation. The extent of these effects remains uncertain. In light of these uncertain headwinds, along with monetary policy restraint we've put in place,
that was a weird pause.
Our future policy actions will depend on how events unfold. In determining the extent to which additional policy firming may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy.
We rallied the last time he's ever said that.
Policy affects economic activity and inflation, and economic and financial developments.
But
we will make that determination.
Doesn't sound like a clear pause, dog.
Based on the totality of incoming data.
That's it. Even your lagging statement didn't give you energy.
And inflation. And we are prepared to do more if greater monetary policy restraint is warranted. We remain committed to bringing inflation back down to our 2% goal and to keep our longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude.
Okay, so watch. I told you it pops every time he's done talking.
Across the country, everything we do is in service to our public.
But the bonds keep moving in opposite.
We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
All right. Thanks, Gina Smilek, New York Times. See, bro, right when he's done, it rips every time.
New York Times. Thanks for taking our questions. I wonder if you could tell us whether we should read the statement today as a suggestion that the committee is prepared to pause interest rate increases in June. And I also wonder if the Fed staff has in any way revised their forecast for a mild recession from the March minutes. And if so, what
first question's big. She's asking it.
Envisioning would look and feel like when it comes to, for example, the unemployment rate.
So, taking your question, of course, today our decision was to raise the federal funds rate by 25 basis points. A decision on a pause was not made today. You will have noticed that in the statement from March, we had a sentence that said the committee anticipates some additional policy.
Thank you. Fuck.
That sentence is not in the statement anymore. We took that out. Instead, we're saying that in determining the extent to which additional policy firming may be appropriate to return.
So he changed half of it.
That's it. The committee will take into account certain factors. So that's a meaningful change that we're no longer saying that we anticipate. And so we'll be driven by incoming data, meeting by meeting, and we'll approach that question.
50-50, Habibi.
So the staff's forecast is.
This is recession question.
let me start by saying that that's not my own most likely case, which is really that the economy will continue to grow at a modest rate this year. And I think that's, so different people on the committee have different forecasts. That's my own assessment.
Again, we're still popping off of this.
Staff produces its own forecast, and it's independent of the forecasts of the participants, which include the governors and the Reserve Bank presidents, of course. And we think this is a healthy thing, that the staff is writing down what they really think. They're not especially influenced by what the governors think, and vice versa. The governors are not taking what the staff says and just writing that down. So it's actually good that the staff and individual participants can have different perspectives.
Okay.
So broadly, the forecast was for a mild recession, and by that I would characterize as one in which the rise in unemployment is smaller than has been typical in modern era.
He's about to say something
recessions.
positive on recession.
I wouldn't want to characterize the staff's forecast for this meeting. We'll leave that to the minutes, but broadly similar to that.
Yeah, he said modest growth, not recession. That's why we're up off there. That's different because last time he said base case.
Thank you, Chair Powell.
Borderline.
Siegel from the Washington Post. Thanks for taking our questions. I'm wondering if you can talk about the account of possible effects of a debt limit standoff. You've said repeatedly that the ceiling must be raised, but do you see any economics effects of even getting close to a default, and what type of situation would that look like?
So I wouldn't want to speculate specifically, but I will say this. These are fiscal policy matters, for starters, and they're for Congress and the administration, for the elected parts of the government to deal with, and they're really consigned to them. From our standpoint, I would just say this. It's essential that the debt ceiling be raised in a timely way so that the U.S.
That's what he
government
answered
can pay
last
all
time.
of its bills when they're due.
Powell's not.
A failure to do that would be unprecedented.
He's not getting involved in this question.
Uncharted territory, and the consequences to the U.S. economy would be highly uncertain and could be quite averse. So I'll just leave it there. We don't give advice to either side. We just would point out that it's very important that this be done. And the other point I'll make about that, though, is that no one should assume
Come on, say it.
that the Fed can protect the economy
I
from
said
the
it last
potential,
time.
Short and long-term effects of a failure to pay.
Again,
our bills
biggest
on time.
update is his view on recession. That
It
changed.
would be so
that was
uncertain
bullish or
that
positive.
It's just as important.
Hence the
that
pop.
we never get to a place where we're actually talking about or even having.
And then he answered the
a situation
pause
where the
question
US
with
government's not paying
ambiguity.
its bills.
And just to follow up, was discussion around the uncertainty of a possible standoff, did that affect today's monetary policy decision at all?
I wouldn't say that it did. It was, of course, it's something that came up. We talk a lot about risks to the outlook, and that come up. A number of people did raise that as a risk to the outlook. I wouldn't say that it was important in today's monetary policy decision yet.
Steve.
Chairman, oh, thank you. Steve Leisman, CNBC. Can you tell us what the Federal Reserve Board did in the wake of that February presentation where you were informed that Silicon Valley Bank and other banks were experiencing interest rate risks?
All right, I sold
And
my
can you tell me
Uber
what supervisory
$5.50
actions
profit.
you've done in the wake of the recent bank failures to make sure that banks are currently appropriately managing interest rate risk? And kind of part three, but it's all the same question here. Do you still think this separation principle, that monetary policy and supervision can be handled with different tools? Thank you.
Sure. So the February 14th presentation, I didn't remember it very well, but now, of course, I've gone back and looked at it very carefully. I did remember it. And what it was a general presentation. It was an
Okay, bonds coming up while we're dropping back down.
The entire board. I think all members were there. And it was about interest rate risk in the banks and lots of data. And there was one page on Silicon Valley Bank which talked about the amount of losses mark-to-market losses they had in their portfolio. There was nothing in it about that I recall anyway about the risk of a bank run. So it was. I think the takeaway was they were going away to do an assessment, a horizontal assessment of banks. It wasn't. It wasn't presented as an urgent or alarming situation. It was presented as an informational, non-decisional kind of a thing, and I thought it was a good presentation, and as I said, did remember it. In terms of what we're doing, of course, I think banks themselves are many banks are now are attending to liquidity and taking opportunity now, really since the events of early March to build liquidity. And you asked about the separation principle. Like so many things, it's very useful, but ultimately it has its limits. I mean, I think in this particular case, we have found that the monetary policy tools and the financial stability tools are not in conflict. They're working well together. We've used our financial stability tools to support banks through our lending facilities. And at the same time, we've been able to use our monetary policy tools to foster
that mic noise in the
employment and
background
price
is crazy.
stability.
Mr. Chairman, I'm sorry. I don't mean to be argumentative, but the staff report said SVB has significant interest rate risk. It said interest rate risk measurements failed at SVB, and it said banks with large unrealized losses face significant safety and soundness risk. Why was that not alarming?
Good
well,
question.
I mean, I didn't say it wasn't alarming. It was they're pointing out something that they're working on and that they're on the case. That I'm not sure whether they mentioned. I think they did actually. They mentioned that they had taken regulatory action, or supervisory action in the form of matters requiring attention. So I think that was also in the presentation. I think it was to say, yes, this is a bank, and there are many other banks that are experiencing these things, and we're on the case.
I sold out the ARC for $15. I'm over it.
Hi, Chair Powell.
Again, we're right at the release spot. Nothing is happening. He hasn't said anything yet.
We've seen multiple banks buy other banks, and I was just curious whether you think that further consolidation in the banking sector would increase or decrease financial stability, and whether you have any concerns about the biggest bank in the U.S. Getting even larger.
So, we certainly don't, and I don't have an agenda to further consolidate banks. Consolidation has been a factor in the U.S. banking industry really since interstate banking, and before that even. It goes back more than 30 years. When I was in the government a while back, I think there were 14,000 banks. Now there are 4,000 and change. So that's going on. I personally have long felt that having small, medium, and large-sized banks is a great part of our banking system. The community banks serve particular customers very well. Regional banks serve very important purposes, and the various kinds of GSIBs do as well. So I think it's healthy to have a range of different kinds of banks doing different things. I think that's a positive thing. Is it a financial? So I would just say, in terms of J.P. Morgan buying First Republic, the FDIC really runs the process of closing and selling a closed bank completely. That is their role, so I really don't have a comment on that process. As you know, there's an exception to the deposit cap for a failing bank. So it was legitimate, and I think the FDIC, I believe, is bound by law to take the bid that is the least cost bid. So I would assume that's what they did.
So, but do you have any concerns about the fact that they're getting larger in general?
So I think it's probably good policy that we don't want the largest banks doing big acquisitions. That is the policy, and but this is an exception for a failing bank, and I think it's actually a good outcome for the banking system. It also would have been a good outcome for the banking system had one of the regional banks bought this company, and that could have been the outcome. But ultimately, we have to follow the law in our agencies, and the law is it goes to the least cost bid.
Again, bro, you're right where the statement came out. Nothing's been said.
You mentioned that tightening of credit conditions from the recent bank stress.
Okay, this could be a good question.
One or more rate increases. So, given developments since then, how has your estimate changed?
Yeah, I think I followed that up by saying it's quite impossible to have a precise estimate of the words to that effect. But in principle, that's the idea. When we've been raising interest rates, and that raises the price of credit, and that, in a sense, restricts credit in the economy, working through the price mechanism. And when banks raise their credit standards, that can also make credit tighter in a kind of broadly similar way. It isn't possible to make a kind of clean translation between one and the other, although firms are trying that, and we're trying it. But ultimately, we have to be honest and humble about our ability to make a precise assessment. So it does complicate the task of achieving, a sufficiently restrictive stance. But I think conceptually, though, we think that interest rates.
He said the word, but
in principle, we won't have to raise rates quite as high as we would have had this not happened. The extent of that is so hard to predict because we don't know how persistent these effects.
Last time he said a quarter point. This time he's saying we don't know, but
that's what we'll be
it definitely stopped us from going as high. But how much we don't know.
What does it suggest about the scope for the committee to pause rate increases, perhaps as early as next month, even if the data remains strong?
Great question.
If it's having some kind of substitute effect.
Fuck yeah.
This is just something that we have to factor in as we want to find ourselves. So I guess I would say it this way. The assessment of the extent to which additional policy firming may be appropriate is going to be an ongoing one, meeting by meeting, and we're going to be looking at the factors that I mentioned that are listed in the statement, the obvious factors.
Yeah, dude.
That's the way we're going to be thinking about it.
He gave you a little bit, but not
that's
enough.
Really all we can do. As I say, it does complicate. We have.
He's answering it good though. He's staying very broad.
Policy. Credit tightening is a different thing. There's a lot of literature on that, but translating it into rate hikes is uncertain. Let's say it adds even further uncertainty. Nonetheless, we'll be able to see what's happening with credit conditions, what's happening with lending. There's a lot of data on that, and we'll factor that into our decision making.
Howard Schneider with Reuters. Thank you. So noting that the statement dropped the reference to sufficiently restrictive, I was wondering, given your baseline outlook, whether you feel this current rate of 5 to 5.25% is in fact sufficiently restrictive.
So that's going to be an ongoing assessment. We're going to need data to accumulate on that.
Yeah, bro, he's not giving a shit.
Not an assessment that we've made. That would mean we think we've reached that point, and I just think it's not possible to say that with confidence.
I took 250 loss on the 2-year. I closed it.
Nonetheless, you will know that the summary of economic projections from the March meeting showed.
I don't like this, Powell.
At that point in time,
this dude, he's avoiding everything, and it's the same shit.
This was the.
And now you got everyone juiced up.
Of the ultimate high level of rates, we don't know that. We'll revisit that at the June meeting, and that's we're just going to have to. Before we really declare that, I think we're going to have to see data accumulating and make that, as I mentioned, it's an ongoing assessment.
And a follow-up on credit, if I could you give us a sense of what the SLUS survey indicated? It was already, I think 45% of banks were tightening credit as of the last survey. What did this one show, and how did that weigh into your deliberations?
I went short MES, keeping it small for now before I go for another 2-year.
Time frame.
Not a recommendation, you'll lose money.
The SLUS is broadly consistent when you see it with how we and others have been thinking about the situation and what we're seeing from other sources.
You said ongoing assessment if rate is sufficiently restrictive.
Calls that indicate that mid-sized banks some of them have been tightening their lending standards. Banking data will show that lending has continued to grow, but the pace has been slowing really since the second half of last year.
Nick Timmerhouse, baby.
Nick Timmerhouse of the Wall Street Journal. Chair Powell, the argument around the end of last year and the beginning of this year to slow down the pace of increases was to give yourself time to study the effects of those moves. After the bank failures in March, as you've discussed, the Fed staff projected a recession starting later this year. So my question is why it was necessary to raise interest rates today, or put differently, if the whole point of slowing down the pace was to see the effects of your moves, and now you've, for the last 2 meetings, been seeing the effects of those moves, why did the committee feel it was necessary to keep moving?
Well, the reason is that again, with our monetary policy, we're trying to reach and then stay at for an extended period, a level of policy stance that's sufficiently restrictive to bring inflation down to 2% over time, and that's what we're trying to do with our tool. I think slowing down was the right move. I think it's enabled us to see more data, and it will continue to do so. So we really, we have to balance. We always have to balance the risk of not doing enough and not getting inflation under control against the risk of maybe slowing down economic activity too much. And we thought that this rate hike, along with the meaningful change in And our policy statement was the right way to balance that.
And just to follow up, what you said in response to Howard's question, you'll need data to accumulate to determine if this is a sufficiently restrictive stance. Does that data need to accumulate, or could it accumulate over a longer period than a 6-week intermeeting cycle?
As I mentioned, I would just say that this assessment will be an ongoing one. You can't with economic data. You can't. You've seen take inflation from it. Look back. We've seen inflation come down.
I shorted ZN
back up 2 or 3 times since
one
March
of
of
them
2021. We've seen inflation have a few months of coming down and then come right back up. So I think you're going to want to see that that a few months of data will persuade you that you've got this right, kind of thing. And we have the luxury. We've raised 500 basis points. I think that policy is tight. I think real rates are probably that you can calculate them many different ways, but one way is to look at the nominal rate and then subtract a reasonable estimate of let's say 1-year inflation, which might be 3%. So you've got 2% real rates. That's meaningfully above what many people anyway, would assess as the neutral rate. So policy is tight, and you see that in interest-sensitive activities, and you also begin to see it more and more in other activities. And if you put the credit tightening on top of that and the QT that's ongoing, I think you feel like we may not be far off, or possibly even at that level.
He's saying it could happen faster than expected. That's why you're making that move. The Timmy question about 3 months or 6 weeks.
Edward Lawrence with Fox Business. So if the Federal Reserve gets down to the 3% inflation, as the projections show at the end of this year or close to it, would it be okay for you for a prolonged period of 3% inflation and hoping for some outside event to move down to 2% target?
Whoa. Calm down.
I think we're always going to have 2% as our target. We're always going to be focusing on getting there.
But would you be okay with a prolonged 3%?
It's let me just say that's not what we're looking for. We're looking for inflation going down to 2% over time. I mean, that's not a question that's in front of us, and it would depend on so many other things. But ultimately, we're not looking to get to 3% and then drop our tools. We have a goal of getting to 2%. We think it's going to take some time. We don't think it'll be a smooth process, and I think we're gonna need to stay at this for a while.
Bro, the volatility is unreal.
Mandate, the job side, once you get to 3%, going from 3 to 2, how does the other side of the mandate balance?
I think they will both matter equally at that point. Right now, you have a labor market that's still extraordinarily tight. You've still got 1.6 job openings.
I don't know.
With the lower job
I put on like
number
mini bearish plays because I think
we do see
everyone's overestimating the pause, but this is a dud.
Conditions, but overall,
this is nothing right now.
A 50-year low in unemployment. Wages, you all will have seen the wage number from late last week, and it's whenever it was, and it's a couple percentage points.
You got to wait till jobs data in Apple
would be consistent with 2% inflation over time. So we do
again,
see
he's
some
not
softening.
saying
We see
anything.
New labor supply coming in. These
You're
are very
reaching on
positive
every little pop and drop.
But the labor market is very, very strong. Whereas inflation is running high, well above our goal. And right now we need to be focusing on bringing inflation down. Fortunately, we've been able to do that so far without unemployment going up.
Matt. Hi, Chair Powell. Matthew Boesler with Bloomberg News. So many analysts noted at the time of the March FOMC meeting that at least half of Fed officials' projections did imply or seem to imply that a recession was in their baseline forecast as well, given the strong
Uber 52-week high right after I sell
tracking estimates. And so I'm just wondering if you could kind of elaborate on, why you're optimistic that a recession can be avoided, given that that's the Fed staff's forecast, possibly also the broader committee's forecast as well, and also, of course, most private sector forecasters.
Yeah, I don't think, I know what's printed in the Summary of Economic Projections and all that. I don't think you can deduce exactly what you said about what participants think, because you don't know what they were thinking for first quarter GDP at that point. They could have been thinking about a fairly low number. Anyway, in any case, I'll just say I continue to think that it's possible that this time is really different. And the reason is there's just so much excess demand really in the labor market. It's interesting, as you know, we've raised rates by 5 percentage points in 14 months, and the unemployment rate is 3.5%, pretty much where it was, even lower than where it was when we started. So job openings are still very, very high. We see by surveys and much evidence that conditions are cooling gradually, but it really is different. You know, it wasn't supposed to be possible for job openings to decline by as much as they've declined without unemployment going up. Well, that's what we've seen. So there are no promises in this, but it just seems to me that it's possible that we can continue to have a cooling in the labor market without having the big increases in unemployment that have gone with many, prior episodes. Now that would be against history. I fully appreciate that. That would be against the pattern. But I do think that the situation in the labor market with so much excess demand, yet wages have been moving down. Wage increases have been moving down, and that's a good sign, down to more sustainable levels. So I think it's still possible. I think the case of avoiding a recession is, in my view, more likely than that of having a recession. But it's not that the case of having a recession is. I don't rule that out either. It's possible that we will have what I hope would be a mild recession.
The committee also noted in March that wage growth was still well above levels that would be consistent with 2% inflation. Do you see that as well? And could you kind of explain, how you come to that judgment?
Sure. So we look at a range of wage measures, and then that's a nominal. And then so you assume wages should be equal to productivity increases plus inflation. And so you can look at the Employment Compensation Index, average hourly earnings, the Atlanta Wage Tracker, compensation per hour, basically those four and many others, and you can look at what they would have to run at over a long period of time for that to be consistent with 2% inflation. They can deviate. Corporate margins can go up and down, and there is a feature of long expansions where they do go down, where labor gets a bigger share toward later in a recession. Later in an expansion. So yeah, and we calculate those, and you have to take the precision with a degree of salt. But I would say that what they will show is that if wages are running at 5%, 3% is closer to where they need to be.
Anytime he brings up wages, we have gotten a red candle.
Is what it would take to be consistent with inflation.
But again, he's not giving us much right now. This is very uneventful so far.
By the way, I do not think that wages are the principal driver of inflation. You're asking me a very specific question. I think there are many things. I think wages and prices tend to move together. And it's very hard to say.
Again, Powell says it's more likely than not we avoid a recession.
That wages are really
but possible we have a mild one.
I don't think that's really right.
Great. Chris Rugaber at Associated Press. Well, you mentioned profit margins. Those have expanded.
Oh, this guy's an asshole.
Sharply during this inflationary period.
We've dumped on his questions
there are some signs
twice.
That they are starting to decline. Many economists note they haven't fallen as much as might be expected, given that we're seeing at least some pullback among consumer spending. So speaking of causes of inflation, do you see expanded profit margins as a driver of higher prices? And if so, would you expect them to narrow soon and contribute to reduced inflation in the coming months?
So higher profits and
not
higher
a good question, but we're dumping on it.
When you have an imbalance between supply and demand, too much demand, not enough supply. And we've been in a situation in many parts of the economy where supply has been fixed or not flexible enough. And so, the way the market clears is through higher prices. So I think as goods pipelines have gotten, back to normal so that we don't have the long waits and the shortages and that kind of thing, I think you will see inflation come down, and you'll see corporate margins coming down as a result of a return of full competition where there's enough supply to meet demand, and then you're really back to full competition. That would be the dynamic I would expect.
Michael McKee from Bloomberg Radio and Television. Can you tell us something about what your policy reaction function is, your policy framework is going forward when you look at the economy?
Zion's dumping.
Meeting, are you looking at incoming data, which is by definition backward looking? Are you going to be forecasting what you think is going to happen? Are you ruling out the rate cuts that the market has priced in?
I didn't catch the last part. Ruling?
Markets have priced in rate cuts by the end of the year. Do you rule that out?
Sorry. Okay, I got it. So what are we looking at? I mean, we look at a combination of data and forecasts. Of course, the whole idea is to create a good forecast based on what you see in the data. So we're always looking at both, you know, and it will, of course, it'll be the obvious things. It'll be readings on inflation. It'll be readings on wages, on economic growth, on the labor market, and all of those many things. I think a particular focus for us going now over the past 6-7 weeks now, and going forward is going to be what's happening with credit tightening. Are small and medium-sized banks tightening credit standards, and is that having an effect on loans, on lending? And you know, so we can begin to assess how that fits in with monetary policy. That'll be an important thing. I just, you know, we'll be looking at everything. It's again, I would
the market
just
light,
point out,
dude. It's the
we've
same
raised
answer 3
by
times.
5 percentage points. We are shrinking the balance sheet, and now we have credit conditions tightening, not just
The
in
market
normal way,
loves
but
it every
perhaps a
time.
little bit more due to what's happened. And we have to factor all of that in and make our assessment of
New low on
you
the
know,
10-year,
of
though.
whether our policy stance is sufficiently restrictive. And we have to do that in a world where policy works with long and variable lags. So this is challenging, but you know, we will make our best assessment, and that's what we'll be thinking.
What about the idea of rate cuts?
Yeah, so we, on the committee...
It's the same thing every time.
Have a view.
Bro, we're tweaking right now. We're at the same price. Nothing is happening.
Inflation is going to come down.
He's probably
Not
going to
so
talk
quickly.
for another 20 minutes,
It'll
too.
take some time. And in that world, if that forecast is broadly right, it would not be appropriate and to cut rates, and we won't cut rates. If you have a different forecast, then you know markets have been from time to time pricing in quite rapid reductions in inflation. We'd factor that in, but that's not our forecast. And of course, the history of
So
the
he's
last
saying
2
no
years
rate
has been
cuts.
very
That's
much,
kind of more
that inflation
specific,
moves
but
down, particularly now if you look at
there's still
non-housing
ambiguity
services.
around this pause
It
shit.
really hasn't moved much, and it's quite stable. And so we think we'll have to demand will have to weaken.
He's
a
not
little
aggressive
bit,
about
and,
it, but that's
labor
not a
market
good.
Conditions may have to soften a bit.
It's
more
finally a
to
clear
begin to see
no cut.
progress
That's
there.
not our
And
case.
again, in
There
that
you go.
world, it wouldn't be appropriate for us to cut rates.
Courtney Brown from Axios. I'm curious how you view the role of
Damn,
the
Courtney,
overnight
why you all up in
reverse
my
repo
ear?
facility in the context of the current banking stress. Do you think it's contributing to the stress by making it more attractive for money market funds to compete with banks for deposits? And did the committee discuss any changes to the structure of the facility, or do you see that being put on the table in the future? Thanks.
Sure. So we looked at that very carefully, as you would imagine, and it's really not contributing. We don't think now. It hasn't actually been growing. It moved up, moved down, and then moved back up to where it was. What happened in the when there were the big deposit flows, which by the way have really stabilized now. What happened was institutional investors took their uninsured deposits and put them in government money market funds, which bought paper from the Federal Home Loan banks and things like that. Over the course of maybe the last year, retail investors had been gradually, as they do in every tightening cycle, they've been gradually moving their deposits into higher yielding places such as CDs and other things, including money market funds. So that's a gradual process.
So
that is
bonds are hitting
quite
a new
natural
low now
and happens
before the
during
market, and now the
tightening
market
cycle.
could
What was
follow
unusual
along, but
really was the institutional
it's pretty
investors
resilient
moving
here, but
uninsured
let's see.
deposits and spreading them around.
No
things
cut
like
was
that.
the
But
negative
it doesn't
answer.
seem to have had any effect overall on
I
the
sold out of ARC already. I
overnight
took a $20
repo
gain.
facility.
I was over it. And I
That is
sold out of
really there
Uber.
to help us keep rates where they're supposed to be, and it's serving that purpose very well.
Sarah Ewald-Weiss, CBS News. I want to go back to the debt ceiling for a moment. I know you talked about that in terms of fiscal policy, but can you just speak
there it
towards
is. You're about
what
to hit
the
a new
impact
low.
of a default would mean for Americans across the country, the markets, and borrowing?
Yeah, I would just say it's I don't really think we should be, we shouldn't even be talking about a world in which the U.S. doesn't pay its bills.
No, Uber swing, not long.
It just shouldn't be a thing. And again, I would just say I
think you just wicked into a low.
No one should assume that the Fed can do, can really protect the economy and the financial system and our reputation globally from the damage that such an event might inflict.
Scott.
Thanks, Mr. Chairman. Scott Horsley from NPR. In his report last week, Vice Chair Barr identified a couple of the factors that he thought contributed to the regulatory.
Okay, switching gears to SVB again. Those last couple questions caused a reaction. We're still reacting to the no rate cut. That was the most clarity he's given all speech.
Sort of cultural shift towards less aggressive oversight. You were here in 2019. Do you share that view? And what would it take to get the stronger oversight that you and he said in your release would be necessary?
So I didn't take part
there
in
it is, new low of the day,
or doing the work, but
volatility indexes on the high.
Of course, and I find it persuasive. I mean, I would say it this way: a large bank, not a very large bank, a large bank failed quite suddenly and unexpectedly in a way that threatened to spread contagion into the financial system.
So you're about to get a 4110 now. Watch for 4100.
The only thing that I'm really focused on is to understand what went wrong, what happened, and identify what we need to do to address that. Some of that may just have been technology evolving. You know, we have to keep up with all that, but some of it may be our policies.
I heard somebody
and
typing.
Supervisory and regulatory.
So we'll see.
Whatever. What our job is now is identify those things and implement them, and that's kind of the only thing I care about is. And I feel like I am accountable for doing everything I can to make sure that happens.
Thank you. Evan Reiser with M&I Market News.
Flush, new low of the day.
Powell, are we in the early stage or nearing the end stage of the banking turmoil among regional
Another
banks?
banking question.
And secondly, do you still have...
Unless he says credit tightening, there won't be a
rates?
reaction.
Is that what the statement is saying?
Oh, maybe. He said tightening.
So, I guess I would say it this way. There were three large banks, really, from the very beginning, that were at the heart of the stress that we saw in early March, the severe period of stress. Those have now all been resolved, and all the depositors have been protected. I think that the resolution and sale of First Republic kind of draws a line under that period of, is an important step toward drawing a line under that period of severe stress, okay? I also think we are very focused on what's happening with credit availability, particularly, you know, with what you saw in the beige book, and you will see in the SLOOS is small and medium-sized, small and medium-sized banks who are feeling that they need to tighten credit standards, build liquidity. What's going to be the macroeconomic effect of that? More broadly, we will continue to very carefully monitor what's going on in the banking system, and we'll factor that assessment into our decisions in an important way going forward.
Okay, so you hit a new low. Stocks are following, but bonds are bouncing
Greg Robb
now.
From Market Watch. I just wondered if you've done any reflection on your own actions during this crisis and leading up to it over the last, since you've been Fed Chairman. I think I've heard you say a couple of times that you deferred to the Vice Chair for supervision. Do you think that was the right way to go about this? And yeah, comments on that. Thank you.
Sure. So let me say, first of all, I've been chair of the board for 5+ years now, and I fully recognize that we made mistakes. I think we've learned some new things as well, and we need to do better. And as I mentioned, I thought the report was unflinching and appropriately so. I welcome it, and I agree with and will support those recommendations. And I do feel that I'm personally accountable to do what I can to foster measures that will address the problems. So on the Vice Chair for supervision, you know, the place to start is the statutory role.
It was a good admission.
Unusual. The Vice
Powell,
Chair,
he stepped up.
It says, shall
You
deploy
got me.
policy recommendations develop policy recommendations for the board regarding supervision and regulation of depository institution companies, and shall oversee the supervision and regulation of such firms. So this is Congress establishing a 4-year term for someone else on the board, not the chair, as vice chair for supervision, who really gets
little
to set
change
the
in the
agenda
bonds here if we hit
for
a low,
supervision and regulation
but
for the
you're
Board of
still working
Governors.
your way down. This
Congress
is
wanted that
4110.
person to have political accountability for developing that agenda. So the way it works, the way it has worked in practice for me is I've had a good working relationship. I give my counsel my input privately, and that's, I offer that, and I have good conversations, and I try to contribute constructively. I respect the authority that Congress has deferred on that person, including working with
Again, Zion is dying right now.
His predecessor. And,
again, regional's
I
giving
think
up all the
that's way
gains.
it's supposed to work, and that's appropriate. I believe that's what the law requires, and but it isn't. I wouldn't say it's a matter of complete deference. It's more, I have a role in presenting my views and discussing, having an intelligent discussion about what's going on and why, and that's my input. But ultimately, that person does get to set the agenda and gets to take things to the Board of Governors.
40,
And
you
really,
flushed 5
supervision
points
has
now.
Sole authority over
So
supervision.
watch 4100. It should have a lot of demand, but you might get fireworks
Just
here,
wondered if
given
you had
it's
any
Fed Day.
regrets, or was there anything that, decisions that maybe you regret now in light of what's happened?
I've had a few.
Damn, so candid of
Sure.
Powell.
I mean,
wow.
Who doesn't look back and think that you could have done things differently? But honestly, you don't get to do that. Again, my focus is on control the controllable. As one of my
He
great
said,
mentors
amor
used
fati,
to always say,
Epictetus, control
the
what you can't
What
control.
we control now is make a fair assessment, learn the right lessons, figure out what the fixes are, and implement them. And I think that Vice Chair Barr's report is an excellent first step in that, but we've got to follow through.
Hi there, Megan Casella with Barron's. Did the possibility of pausing at this meeting come up at all, and how seriously was that considered? I'm curious if you can give us any color as
Very
to
curious.
whether there were any initial concerns about raising rates again, or what those discussions entailed.
So support for the 25 basis point rate increase was very strong across the board. I would say there are a number of people, and you'll see this in the minutes. I don't want to try to do the head
Bonds
count,
are leading before the bounce here. They're just
in
back
real
to the
time,
earlier
but,
low.
people did talk about pausing, but not so much at this meeting. There's a sense that we're much closer to the end of this than to the beginning. That
That
as I
sounds
mentioned,
good.
If you add up all the tightening that's going on through various channels,
That's what he says every time. We popped on it.
We feel like we're getting close, or maybe even there. But that again, that's going to be an ongoing assessment, and we're going to be looking.
That
at
was,
those
he said, we're
factors,
almost there.
That we listed in to determine whether there's more to do.
I'm curious too how to interpret that and the changes to the statement. Is the bar higher now to raise rates at the next meeting, or would a strong jobs report or inflation print be enough?
Oh, she's killing it with the questions.
I don't want to. I couldn't really say. I just think we're.
You already know the jobs report. That's why.
I think we've moved a long way fairly quickly, and I think we can afford to look at the data, and make a careful assessment.
There, last question, very early.
Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace.
Wow, very early.
You
We have
mentioned
45
a few
minutes
times
left.
About the lessons you learned from the banking crisis, that you would learn the right lessons. What
So
are those
again, if the
lessons?
market, it could move up after the speech.
Well, yeah, I just
Usually we
would
have less
start
time.
with, something that's changed really, which is the run on Silicon Valley Bank was out of keeping with the speed of runs through history, and that now needs to be reflected in some way in regulation and in supervision. We know now that we know it's possible. I think no one thought that was possible. No one had. I'm not aware of anybody thinking that this could happen quite so quickly. So I think that, that will play through. It will be up to Vice Chair Barr to really take the lead in designing the ways to address that. But I think that's one thing. I guess I would just say that then we're going to revisit. It's pretty clear we need, to me anyway, it's clear that
Wall
we need
selling
to
now.
strengthen
Pac
the
W is
supervision and
the
regulations
last one
for banks
remaining.
of this size.
Zion was already dying.
I'm thinking that we're on track to do that as well.
Can you be any more specific on stress testing or looking at banks that have
10 years
specific
rocketing now.
concentrations in
So
certain
bond plays are hitting me a little bit, but
that's what
I
Vice
have a
Chair Barr's
theory. I'll
role
share it
really
with you
is.
afterwards.
He'll take the lead on that.
I just think this is all pump fake.
Okay, thank you.
Thank you.
All right, thank you. That's it, Chad. I don't know if you're going to want to hear this. That was a complete dud. That's it. That was a complete dud. Legitimately, I think Powell, you got closer to a pause, but it's not guaranteed. And a lot of people thought it was going to get guaranteed. That's why I was trying to play the little buy it or not. I'm going to hold my bond short for now, but I don't think the pause is, again, a lot of people are reading it like it is, but nah, man, you could even tell the reaction is small. We didn't even move out of this range. Now, the speech ended like 20 minutes early. And we're holding up right here. There's zero reaction to this. This was a complete dud. He had the opportunity. He's just saying, anytime you asked him about a pause, he said, well, we've done this, we've done that, we've done this, we're getting close. That last question where he said, we might be there, that's the closest thing, but he is not committing to anything. So that's just all. I just think it's a pump fake on the pause. I think everybody wanted it. You got a little bit of an olive branch. We got closer towards the pause, and it may very well be there, but you're not going to get any clarity on that until June or until like you get something way, way, way more concrete. He already knows the jobs report. He knows inflation. He had every chance to kind of guide the market, and I like that take that somebody said. I think he's trying to step away from forward guidance, and he said it's data dependent. We have made a lot of progress. We're towards the end rather than the beginning. But, yeah, he's being very careful, very careful. That's why I'm like, it's a dud. He doesn't want to unleash the front run, nor does he want to box himself in. So we'll see how the bond market takes it, because if the bonds really want to call his bluff, everyone's going to buy it up. But I'm going short for now, and I'm going to hold that. I'm short on the bonds. I'm getting washed on them, but thankfully I kept it small. And then I did a micro play, sold out a couple of longs, still have a couple of other longs, but then still also have some downside. But nothing has changed in the last couple of days now. You're closer towards a pause, but if you get too aggressive off that, I think you'll pay for it. And now we're back to 4,100 here. My goodness, Chatadonia. So that's pretty much, there you go, 4,100 flat. The bonds are catching the bid now, which is ironic. Let me see the 2-year, though. Yep, even the 2-year. So I just got washed out and trapped into it, but I'm not very confident, but I do think the market is just reading this ass backwards right now, or just waiting. It kind of reminds me of the bond day, Friday and Monday, but we'll see. But it's not like the Bears didn't get too much, neither did the Bulls. You made some progress towards pause, but Powell does not. He is not. You can't stand on solid ground is pretty much the way I'm looking at it. So new low, you hit 4,100. Watch if the demand comes in. But we either flush 4,100 or not, but I close my micro ES for $80. We'll see what happens here. Then still holding the ZN short. That's pretty much it. Honestly, did not do much. I thought I was going to hit the bonds a couple more times, but every single one of Powell, even the arc play, all of that, they're just not. Powell wasn't really, he played the Powell toe the line again. It's all on March, man. It's uncertainty. Well, it is, but I don't know if it leans bearish because you did get closer to the pause. I can acknowledge that. I'm not saying that the mark didn't get moved today. It did. Powell is, by changing the language, even though they kept a majority of it, like Powell was saying, we said this, there was a significant change, but we also said this. It's very, you did move closer to the direction the Bulls want, but you're not like, it's not guaranteed. It's like asking your parents if you could go and buy a candy bar, and they said maybe. That's it. They didn't say no, but they said maybe. That's kind of the way I'm looking at it, and I think a lot of people are getting excited on maybe, but I don't know if that's gonna hold up with what we have just around the corner. Ask your father. It said maybe. He says maybe. That's what I'm getting out of all of this. Just pure maybe and call it a day. But it's not. That's what I'm saying, though. You have to respect the bullish side because the Bulls they got progress. Again, Powell he was clear about it. He's saying, we talked about it. We've done a lot of stuff. We are closer to the end rather than the beginning. But the point is, you're not going to be able to front run it per se because now you don't know if that's next month or in 3 months. But you're definitely made progress, but he's not giving you forward guidance. You see what I'm saying? He's giving you a little bit of forward guidance, but not enough for you to act on. But then again, that's why I'm kind of shorting the bonds because that means it could be a week, a month, 6 months, 3 months, or it could be tomorrow he changes his mind. But it just doesn't seem like I don't think that's what the market wanted. I think we wanted a guaranteed pause. I don't think we wanted progress towards a pause, more or less, because now you rely on everything else. But we'll see. We'll see. Again, watch the bonds, though, because if the bonds do take a bid, that's what I was waiting for the whole time, but we will find out. Let's call Hopium. It's interesting, the initial read. I'm already surprised even Powell said it. He said, we made some changes to the statement. We kept it here. It was a significant change, but it's not to the point of, again, he said, read it as is. He said it's in writing there for you. Right now I'm short on first I went short on the 2-year, lost $200. I would have made half of that back. Then I shorted the 10-year at the bottom since it had more gains. And right now, just 1/ZN negative for now. And then I just flipped the MES. I closed that out for like $80. Honestly, kept the play small, took some profits on any other ones, and then that's it for now. But this is hideous. I don't think you guys realize how bad this is. And I'm not saying negative or positive. I'm just mean like the reality was there. I guess it was saying that this was the lowest priced in market for the Fed, and it sure was. You've only moved a 0.1% on the SPY, maybe a 1/3%. Dude, this is tiny for what this was and what could have happened. They changed the statement, but changed it halfway, made progress, but no clarity. This is typical Powell, but we haven't really moved anywhere. If you want to get bullish, people are just going to take the potential pause, and then they're going to say, if you don't drop long enough, they're going to say, well, it didn't drop, so there we should go up. But then again, we saw a couple of pump fakes on Friday and Monday, but I think it's very pump fakey, and I don't think the pause it's not as strong of a pause signal as people were expecting. I think you got somewhat of a pause signal, but it's not as strong to tell you to go to 430. Yeah, the banks are moving. Some down more than others, like JP Morgan flushed, Goldman flushed. I think XLF as a whole, that's the thing that hit new lows and is really holding, but SPY is borderline there too. We have Apple. Apple's tomorrow. Today is Qualcomm. So actually we have to wait till all day tomorrow and then after hours and then China session for tonight. So here it is. It's probably fair to say we got a slightly more hawkish afternoon than many expected. The statement left out the possibility of more rate hikes without suggesting they will be needed. That was what most were counting on, but there wasn't a single dissent. And Powell said, in fact, there was strong backing for today's hike. He also said lending continues to grow, even as it has slowed. No real concern about credit crunch was expressed, and for good measure, he dismissed rate cuts again. So after the Fed's hike, Powell is successful in saying the markets needed to hear not to add volatility to either bonds or stocks. 45 minutes into the conference, both stocks and 10-year were down marginally. Fed funds were still gyrating a bit and constantly showing a negligible chance of rate hike despite Powell's attempts to keep such a move on the table. What was notable about the remarks was his repeated statements to the Matt Boesler and the labor markets of extremely tight, and he does not foresee a recession in 2023. For that very reason, though, it seems that Powell is in line with the White House in predicting a softer labor demand and gradual cooling in the market without causing a recession. So now stocks are flushing back to 4,100. The bonds are moving total inverse after hitting that low. So we're getting a little tweak out here. And Okay, so again, one big candle up, two big candles down. You did a little bit of dancing. It's all about 4,100. You haven't broken 4,100 at all today. So if we break it, there it is, and see where we go from here. Again, 40.88, 40.89, the lows of yesterday. That will be on watch. But now bonds are up. Interesting. NVIDIA is now dropping. AMD. Amazon. Yeah, with the 40.98. Yeah, I think yesterday's low is right below the next, right above the next level. You're already back to 4,100 though. You're just doing 1 point at a time. Let's check the volume. Again, SPY is coming into the lows. Volume 65 million with 30 minutes left. You'll still get more volume. It'll probably be comparable to yesterday. So there it is, still coming down. 4116 on the futures, 40.99. Rotation in the bonds. Well, that's I don't believe it. That's why I'm saying I think if the stocks are going to go down, bonds have to go down with it, and vice versa. Because at this point, I think they have to move in tandem. Because it just doesn't make sense if after what he said, stocks really drop and you buy bonds unless you really believe in the pause narrative. But then again, if anything goes up from here, if we start dropping, I think what would have brought us down would have been higher rates. But we'll see. Give it a couple days. I mean, the last 48 hours taught us just be on the lookout for pump fakes is what I could tell you. So he said the numbers for Friday were going to be strong. You can't really tell. He just didn't tell you what he was going to do off of it. So he didn't tell you that if jobs or CPI strong, he didn't say one more, two more. You know, he just left it ambiguous. There's no forward guidance on what the data provides. So we're still operating on our old logic of what we think with jobs and all of that. But Powell, he took you one step closer to a pause, but he's not guaranteeing it. And we don't know what that data will mean, or at least if he's changed his view. So we're going to have to see. So coming back down here, watch the bonds because this is where it gets interesting. If we start flushing, either bonds catch a bid, but I'm expecting they'll come down, but maybe we'll have to wait a little bit. Yeah, all the ads, my pockets are hurting. I know, man. If you could donate, that'd be nice. Okay, I just lost $250 on the bonds, and then I took another one. So if you do have anything, whatever you got remaining, please give it to me. Thank you. Both me and Google are struggling. You gotta fight through it, though. You gotta fight through it. But ads build character. It's like holes. Microsoft on the low. Apple bonds are holding. SPY another low. 40.95 now, so you're close. About 6 more points to the next level, and then 40.88, and then if you break 40.88, we're looking at 40.60. Instruction unclear. Sponsoring Young Egyptian Boy. Hey, man, baby. Hey, man. Hey, man. Donating to help you with Google. Thank you. Thank you. That's what we needed, man. That's what we needed. Appreciate it. You know, see, we both get hooked up. I get a little bit, and then YouTube takes like 90% of it. What? SQQ. Let's go, baby. God bless you. God bless you. Again, we're coming down. XLF seems to be the leader to the downside in chat. We have a lot of time. The other Fed days, I mean, we have been, we're usually closer to the bell. So you still got 30 minutes remaining here. And now we've hit a low, and the bond market is kind of tweaking out. As of right now on the futures, where are we? Your reaction. Oh, it's not showing us. Let's see the 1 hour reaction. So far, 1 hour reaction is average. So this is exactly how we even moved at March. In February, we were higher. But we're right there. We're right there in the middle. So believe it or not, this is a very average reaction as far as the 1 hour there. So we'll see. New low on the SPY. Now the bonds are giving up. Last time they did that, they switched. So last time we hit a low as the bonds hit a low, the bonds bounced and then stocks went lower. This time around, just see if bonds come down. Watch if the market bounces. Again, you went about 5 points below the level. 40.91, actually almost 10 points. And then 2 points from yesterday's low, 3 points from the next level. Watch how it dances at 4,100. Again, we got like 30 more minutes left, 26 minutes. Oh, Giancarlo, baby. Look at showing some love for the king. Finger to the sky, baby. That's the king. You know what I'm saying? Amen. Amen. I'm mad at Powell. I'm not mad. I think he did a very good job. But, dude, he did not. That was very uneventful. I'm telling you, it was he didn't communicate anything. I'm telling you, he did not. The forward guidance was very, very lacking at that press conference. And I think that's typical Powell of playing, he knows how to play the game, but nah, man, he didn't say anything. He didn't say anything. Oh, William Way, baby. Oh, let's go. God bless you. Oh, no, that's what I'm talking about. All of the donos. Thank you. Thank you. You're hurting me and Google. We love it. Amen. Amen. We love it. It's beautiful. It's beautiful. Even biotech, even the Twitch showing love. God bless y'all. Amen. Powell saving face. Dono train. No. Let's get through the end of the day first. That's it. I was just somebody made a joke because YouTube is forcing ads down our throat. So I saw the opportunity and I got hooked up with it. So thank you. Thank you. Like I said, here to put in some work for y'all today, but this is definitely, I think everybody got a little bit of W's and L's on both sides, depending on what you were expecting. But I think the follow-up is going to be quite dramatic, and I think there's a lot of pump fakes out there on the field right now. This Bud, do they report after hours? And Bill chilling. Dividend stocks dropped. Where's the composition right now? Actually, wow, we went from everything green except 2 to now everything's red. So even though the move is pretty small for Powell, every industry is in the red now. Utilities and communications barely down. Bud is in the AM. They gave some update yesterday, and it was bad. So I think Bud, monthly sales dropped 25%. We'll stick around a little bit for Qualcomm. So let's see. Bonds came down a little bit, but the stocks did bounce, but not as much. So let's see what bonds and stocks do here right now. Love for the call, baby. Happy Power Day. Billy, Kathleen, God bless y'all. Amen. Hey, man, Qualcomm, if it's at 4, I'll stick around, but I'm not going to stay too long. You're welcome. God bless you. Thank you. Kathleen been here since day one. She a triple, quadruple OG, bro. They don't even know Kathleen. God bless you. Yeah, the 26%. But then, yeah, literally, the other beer companies went up forever. Amen. God will it. Amen. Once again, Titanic. Not really. I'm telling you, this is not... I mean, I don't know how I feel about it. Like I'm saying, you're not getting the clarity. We had progress today, but I hope you realize the war of the narratives might begin. That's it. Powell, you have bulls reaching for this. You have evidence of that. And then the bears also have evidence too in a month of time and 3 big data sets. So the war of the narratives is about to begin. So just be careful on this. And again, the reaction we get tomorrow, that could give us a little bit more. We're going to have to find out. I mean, pretty much what I would look for is wait for the bonds and stocks to react with each other. Because right now they shouldn't be doing the opposite given the scenario. So that's what I'm going to be waiting for. But until then, I mean, I think we're going to have a very interesting setup. Because that was not, again, this was the least priced Fed meeting kind of playing out like that. We thought we could have got big changes. It didn't really happen. You got some progress, but still a lot of uncertainty. Everything goes into June now with the SEP, and then we got to deal with all this other F shit in the meantime. Yeah, we do have time on Bill. That definitely, you got another month of Bill, and we'll see how that, and even watch, but then again, we'll watch how the debt ceiling stuff factors into it. I sold out of the MES. I took like $80 off of it, which is a pretty big amount for one MES. So we're coming back down there again. Bonds and stocks still opposite. No love in that land. 40.93 now. And 40.88. But this is it, though, because if we sell off, though, and if people really buy up the bonds, we want to watch if the bond vigilantes try to bully Powell. Yeah, Tesla turning red. A lot of things are already in the red, too, right now. Again, we went from all green to all red on every single industry now, and you're down 0.5% on the NASDAQ, 0.6 on the S&P now, which is now bringing this to a 0.9% move, and then 0.8 on the Dow. Bonds could go in. Well, right now, they are inverse. Bonds are up 0.5%. Stocks are down 0.5%. So that's the weird spot that we're in right now, or at least different than what I was expecting. So we'll see. But everything, all your techs are starting to flush. Again, banks are kind of leading the way down if you haven't noticed. Regionals and big banks here right now. Gunlock, he says the Fed might cut as much as 75 by year end. So Gunlock is trying to wake up the bond vigilantes there. And it's 3:41 right now. We got 20 minutes remaining. And then new low and then another little bond tweak out. So we're starting to move a little bit bigger, but you're getting the air brakes. You're 2 points off of the low, 3 points off of the low of yesterday. But that's good, man. I'm telling you. Our timeline now, wait till June. We'll be 1 month away from 12 months of yield curve inversion. Depending on what happens, either pause there or the next one. The timeline is looking perfect right now, though. That's it. I don't think anything happened today. I just think you're playing uncertainty, Powell buying more time. That's about it. We got to wait a little bit more, but I mean everything it's coming back down to the timeline that we originally set forth. CFG. MSTR. I didn't even look at Bitcoin. Bitcoin could be interesting there. So SPY's still working down. You said CFG. There's ICVX on the high. That's a runner. Citizens Financial, they're dying. They just flushed into a red right there into the low. They're going to try to bully the bond market to force the Fed hand an emergency cut. It seems like they might, but it doesn't. Just be careful. Again, we just had a learning lesson 48 hours ago. These pump fakes in bond market are going to get vicious. So just don't I'm reading it at face value. They kept this statement, made a little change, a little bit for the bears, a little bit for the bulls, but I'm just falling back on the uncertainty. Nothing happened today. I think if you really believe this was a guarantee of the pause, you're reaching. So that's all I'm going off of. But we'll find out on the next episode of The Stock Market Hates You. Yeah, the yen is holding, and that could mean bullish a little bit for the bonds, but we'll find out. I just think your pause is, and you got to wait another 5 weeks for your pause. That's why I'm saying. So it's like if you're going to play off the pause now, I think you're 30 to 45 days too early. And that's why, and I think Powell just bought him at his ass another month, and now the real action could happen halfway through. Powell just bought himself a year. He bought himself half a year doing nothing, saying nothing, and with everything staying the same. And 3 bank failures. So let's see here if we bounce or not, because we'll see what happens with the correlation, because bonds are still going up now. They got me on the first move, but I'm glad we only have one. But then just wait to see if they both move up in tandem. But as of now, it's an inverse. Bonds down 0.5, stocks down 0.5. That's it. NASDAQ recovered half right there. So that little bounce just brought the NASDAQ up a quarter. You don't see it, but NASDAQ was just down 0.5. Now it's only down 0.3. Again, CFG, a couple regionals at the low. He's doing his job and very well indeed. Regionals are flushing, though. Low ticker is taking over. Bonds are getting a high, but stocks are not really dumping just yet, even though they're at the lows. But your low ticker velocity is going insane. Bonds catching a bid. Again, indexes are not dumping on that. Yeah, Powell trying to hold the market till his term ends. If not, good job, I feel. What time is it? 45, 15 minutes, 5 minutes till 10-minute rigged. So watch right here. Again, you just had that was your final dump there. It could have been, because again, bonds are going up. SPY did not want to dump on it, but let's see what happens. If we go up with bonds, that'll change the trajectory probably into close. If not, it might do the opposite. Nope. Yeah, there you go. That low pressure. I thought it was going to be the wick, but he's coming back. But just notice, you're getting a lot of individual moves right now. Indexes are just hugging 4,100 right here. They're right below it. We gap up. It depends on the earnings, but I don't know. I just genuinely think people were reaching for this pause, and it just didn't happen. Again, I think you got a little bit of progress. You got a baby step, but maybe a big step, but I just don't think it's there. So, but then again, if people want to feel good about it, and again, if people start calling for it, you will definitely get some activity. Bonds are at the high now. Are? It shouldn't stop your bullishness. It should make you cautious. That's it. It doesn't stop. That's what I'm saying. You could give a olive branch to the bulls. This doesn't mean you should be bearish, but it just means you should be cautious with whatever you do, because whatever is just not guaranteed. ZN's tour. You're telling me if I kept the original move, I would have been good. Buy until we sell out, but I wasn't liking what I was hearing. And stocks still coming down here now. KRE is dumping. Citizens on the low. Apple now is giving up like 1.5%. 49. You have not hit yesterday's low, though, believe it or not. So let's just see. You're air braking and fighting. And then 2 more minutes till 10-minute rigged. Again, SPY is fighting. He's a champ, bro. He's fighting very hard at this level here. 10-minute rig could be fun. You'll either get a fat pop or just a big run up or a big run down and flush to 40.88. Again, that's 6 points already off of that low. So you're making big moves in between these wicks, whether you realize it or not. The MES was good. I closed out of it. You should have like $100 profit. I closed out at like $80. SPY getting paid. Bonds to a high. So, okay, you're getting a reverse reaction now. So, if you don't like it with equities, people are buying up the bond. The bond narrative is holding for the pause, but they don't like it for stocks, which, again, I think is pretty counterintuitive. But we're going to find out here. That's it. You're about to hit another low. Watch for the flush in 2 minutes, a minute till 10-minute rigged. 40.91, 10-minute rigged into the lows of yesterday. They're not expecting more hikes. That's what I'm saying. People buy the bonds if you think the pivot's going to happen, but then you would probably buy stocks too. That's why I think the irony is occurring right here. So, again, if you believe the Fed really is going to pivot, you think Powell's bullshitting with the ambiguity, you buy the shit out of the bonds because what Powell's that's a guaranteed pause by next June if you believe it. Otherwise, if not, then you wouldn't be buying that, and then you'd probably sit back, maybe short it, or you're going to make a play on equities. Okay, 10-minute rigs, 5, 4, 3, 2, 1. Low ticker catching a bid. A lot of support. This is 4,100 for the futures, hence I think some of the resistance there. They cleared the orders to the upside, but the bids on the bottom are holding. Yeah, regionals are dying right now. And then even Apple, too, again, ahead of earnings. That's quite a wicked move. So like I'm saying, they cleared the orders to the top, but this support level at 4,100, that is remaining intact. That did not move on the 10-minute rigged. We bounced a little bit above or below here yesterday. But, yeah, this is the low of yesterday. $600 million is sell. Buy side imbalance. We're going up. Bonds hitting a high now. So remember, like I said in the morning or earlier, right after, I said either the stocks are going to catch up with bonds, but now the bonds are up and stocks are low. So flip-flop it because, again, this still exists now. So coming into tomorrow, if the bonds hold, you could still gap up based on if the bonds close here, and vice versa. If we go lower, we should expect the bonds to come down here if people are really panicking on it. Because, again, I don't think this is buy bonds because you're scared of the market. You're buying bonds because you think Powell is stopping. Again, that's some of the paradox that you're dealing with right here. So very interesting setup for tomorrow now, and we got to finalize it. But, again, I think respect to both sides, though. That's it. This back and forth with bonds, it's not making it clear bull or bear. I'm going to hold the ZN for overnight. Again, my position was like 5 times bigger coming into today. So I only went with one of them. I day traded the first one, lost on it. Then I added another one, but I got a lot of room to play into it. So pretty much I'm going to stick to my theory I just think everyone's getting a little enthusiastic, overly enthusiastic on this rate pause idea. So I'm going to start with one short on ZN and then we'll add into it. Because that's what I did on the first one. I was down like $800 averaged, turned that into a big profit, and then the other one I just held. So, but I'm going to hold the ZN for overnight. No other future plays. I have my old NQ, but nothing as of what we've transacted today. The market doesn't look enthusiastic. It kind of was. Now it's not, but the bond market is still that. There's some enthusiasm there. The VIX one day, I haven't checked. New high on the bond. So I'm down 460 on the other one. Lost 200 on the other. I mean, we realized just under 1,000 on the first set, though. But I'm going to wait till I'm down like $1,000 to average on the bond. I'm going to let it play, though. And we're going to give them some time here. Tesla, NVIDIA, everything very low. KRE. Tesla's actually doing pretty good. They're still in the green, believe it or not. Yeah, bonds back up to here. Got a little bit more. Give him a little. Give him a little. Again, bonds topped out. SPY kind of bottoming out. Final 5 in 1 minute. Oh, man. We're actually wrapping it up. Melly, that's after hours. Earnings is today. Yeah, I believe so. All right, still hugging the lows this time. Again, the bonds were leading, so watch. Maybe bonds just took that as an early bid. If they flush here, that'll just get interesting. But let's find out. You're still into the lows. Again, that 400 level, you're having people defend it like nothing. A lot of defense here every single time. So 4107, final 5 in 15 seconds. Get ready. You could get a crazy pop here, pop or drop. First move is looking a little higher by 2. Dude, these are 2 points, 3 points at a time. Voted 92. So final 5. There it is. Final 5. Low ticker. Bonds are still catching the bid, though. Hold on. But final 5, 47.07 or 41.08 on the futures. 40.91, 2 points from yesterday's low. You're slowly going over there. This is the low of the day as of now. So new low of the day. There it is. Boom. You are now below yesterday's low. Now 40.88. If that goes lower, 40.66 is in play now. But 40.74, 40.76, that'll be a soft baby level for now. No, wick. You had a wick on the bonds, wick on the SPY. Again, you hit a new low and then bounced immediately. That's a 5-point pop. So literally 40.88 to 40.93, just in a blink of an eye, you're up by 5 points. Let's see. We pop in. Nah, they're just, I don't know, man. Here's the deal with today. Today is a conviction test. That's what I mean. The war of the narratives is about to begin, Chad. So I hope you know what your conviction is, and hopefully the data in the next couple of days gives you that. But that's it, man. There's nothing about this could give you any conviction on either side. Looking at the market now, looking at bonds, looking at stocks, everything else, man, you better have some conviction in what you're believing here. So, Chad, all my softies, you better mute your speakers. It's about to get crazy in here. Let's go. All right, ladies and gentlemen. We're making our final approach. As we make our final approach, you guys are holding on to any bags. Please throw them in the overhead bins above or firmly beneath your seats. We'll be coming through the aisles with the trash bag if you'd like to dispose of those bags. But as we make this final approach, we're going to be landing here into the second link terminal. Second link terminal in description. That's going to be our nightly watch list and main channel layover around 4 p.m. Pacific time. Then we're going to be taking off promptly around 6 a.m. out of sunny San Diego, California. As we make this final approach into San Diego International Airport, it's about 61 degrees and sunny, looking like a beautiful day unless you thought Powell would say something certain, because he was ambiguous as hell. But thankfully, we are no longer under COVID guidelines anymore, so no masks are required, but we do ask that you exit one row at a time and drop a GG on your way out. As always, we appreciate you guys' business. If you're interested in your Cold Rapid Awards program card, please flag down your flight attendant, and we'll get you that as soon as possible. As always, thank you for flying with the Colt, and hopefully have a wonderful evening. Let's go, baby. Oh, bring it home. Finalize your plays. You got a lot coming in it tomorrow. Apple earnings, couple of chip makers. SPY is back to the low, 40.88. And get ready. We only have a minute and 30 left. Oh, wow. Not that much time. And you got coal real estate, baby. Oh, that's what happens on Wednesday. So let's go, Powell chasers. Powell. And then coal, I mean, again, if you believe in the pause for the real estate, I mean, that's good for real estate if there really is going to be a pause. But that's how you want to interpret Powell. You know what I'm saying? But bring it home, Chatadonia. Mute your speakers. 1 minute. Go, 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 go. Ladies and gentlemen, boys and girls, you have heard from the FOMC, the Fed chair, Jerome Powell. You got a little for the bulls, a little for the bears. The bonds are catching a bid. Equities are selling off, and you have to close out the week tomorrow with Apple earnings, Qualcomm after the bell, and a bunch of other ones. You have less than 30 seconds remaining, Chad. Finalize your plays and bring them home. What are you gonna do? You have 15 seconds. My goodness. Bring it home, Chad. That's it. That's it. Wrap it up. What are you playing? Earnings in the morning tomorrow. The market is tweaking out right here, man. What's happened? 40.90. Oh, my goodness. Oh, my goodness. 4, 3, 2, 1. Ding, 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 ding. Oh, Qualcomm guides down. Qualcomm, immediate guide down on revenue. Oh, man, there it is. Oh, all right, let's go, baby. God bless the cult. Oh, there it is. Immediate guide down by 200,000 by Qualcomm, or 200 million. Oh, my goodness. Chatadonia, let's go. I need my GGs, though. Let's go. It don't matter if you made money or lost money. I know you learned something. Everybody who contributed, all the members, all the non-members, all the streaming alerts, all the laggers, all the lurkers, all the lovers. Fed Day, Powell Day, good game. Oh. Tomorrow's going to be crazy. Tomorrow's going to be wild. Good game. Qualcomm, earnings out, guide down. Oh, my gosh. GG, let's go. God bless you. I hope you had a good one. My goodness. Wow. Apple's dropping as sympathy. Wow. Good game, baby. Let's go. I see you too, Twitch. All the members, all the non-members, the donos, the bits, everybody holding it down. God bless you. Amen. Good game, baby. I need me to rap. You won't see me a lot. Monday through Friday, you need me, let's talk. Wow. Wow, what a day. What a day. Chatadonia, that's it. So we got a couple of earnings. Good game. God bless you all. Qualcomm, adjusted EPS 215. Estimate was 215. Revenue 9.2 billion. Estimate was 9.0. So they beat on this quarter, but then they guided down. Third quarter revenue 8.1 to 8.9. The estimate was 9.2. So almost $1 billion lower, which is 10%. Adjusted EPS guidance 170 to 190. Estimate was 120. I'm mad. I told you Qualcomm was dog shit. I just didn't want to wait for fucking 9 months of them bidding it up to 140. I fucking hate you, stock market. I know you hate me too. That's bullshit, bro. I've been telling you Qualcomm is the worst one in forever. And no, they just gotta make you have to wait 9 months. I'd rather have a child than fucking pay margin and wait for this shit. Stupid. Stupid. But hey, there it is. There it is. That's fine with me. That's fine. At least some reality came back. That's it. Next time I'm having a baby. You know that? That's it. I'm getting my girlfriend pregnant. Next time I know a company sucks and I want to short it, I don't want to wait. I'm just going to have a child instead and just go through that stress and pain rather than shorting it and dealing with this for it to just be back at the same price 9 months later after we knew exactly what was going on after their last 2 earnings. That's it. Now I'm going to have a kid. I'm going to have a kid next time. Fuck that. But yeah, that's Qualcomm right there. Confluent, they guided up, I think, or revenue beat. And then Sunrun, they see full year capacity growth 10 to 15%. You got Form Factor. I think Qualcomm's it. That's not gonna bode too well for Apple. But we gonna see what happens. Josh got baby fever. No, man. I'm sick of the. That's it. If you gonna put me through the same stress, I'd rather have a child. That's damn scammers, bro. All day, bro. All day. Watch. Apple gonna crash, maybe, but we'll see. Qualcomm, that was not a good report so far. Again, Qualcomm's the first one. Revolve, net sales 279, estimate 290. Gross margin came in line. EPS beat by 4 cents. Etsy already. Oh, I forgot about Etsy. I don't know. I think Qualcomm's big, though. Again, that ties into Apple. And they just did bad. Again, they missed, or they beat on this quarter, but they just guided down on EPS and revenue. I mean, all in all, that's just not a good sign. Etsy has not came out yet, no. Waiting on Etsy, Revolve beat. Again, then you had Qualcomm, and then I don't know where Melly is. They're moving on the high ticker right now. Melly EPS beat by $1.20. Merchandise beat by $1 billion almost. 9.4, half a billion. Estimate 8.9. Revenue $3 billion, and then estimate 289. Melly did very good, actually. I don't see guidance, but Melly looks to be top and bottom line beat for now. Yeah, very nice of Melly, but who knows? Again, guidance is the key. Myriad, Solar Edge, Sunrun, they're all coming out right now too. T-Tech, Equinix, they guided lower by a little bit. Again, there's a bunch of earnings coming out right now. Sadly, I only care about Qualcomm. There's Etsy. Wait. Etsy, 53 cents. Estimate 49. And they guided down lower too. So they guided lower by 30,590,000, but then high end of 640. Estimate was 620. So Etsy guided lower, but then raised the higher end of their guidance. They beat on this quarter for EPS, and then revenue beat by 20 million this quarter. So they had weird guidance, lower end, higher end, and then EPS top and bottom line beat for Etsy. And they see gross merchandise sales 2.8 to 3.1 billion. Etsy, I have Fastly up here. Yeah, so Etsy's popping now. Again, bad guidance on low end, higher guidance on the top end, and then they beat top and bottom. They see adjusted EBITDA 26%. Estimate was 26.6. Who else? Again, Solar, Sunrun, Infinera, they're coming out now. Sunrun again, and then Solar Edge and Envix, and then Melly, they beat. Etsy's really going up right now. Yeah, Sunrun lost way more than expected. Their sales beat, but then EPS missed by triple. Upwork, 0.01 miss, or loss. Estimate was 0.07. Sales beat. Good post on those, Forever Young. Etsy's rocketing 7%. Are you fucking kidding me? Qualcomm's down because they suck. That's it. Qualcomm, they missed, or they barely beat on this quarter, and then they guided down by $1 billion, and then they even lowered EPS. So that means they're going to make less money and spend more money or not produce profitability, which we were already aware of for 9 months, but everybody wanted to buy it up at 2021 highs. But that's okay. That's okay. You know, that's part of the game. I got punched in the face. I kind of like the pain sometimes. You know, I'm a little masochist, I guess. You know what I'm saying? We'll see. We'll see. Scammers. That's it. Fucking crackheads every day. That's it. It's me against crackheads. That's fine with me. That's fine with me. I'm going to just drink some water. You know what I'm saying? Buy time, sons of averaging. Sunrun. Faro announces retirement of president and CEO. QDEL. Adjusted EPS 180. Consensus was 140. Getting beat up and tired of the punches. I feel you. We need to go neutral like we've been saying. We just keep getting sucked back in to make those plays. But it's just, dude, every play we're going to be right on it. But it's just the timing. That's it. We could be wrong for a day, wrong for a month, 5 months, 6. But it's just like they're going to punch the shit out of you is on everything. That's it. And everybody's batshit clueless right now. And the volatility is unreal. Like, that's it. You just have to really get hit in the face. And then everything is expensive right now. That's it. Nah, the timing, you're not going to get any timing right. That's what I'm coming. The ideas, if you know what, you're not going to know when. But if you know what, it'll be there. But then it's going to cost you an arm and a leg to play the what. Freak those, Habibi. Yeah, honestly. That's it. You should literally only be shooting free throws. But then again, what's looking like a free throw, we're getting a pump fake. So again, like that's what I was saying with the bonds, bro. The bonds on Friday was a free throw. That's why I went so big on them. That it didn't look like a free throw until Tuesday, and that's weird. So just get ready. And then now all the margin and interest on everything is just, it's going to cost you a lot. Or if it moves 30-40% between making a trade, you're going to have to pay for it. Abivai? Oh, wait, no. And then Udemy lost 6 cents a share. Estimate was 14. Synaptic authorizes 500 million buyback. Not on long-term bond play just yet. SPY is up after hours. So take a look at there. You've actually had a 2-point pop on the SPY. Believe it or not. ES probably back to 41.50. Maybe. And we'll see what happens there with young bonds. Vista Outdoors sees full year EPS 450 to 5. U.S. competition watchdog launches review of AI market. And then Qualcomm did bad. Still down. Back to the fucking lows. All right, I think that's it. Oh, wait, Zillow. Zillow to grow share of customer transaction to 6% by 2025. I forgot. Zillow revenue 451 to 479. That's their second quarter guidance. Estimate was 450. They beat 469 million. Estimate 425. And EPS 35 cents. Estimate was 4.3. Etsy's coming down. Zillow's up a lot. So watch Redfin too. Yeah, Redfin's getting some off of that now. Qualcomm with the pop? Is that real? Teladoc, there was some government news today. Right now, Zillow beat and then guided up. And then they killed it on EPS. But Zillow's actually looking pretty hot here with their guidance. They're only up 3. Qualcomm's kind of tweaking out for now. Yeah, Zillow up 5. Redfin jumped up like 7 off of that. Or 5%. My goodness. Oh. Damn, we got a lot. Realty income, 944 million. Estimate was 911. First quarter AFFO shares or EPS, the FFO, AFFO, 98 cents. Estimate was 90 cents. They see full year adjusted AFFO, 394 to 403. They previously saw 393 to 403. So they raised the lower end of their guidance by 1 penny. So bullish for that. I mean, nothing shocking. We'll see if they give any guidance on the situation, but they raised their low end of guidance. They beat, and then that's it. Again, it's a REIT, so shouldn't have anything too crazy. Solar Edge, they're out. Yeah, Redfin got a Zillow boost. Zillow's up 5 and Redfin is up 5 unless Redfin gave it back. No, Redfin's up 4.6. So they're both off of that. And then again, Realty income was good. Qualcomm still low. Expedia came out? Are you sure? Oh no, EXPI. EXP World Holdings. That was this morning or yesterday? Upwork reduced workforce by 137 roles, or 15% of staff. That's kind of crazy. A place called Upwork reduced their workforce. I don't know. Sounds like false advertising to me. Mr. Upwork. More like down work. Off Etsy. Leslie's Pool. Zelensky is headed to Netherlands right now to speak in Hague on Thursday. Yeah, layoff. I don't know. Layoff pumps don't hit the same anymore. There was a nice month where if you laid off, it was like a 10% pop. So there's Zillow. Zillow's killing it. I hope Redfin does that good. Because that's a phenomenal. Zillow just guided up, and they're looking. If Redfin doesn't do that good, Redfin's fucked. But then again, I don't know. We've seen a lot. We've seen a lot so far. What is that? Summit Material? Bro, there's so many companies right now. Albemarle. Oh, wow. Albemarle killed it. $3 beat per share on EPS. Hold on. Remember, they got clapped by all the, what's it called, headlines. Albemarle got destroyed off of the Chile lithium China shit. Net sales, $2.5 billion. Estimate was $2.7. So they missed on that. And then they see full year. Oh, they guided very low, though. Hold on. Don't fall for Albemarle yet. So they killed it on EPS, but then they guided lower, 890 or 980 to 11.5 for full year net sales. They previously saw 11.3 to 12.9. And then they see full year EPS 20 to 25. They previously saw 26 to 33. And then CapEx 17 to 19. Estimate was 17. No, that's pretty bad. Yeah, that was weird. Damn, Uber popped again. After hours. EPS came in at $10 a share. Estimate was $7.19, but everything else missed, and then they guided lower. And then they had all the drama. They were down like 30% in a couple of days because of the lithium mines being shut down in Chile, and then also drama in China as well too, I believe. Whew, there it is. There's your 4% candle. EPS is earnings per share. All right, any more, bro? Dude, we're getting a fat earnings dump, man. They're coming out left and right now. Allstate insurance revenue beat by almost $1 billion. Adjusted loss was $1.30 instead of $1.35. Combined ratio of 104. Estimate was 106. Net premiums written 11.7. Estimate 11.6. Net investment income 571. Estimate 611. Catastrophe loss 1.6 billion. Estimate 1.4. So Allstate looks like they missed, but not anything too crazy. I don't know how they're gonna trade though. There's UK Earthstone. What the hell is Earthstone? Then Mercado Libre, they did good. New Skin, that's an MLM. 37 cents beats 33. Albemarle now, that's down 5. Redfin came down off of Zillow. Zillow calmed down. Again, Melly was the good one. Etsy was up. I don't know if it came back down. Etsy's kind of holding, and then Melly, they're holding to 6% on both of those. Genco Shipping, they just killed it. EPS missed. I don't even know what the hell a Genco Shipping is, to be honest. Team, yeah. I still got washed on those flip shares. Chinko, WM, another one. Residio. I don't even know. Again, I think that's all of it for the big ones. I think that's it for the big ones. So we'll see. But Chatadonia, I think that's it. I'll give it a couple more minutes. I'll play you some Uncle, and then I'll go pee, and if it's still over, it's over from there. And then that's it. No, I think it is done. Nah, I'm hungry. I need to go get me a snack. It's been a long day. It's going to be even longer tomorrow. The war of the narratives is about to begin, Chatadonia. I hope you're ready. This is like in Fast and the Furious. The Fast and the Furious. Oh, Marriott, they beat. Damn, Marriott killed it. But like race wars in Fast and the Furious, not the ones that happened before the 2020 election. But that's what we're getting into. But now it's the narrative wars. So get ready. Just get ready, man. Get ready. Get ready, baby. Get ready. Game time. But Chatadonia, that's it. I'm calling it a day. I'm calling it a day. I think that's it. I think we're done for the day. Chatadonia, get ready. I'd watch Qualcomm earnings because that could factor into Apple. Let's watch what happens with China. We are going to get a lot, but ladies and gentlemen, thank you again for being here. Okay? For real, man. If you came out today, you showed us some love. Look at that. 3.4 thousand likes, baby. Oh, no. God bless you. Oh, my goodness. Oh, my goodness. Chatadonia. Chatadonia. Oh, my goodness. There it is. Thank you. For real, man. I said it earlier today, yesterday as well, man. It's a blessing and an honor to be here, to have the memories that we have day in and day out, week after week, month after month, year after year, president after president, Fed chair after Fed chair. You know what I'm saying, man? It's truly an honor and a pleasure. So for real, if you came out today, you supported the channel, you liked it, you shared it, you contributed in the chat to facilitate the community that we have going on here and really being a part of it and being an absolute vibe. God bless you and thank you, because I had a lot of fun and it was truly my honor, my friend. So I hope you enjoyed it. Thank you, and I hope we see you here tomorrow. But that is the day, okay? So we're going to be heading out here. Check out the links. Again, everything on this channel is free, but we got some. First link for the Scream Alerts Bootcamp and Real Estate course, dog. You could get free alerts. You could get paid alerts, whatever you need to be flying these streets. Second link for the nightly watch list and main channel. We've updated everything coming into it. Again, I forgot. I was looking swole on this watch list. I was trying to show y'all my two-tone tan. I forgot about my two-tone. Where is it? See, we brought up this again. Just go back and compare the statements. Where the state? I'll just say it. So that's what we do every night. You could go and check it out. I hope I see you there 4 p.m. Pacific time. All the other links, become a member. Shout out to the members, baby. God bless my members, man. They hold it down. That's the real ones. They out there. We got some honorary non-members, but for real, man, if you have showed love to the channel, God bless you, because you didn't have to, and it means a lot. So thank you, and God bless you for all of your love and support, even beyond a little badge, because $4.99 will not prevent you from becoming a baby back bitch. So, God bless you if you a real one. You know who you is. Amen. Check out the merch. It's free 99. I don't know. Powell says no recession, so maybe buy all the merch you can. That's up to you. Check out the new channels, Cole Real Estate, Cole Cars, Cole PHILO. I am screaming because Cole Real Estate, bro. Cole Real Estate is tonight. They got another 3-4 hour stream. A lot of you don't know this. It's very intensive. A lot of people are asking on real estate. They say, Josh, if you had $20,000, what would you? I'd get into real estate. I'd go talk to Tyler and Trey. I would start getting the long term. I'd do a lot of it, but you got to start somewhere. So it's free 99. But listen, man, I ain't going to shove it down your throat. You know why? Because it's free. So it's free. You want to get involved? Go ahead. But I'm not going to put a gun to your head to change your life and make you money, okay? So check that out, baby. Cole Real Estate, 6 p.m. tonight Pacific time. Follow me on Instagram at The Trading Fraternity. I am the private account, okay? Don't fall for anybody asking you for anything. That's a scam, okay? Don't fall for that. Don't fall for it. How option trading's working? That makes no sense. Just read the fucking title. Okay, I'm out. How we set up our long term. God bless the long term, baby. Wait, did my deposit settle? Why does it take me 3 days for my deposit to settle? Why are they such scammers? Oh, no, it's there. I have my deposit. Oh, shit. I should have bought Bill. Hold on. I need to buy Bill. Can I buy Bill after hours? So, yeah, let me buy some Bill after hours. Hold on. Oh, no, I didn't mean to buy. I think what? I could buy like 20? Nope, I'll still have more money? How? That's crazy. I totally forgot. We need to get more Bill. Damn it. What the hell was that? Why are you buying more Bill? Because my deposit hit. So why wouldn't I buy more Bill? So I bought that after hours for the long term. We're going to do it on the other account too. Okay, more Bill has been purchased. There you go. I forgot. So it finally settled. Am I sell? No. I bought Bill because we got a dividend. So I'm just putting it in there until we find something that we want to buy. Bill doesn't hold. Why do you move? Why do you hold it? That's just a long story, sir. Just it's not as nonsensical as it looks. Just trust me. There's a reason. Zion CEO buys 480,000. Oh. Yeah, mercy. Wait, did that fill? I bought some Zion if we get that. It only filled me on half. I'm kind of down to flip that. But I don't know. I think by Friday or by Monday, I'm legitimately going to just close out everything. Indiscriminately. If this shit keeps fucking with me. I don't like I don't like when Powell does this, if you haven't noticed. And then I'm just going to flip bonds until the end of the year. I might close out everything and not trade anything except bonds every single day. If this is where and then that way I'm just going to hold them at this point, bro. So I grabbed 200 shares of Zion at 23 flat. CEO just bought, what's it called? He just bought 480 grand. You think so? Again, it's just Powell's doing exactly what he did last time. I'm telling you, it's not. It's that level of height. The war of the narratives is going to begin. And it's not, Powell just is trying to buy time. And that's the crazy part about it. And I think the back and forth is just not there. I mean, what we see is happening. But it's just like, dude, you have to pay a lot of money. I'm telling you, nothing is cheap right now. If you thought inflation was killing you, trying to stay alive in this market, if you make one wrong assessment, you're going to be waiting X amount of months at X amount of interest, and it's just not worth it. I'm telling you, I'm going to just bill and bonds and chill. Scion CEO purchased a little bit. Zion VP buys? Damn, so wait, CEO and the vice president? Oh, so they're just all rushing into it. They're like, yo, we need one rally. I'm taking my talents to Baccarat. What the hell is this? Yeah, Zion Bank. So we just had CEO bought $400,000, and now apparently the vice president is also bought $500,000 too. So all the executives are buying the dip right now. Holy shit, they bought in at $27.98. What? So they're down, and then they put it in an IRA. Filed by one. Is this a 10B5? No. This is just a random purchase for their 401ks and IRAs. Bro, he just bought 20 at $27.90. They are definitely tricking you into buy it. That's why I bought it too, but I'm worried about it. But yeah. Should I move about 401k and spy into the money market? That's up to you and other things. What I'm talking about right now, I'm not talking like, oh my God, I'm so scared, I want to sell everything out. All I'm saying is like the volatility and spending 5 months with stocks at the same price. If one wrong day trade, it's just the day trading environment. It does not seem favorable, more or less, is the way I'm putting it. I don't want to. If I'm going to day trade anything, it's going to be a bond because I know I could hold it, and then I know where it's going to end up in a long enough time frame. So at this point, it's just not. I don't want to even play this game with them. That's what I was saying about a couple months ago after the last meeting, and I was getting to neutral, and I did make progress, but then I kept trapping myself on little flips that I was getting sucked into. So I think I just need to do a hard stop on it, and then just get right back into just keep it simple and focus on the bonds and long term, and we'll be good to go. Yeah, the bid on Zion is crazy. There's a fat spread. What info? The Zion stuff, it's filings. You could go check right now. Troy posted the filing link, sec.gov, or you could check the Edgar filings for it. The only problem is he bought in a couple days ago at $27. That's the only problem for young Zion CEO and CFO. They literally bought in $500,000 at $27. That means they're down. They're down probably $100,000 a pop each in a day. Apple's selling off now. I don't know if that's a response to Qualcomm, but hey, I was supposed to leave. Lemonade just came out with earnings. I just got sucked into my bill play because I forgot about the long term. So we made one more bill play right there. So God bless you all. But Chad, that is the day, my friends, okay? I hope you have a wonderful one. I hope you read the books Richest Man of Babylon, Proverbs, New Living Translation, and The Strangest Secret in the World. But ladies and gentlemen, boys and girls, don't forget why we're here, why we keep going, why we in the game, why we ready to take the stamina until the end of the year, and why we always got to keep working. And wait till I give you another feel. I got more for you to think about. But why, baby? Why? Finger to the sky, baby. To God be the glory, and through the grace of God alone. Amen. Amen. Woo! JP cult member, God bless you. I pray for you too, Chad. So I love you all. Have a wonderful evening. I'll see you on the watch list. And peace. Wait, option care to buy a meta system for value. Wait, hold on. Ahmed. Wait, Ahmed. That's my uncle. Ahmed is getting bought out here. I don't know if they're halted, Chad. $3.5 billion buyout right now. That one's coming out. But listen, I got to get going. We got a lot of news here. We're gonna cover it on the list of the why. We're gonna watch it on the list. We're gonna watch the list 4 p.m. Seriously, you better be there. I mean it. You don't want to fuck around. Okay, I love you. It's not hyperbole. All right, Chad. I'll see you tomorrow morning. I'll see you at Hanukkah. All right, I love you.